Well, good morning, everyone. Welcome to the 2023 Tampa two-day investment seminar. It's been a long couple of years since we've been here in person, but we're all glad, excited to be back out on the road. Welcome to the VV Nation Online, who's following us again today, that held strong the last 2 years for us. We're just so excited and happy to have everybody here with us. We've been coming to Tampa. We were talking about this a couple of days ago. We've been coming to Tampa for over 20 years. When Dr. Bart DeLito originally had the genius idea of creating VectorVest, he wanted to spread the word, get it in front of as many customers, many people as possible, because he wanted to challenge the status quo of the investing world, and he has done that. And he's done it time and time again. And it was his mission to create the best possible stock market guidance anywhere at any price, and he continues to do it. The entire team, we're just so proud of them. We continue to innovate things. You will see things and learn things in the next couple of days that we've just recently created. For example, Mr. Stan Heller in the NPI, the near perfect indicator. Many of you people are familiar with this. We're going to have a big unveiling of a trading system that's designed around that trading system, tomorrow. But we're all excited to be here and glad to be participating once again this year, and here live as well, and in person. So next, we're going to get into the speaking assignments, and I'm going to bring up some individuals who are going to come up, and you'll just get to see who the speakers are. It's been great over the last couple of years just to put a face to some of the names that we've seen online. I know there's many people online. We looked at the roster of familiar names to us. But it's been great to put the face to the name. And I know that a lot of you online, a lot of you here, hear the names, hear the voices, but haven't actually met or seen the instructors. So as I go through the agenda here in a moment, I'm going to call up the instructors that you're going to see over the next couple of days, and they'll come stand here just so you can have an understanding and put a picture, a face to the name and the voice that you're going to be seeing over the next couple of days. One of the big things about the two-day that we love is it really has a piece to every type of investor. And what I mean by that is, when Dr. Bart DeLito started creating this system, and at its core, he wasn't getting the information he needed to make the right decisions. He really needed everybody to understand what a stock was really worth, how safe it is, and whether you should buy, sell, or hold it. And from those core concepts, brought life to all kinds of approaches with VectorVest. From entry-level, very basic, the successful investor just consistently making money, onto understanding retirement techniques, how to build and manage your retirement portfolio, onto the swing trading realm. So these core concepts that Dr. DeLito created lives on today, and there's many pieces to this puzzle. And I challenge you this. I want you to focus in on what makes sense to you. Don't try to swallow everything we're going to teach in the next 2 days, at one glance. You can have the recordings. For those of you online, you can have access to the recordings. We'll talk about that later as well. But study the concepts we're talking about. The morning session will be the successful investor core, just understanding the system at its base level and going from there. Then we'll go on to retirement, then swing trading, and then options. But pick that one thing that you want to master. Okay, I'm sure you're interested in many things, but there's a big difference between interested and being committed. Okay, and it's okay to be interested, but what I want you to do is make that decision now. It's January, it's 2023. It's been a long couple of years. This is the year. Make that commitment to yourself to tackle that one piece that you're going to hear about today and master it. Was it Bruce Lee said that he doesn't fear the man who's practiced 10,000 kicks once. He fears the man who's practiced one kick 10,000 times. And that holds a lot of power and truth. Okay, so absorb, what you're watching, what you're hearing. Pick that one thing that speaks to you, that one concept, that one trading system, or that one approach, and let's master it. Sound good? Okay, without further ado, And for those of you online, the slides that we have here, if you go to vectorvest.com/offers, at the very bottom of that page, if you scroll all the way down, you'll see a link to download the slides. So you can follow along with us, or you'll see them on the screen. And then, just for clarity, all of these recordings that we have here will be up on YouTube, on the channel that you're watching right now, for the next week until we pull it down to put it into the university. But we'll talk about that again later on. So welcome to the two-day investing seminar. Right out of the gate, we're going to have the VectorVest system of analyzing and ranking stocks. And we have a very special guest. We have a few very special guests. But we have Dr. David Paul, who's with us all the way from London, England, who's going to be presenting that. David, if you wouldn't mind, I'm sure most everybody knows who you are, but just in case they haven't. And David, I'll have you come stand right over here. But we're very happy to have David with us all the way from England. Then we're going to take a short break and make sure at the break you come let us know about the lunch options. And then the secret to buying low and selling high, we're going to have Mr. Jerry D'Ambrosio. He is a stranger to no man or woman. He's going to be presenting that. So if you've never met Jerry before, this is Jerry D'Ambrosio. Next, we're going to have Making Money the Easy Way. That's going to wrap up the morning portion of this. And another individual who needs no formal introduction or welcome, but Mr. Glenn Tompkins. We got a in the VV Nation. I'm sure VV Nation out there is rooting for Glenn.
I'm blushing.
Then after lunch, we're going to come back with finding the right stocks for retirement, and we're going to have the amazing Mr. Jim Penna, who's going to give us our retirement talks. Everything retirement. If you have any questions, Jim is the guy, and he does an amazing job. He's also going to help us build and manage a retirement portfolio. And then we're going to get into situational investing, where Mr. Glenn Tompkins will cover that talk for us again. And then we'll have a little cocktail reception break out here. And then at 5 o'clock, everybody, tune back in. At 5 o'clock, we're going to have a very special presentation from Dr. David Paul, okay, on swing trading psychology. And then Jerry and I and a couple of us, we're going to unveil something new that is coming here in the next month and a half that nobody's been leaked. This information, I don't think. Not many people. But that will conclude today's agenda. We'll cover tomorrow's agenda in the morning. But I have a couple of quick mentions and a couple more people I want to introduce. Thank you to the product support team who is committed to staying on hand this weekend and helping answer any of your questions. You can give them a call. They're on hand to take advantage of any of the offers or orders, or if you have questions on anything that's happening, feel free to call product support. We also will be moderating the chat as we did last year, once again from right here. So Glenn will be on the chat. We'll have a couple of us rotating in and out of that. But also thank you to our production team, Joey, Craig, and Paul. Yeah, Paul. I'm trying to see, I got this Clay and Paul. I'm trying to look at this bright light staring at me, and I was missing that. And then the last two people I want to introduce, besides Ron Wheeler. Ron, will you come on up? Ron is doing some option talks tomorrow. Many of you know Ron, URS coach. Mr. Ron Wheeler flew in to be here with us. So if you have any options questions, feel free to ask Ron. But all of this wouldn't be possible, the in-person event, even all of the courses we launch back in North Carolina, the digital courses. There's one person who puts a tremendous amount of effort into making that happen, and that is Lisa McKinney. And Lisa's up here at the desk as well. Lisa loves it when we call her up on stage, but she's absolutely amazing, and these types of events do not operate without her. And last, but definitely not least, our CEO, Miss Linda Royer. And she keeps us operating day in, day out, keeping the company afloat. And we're so excited to have her as our mentor, as our leader, as we charge forward as a company. This is the kickoff. This is our big, exciting moment. And we're all just extremely happy and grateful to be here. So before we get kicked off with our very first presentation, I know there's one individual who would like to address the VV Nation online, and that's Mr. Glenn Tompkins. So Glenn, if you want to come up here, and I'll let you take it away and send it off. Thanks for being here.
Check, check. Good Gordon gin, Joey. That's loud. All right. Thank you. So, my name is Glenn Tompkins. I'm senior instructor here at VectorVest, and man, oh man, just going to use one out of the ordinary word. Good, googly, muggly. There's a lot of folks up in the room. Glad that you're all here. I've been blessed to have an opportunity to put a lot of faces behind the names that I see on chat. And some people say, you know, I don't chat very often, but thank you all for being here. It's all about you. We're up here. I appreciate all of the love that you guys have outpoured to me personally, but I'm just a guy. That's all I am. I love doing this stuff. Hopefully my passion for doing this stuff comes through, and that's what it's all about. So 2 things I want to do. For those people who are on VV Nation right now, I want you to get this started off, kicked off right. Type ooh-wee in the room. I can't see the chat. So somebody will let me know, but get this started off right, typing ooh-wee in the room. Why? Because that's what I do. If you don't like it, you can go home. But other than that, it's what I do. I have a lot of fun. Now, what I'm going to do here live, for everybody who's part of VV Nation, we're going to get a video of everybody saying ooh-wee together on the count of 3. If you don't want to say it, don't. If you know the word, say it. If you like the beat, tap your feet. Don't matter. But we're going to get a video of everybody in the room doing that right now. You ready? On 3. 1, 2, 3. Ooh-wee. Awesome. That's how we get this started off today. Ray is right. This is all about commitment. You guys have an opportunity to commit to your investing for a brand new year, and we hope that you do it. Any questions? The beautiful thing about the value add of us being here is you get to talk to us individually. Now, if I'm out there and there's a whole bunch of people talking to me, I'm going to get away from you really, really, really fast. No, really, I'm going to talk. I want to talk to everybody. All right, so you have that opportunity. We're pretty much 5 minutes late. All right, that's how we wouldn't have it any other way unless we were late. So with that, the next talk is going to be started by Dr. David Paul, the VectorVest system of analyzing stocks. Something that's going to be very important, whether you've been with VectorVest for a long time or you're brand new to the software. Sometimes you got to take it back to the basics. A lot of us are not making money because we throw all of us into the system and we take the system out. Can I get an amen on that? Amen. All right, so when we talk about going back to the basics, that's why it starts off with this talk. Folks, don't lose sight of what makes VectorVest VectorVest. No matter what you put into it, don't lose sight of what makes VectorVest VectorVest. And sometimes we got to go back to the basics to make sure we hone our skills. So with that, I'm going to bring up Dr. David Paul. We're going to be here for the next couple of days. Talk to us, folks, whether good, bad, or indifferent. If it's bad, talk to Jerry. If it's good, talk to me. If it's indifferent, talk to Ray. So nonetheless, let's get this party started. Thank you guys for being here.
Good morning, everyone. All right, Joey? Good man. Well, my father told me when I was a nipper that during the Second World War, the only place that you could see naked girls in London was in the Windmill Theatre in Great Windmill Street. But the girls couldn't move. They had to stay absolutely still. And all the soldiers, of which he was one, Irish Guards, used to come in and stare at these girls. After 10 minutes, the girls would walk off, and a comedian would come on and try and tell some jokes. Within 2 minutes of the comedian coming on, the lads would throw beer bottles, fish and chip containers, and at the platform. And that's how I feel after Glenn Tompkins just did that introduction. So very difficult to follow. I'm the comedian after the naked girls, I fear. Folks, I'm David Paul. I'm here by pure accident. I've got a degree in mechanical engineering. I've got a MSc in metallurgy. I've got a PhD in applied mathematics. And way back, I suppose in the early 1980s, the only thing that I was really interested in was playing rugby. And I thought I could have got to international level. I was just a bit too small, but I was always fitter than anybody else and stronger than anybody else. So I went from London, where I grew up, to South Africa to play professional rugby. When I left London, we were playing to 350 people in the afternoon. When I got to South Africa, our first Saturday afternoon at Loftus Versfeld in Pretoria, we were playing to 65,000. It was quite an intoxicating environment. I went for 6 months and I stayed 35 years. And before anybody can get it out, normally at this stage somebody says, did they play extra time? So I was billeted into an office at De Beers, the diamond people. And I was sitting with this old fella who was probably my age now, and every day he did something really strange. He walked to the corner of the room where he had an old drawing board. Is anybody old enough to remember the old drawing boards? Okay, and he, out of a copy of the Rand Daily Mail, which is owned by the Financial Times these days, he would actually every day meticulously draw on the high of every stock that he was following, the low, and the closing price and the volume traded by hand. And every day he would update 50 charts of the 50 stocks that he was following. He started off life as a draftsman, so his charts are absolutely pristine. He was making decisions by a concept solely called technical analysis, based on head and shoulders and bull flags and all the sort of stuff that I'm sure you've tripped over. And he was pretty successful. I got there in April 1981, and by October 1981, that's not true, October 1982, I built up a kitty, and I put on my first trade in October 1982, and I've been trading ever since. And last October, that's 40 years ago. So I leave it to you all to work out in a moment whether I've got 40 years experience or 1 year's experience 40 times over. So I think that Glenn makes a very useful point in the prelim, in that it's just so easy to forget the VectorVest basics because we've heard them so many times. Nevertheless, just because you've heard them a dozen times doesn't mean that they're not important. And again, as Glenn says, doing what the damn thing tells you to do is much more difficult than it would seem. And following a set of investment rules is a lot easier to talk about than it is to do. Am I correct? Yes. Okay. Give it another day. Who's ever said that? Give it another tick. Yeah. We're going to be talking about that in length later on today, folks. So what do I do? Well, first of all, I day trade for a living to pay the bills, the S&P 500. And I'm a bit confused because it took me a while to work out this morning that the market's already open. Normally it doesn't open until 2:30 where I live. So I day trade that. Very simply, for the first couple of hours, I try and put those trades up on YouTube that Melissa, where she sends out. There she is at the back. I swing trade over a few weeks and a few months. I'll be talking about that this afternoon, and I'll be talking about that tomorrow morning in a great deal of detail. And then I have a long-term retirement portfolio that certainly Jim Penna is much more qualified to talk about than I. Okay, so I want now to make a start, you'll be glad to hear, in the VectorVest system of buying stocks. And right at the outset, I have to tell you that before VectorVest, and I've been with VectorVest now for 12 years. Before VectorVest, I was trading pretty much just technically, in essentially the same way as that old fella so many years ago taught me. And he had a battered copy of Edwards and McGee, Technical Analysis of Stock Trends, that I'm quite sure many of you have got. And I was making those decisions purely technically. I tried to keep the fundamentals under control, but I failed. The annual reports would come in, the interim reports would come in, and they piled up at the corner of the office. And I was actually too dof, which is South Africa for thick, or I didn't have the inclination, I suspect the latter, to actually keep everything up to date. And then when I discovered VectorVest that would do this for me automatically, I was in heaven. So for the last 12 years, folks, I've been making decisions based on a mixture of strong fundamentals and strong technicals. What has this done? Well, first of all, it's pushed my hit rate up significantly. If you make decisions purely technically, you're going to struggle to get a hit rate above 50%. I'm afraid. Some of the best trend followers in the world, the so-called turtles, you remember the turtles? Have you read that story? Their hit rate was less than 40%, sir. Very difficult to follow. So what I've been trying to do over the last 12 years is to follow the VectorVest prescription to, in fact, take investments, take trades in shares with strong growth fundamentals, shares that are undervalued, and shares that have got a fairly safe track record of making money, that are rising in price. And I want to buy the damn things when the general market is rising in price. Any of you that come to my UK webcast once a week on a Monday, 8:30 American time, will know that I keep saying to the UK people that 70% of the exercise is the general market. Few of them believe me until 2022. Now they all believe me. You've got to be one hell of a stock picker if the general market is falling. And we're going to address that all today. But in a nutshell, folks, here's what we want to try and do. Here's what I want to try and do. Ray says there's going to be so much in this bloody seminar that you're going to be confused. You need to sit down and find a fit for yourself. One, the share, I want to favor undervalued shares. I want to define that in a second. I want to find a stock that's growing earnings strongly. I'll define that in a second. Safely, at least safely enough so that you can sleep. Okay, some people sleep easier than others. As I get older, I'm becoming more conservative. There's no doubt about that. Less time to make it up. A lot of money wasted along the way. Divorces, property, fast horses, slow horses. That are rising in price. And I'm going to try and define that for you now. So if I can, I'm not much of a tech guy, but VectorVest believes, and I think many of you will have seen this slide before, VectorVest believes that everybody should know what's the stock really worth, how safe is it, and some idea about the trend. Should we be buying the thing? Is it rising? Are we sweating it out as it goes sideways, and you do an awful lot of sweating out in this game? Or is the darn thing falling? Now, the first two are fundamental measures of the stock. And the third is a technical measure of the direction and the speed of the share price. My definition of fundamental analysis, folks, so we can get it clear, is that it's the search for the true value of a stock. And my definition of technical analysis is that it's the direction and the speed of the price trend. Price trends and turning points. And at VectorVest, I don't care what type of methodology you're using, we want to, in fact, get the best of both worlds. The best of fundamental analysis married with the best of technical analysis. To simply push the probabilities of success up. And very importantly, push the risk to reward ratio up, or what is known in this neck of the woods as an asymmetrical risk to reward. That's what's happened to my own trading. I pushed my hit rate up from 55% to 65 to 70%, and I pushed my risk to reward up significantly. And when you marry those two things together, that produces what traders refer to as a very positive expectancy system. Again, I'll address that later today. The word positive expectancy put down on paper by a fellow, the late Van K. Thorpe. If you've read his work, he died last year, first-class fellow. I did his course about 20 years ago on day trading, and we had to record our results. And I recorded my results and I sent them through on Lotus 1, 2, 3. Who can remember that? And he said to me, David, going to the gym is not a reason to exit a position. I remember him saying that because every morning at about 11 o'clock I would just cut the position in the DAX that I was trading to go to the gymnasium. He said that wasn't a good reason to get out. So we want to try and put fundamentals together. Now, the first method, folks, that Dr. Bartolito put together is a valuation algorithm to work out exactly how much your stock is worth. And it puts together earnings growth rate, profitability, inflation, and interest rates to come up with a rugged valuation of a stock. And as a default, we want to favor undervalued stocks. My dear grandfather told me the only way to make money in anything is to find the value of something and then pay less for it. He was talking about land. I don't know what American farmers are like, but certainly UK farmers, the only thing they want to do is to buy more land. And he would sit and he would wait until some calamity overtook the economy and he would buy the damn thing cheap. Where's Linda? Linda, if I was 20 years younger, I'd be starting my own asset management company now. Because I think in the next few months, if you buy into stocks, I think there's probably more downside, but within the next 6 months, if you buy into stocks as an asset manager, you're really going to struggle to stuff it up. Really going to stuff it up. So VectorVest puts, now in chapter 3 of Dr. Delito's book, Stock Strategies and Common Sense, you can actually work through the sums for yourself. Has anybody worked through those sums? It's all there. Get your 3H pencil out and have a wee go on the plane home. So when I first came to the UK from South Africa, well, it's nearly 10 years ago now, back to the UK, the head of asset management in 2 big London banks, I'd actually trained how to trade futures, believe it or not. They were both South Africans. And I went to them and I asked for their valuations on the top 100 stocks, the FTSE 100 stocks. There was only one stock out of the whole 100 where our valuation was more than 10% away from the institutional consensus. So the valuation numbers are robust. Now, there is examples, and if we get time, I'm going to ask Ron to pull up the stock viewer in a second. So I think that last night when I looked, SMCI was the top stock by VST, which I'll define in a second. It was trading at 84, and VectorVest values at 107. So that's an undervalued stock. That's the first tick. Certainly not the only tick, but it's the first tick. Now, there's another little company here that I don't know called RBLX, which is trading at $31, and it's got a valuation of $3.24. You need to be doing something or have some very special knowledge to get involved there. It's what the UK author John le Carre calls pillow talk. If you have got some insight into the stock. The next number is the upside potential of the stock, relative value. Now, I personally believe this is the most important number on VectorVest. It's a measure of the future. And as Mark Twain so beautifully said, the future is a very slippery commodity. And it measures, it's called relative, because it measures the performance of the stock in relation to what a AAA rated corporate bond will pay. Rated on a scale between 0 and 2. Above 1, we should outperform a corporate bond. Below 1, we're going to underperform a corporate bond. Now, the calculation of this is all in Dr. DeLito's little book. It's a relatively simple calculation in relation to the valuation as it looks at a time period into the future of 3 years. So, in a nutshell, relative value, if you've got a stock with a relative value of 1.5, it's saying that we believe that this stock is going to outperform a corporate bond by 50% over a window of 3 years into the future. The only timing in relative value is that 3 years. We need to look at other measures of timing to actually define the turning points. I firmly believe that it's the most important number on VectorVest, and it's certainly a much more important measure of valuation than the often quoted price-to-earnings ratio. Price-to-earnings ratio is looking backwards. And I have got a very good friend who was a stockbroker in Cape Town, went to New York City, made himself a fortune working for Morgan Stanley. Came back to Cape Town, started his own hedge fund. Bought into a stock that he thought was a bargain on a PE of 4. There was a really good reason that it was on a PE of 4, because the earnings were cratering. So the question I always ask the UK people, what's the best stock? A stock that's on a PE of price-to-earnings ratio of 50, or a stock that's on a price-to-earnings ratio of 10? Conventional wisdom would say 10, but in fact, a stock that's on a large PE could be a much better bet because it's growing earnings strongly. So, as far as I'm concerned, relative value is a much better measure than PE. In my own investing, whether it's swing trading, whether it's long-term stuff, I'm looking for a relative value of greater than 1.25. Now, I haven't done the testing in the American market, but we have several customers who are outstanding back testers in the UK market, and myself and their work has shown that it's certainly in the UK market, a relative value of greater than 1.25 helps the portfolio tremendously. And we have stocks in both sides of the pond that have a relative value of 1.4, 1.5. I believe it's the most important number on VectorVest. Let's see what the other speakers have to say during the course of the day. Now, the next number is safety. And could anything be more important in this environment? How safe are your stocks? Well, Dr. DeLito's algorithm looks at all 8,000 stocks in the US. It looks at the balance sheet, the income statement, the cash flow statement. It looks at all those ghastly ratios and makes a judgment as to whether the financial performance is getting better or whether the financial performance is getting worse. Again, it's graduated on a scale between 0 and 2. Above 1 is fair, and when you get up to 1.3, 1.4, this is a stock that's making money, and all those ghastly ratios are getting better. Very important in this sort of environment. So what have we done in a few minutes, folks? We've looked and we've found a valuation to every stock in the VectorVest world, 18,000 stocks. We can tell whether it's overvalued or undervalued. We can get a measure of the future. What's going to happen over the next 3 years? And we can get a measure of the past, relative safety. And in my own work, I can't tell you what to do, but I'm primarily looking for stocks that are undervalued Stocks that are growing and earning strongly, RV. Reasonably safely, RS. That are rising in price. Okay, so, and that's the next number, which is relative timing. And relative timing, I think probably the simplest calculation, it measures the direction and the speed of the price. Again, graduated between 0 and 2. Above 1, the darn thing is rising. The further above 1, the faster it's rising. Relative value, relative value, and relative safety, a measure of the fundamentals of a company. Relative timing, a measure of the short-term trend in the share price. And then what Bartoledo did is that he put them all together. And this is when I made the decision to join VectorVest, because I'd never seen this before. He put together into one single number value, safety, and trend. Value and safety being fundamentals, and timing clearly being a technical measure. And I didn't even believe that was possible. Now, if you go to a normal investment meeting, the fundamental analysts will be sitting on one side, the technical analysts will be sitting on the other side, and they don't speak. The technical analysis fellow thinks that the fundamental analysis chap is in fact looking at numbers that are probably 6 months out of date. And the fundamental analyst pretty much thinks that the technical analyst is reading the tea leaves. So there's no love lost there until the second drink, and then they throw abuse at each other for the rest of the meeting. And you've all been to those meetings. So here's this chap who said that I pragmatically want to make money. Who's here to make money? Are you sure? Are you sure you're not here to solve a puzzle? Okay, well, if you're here to make money, I firmly believe, based on many years of experience, that you should put together the best of both worlds. The best of fundamentals with the best of technicals. Undervalued stocks that are growing, earning strongly and safely, that are rising in price. And the default sort on VectorVest is VST. Naively, some years back, maybe 10 years back, I asked Dr. Toledo, why is the default sort VST? And he said, that's because it's the best. And there's not 1 month goes past where I don't get an email from Dr. D telling me that I'm making it far too damn complicated. That all I need to look at is the top 20 or 30 stocks by VST, and he's right. Okay? My ex-wife told me once upon a time that I could complicate the Lord's Prayer. Okay? My son, to add a bit of extra emphasis, told me that I wasn't happy unless I had something to worry about. Maybe your own sons have told you that. So, as a default, all of the stocks on VectorVest are sorted by descending VST. Now, there's 1,000 sorts, and you can write your own in UniSearch, but you don't have to look much further than the top dozen stocks. And if we get time, that's where we'll go in a second. I've skipped a few slides because I'm going to hopefully go through that when we get to the actual VectorVest program itself. So the next is the VectorVest stop. Now, stop losses, folks, are something you don't want to consider when you put on a trade. Everything is rosy. You've done all your research. You're sure the damn thing is going to go up. Yeah? And then, of course, it doesn't. So stop losses are a real pain in the backside. That's for sure. And sometimes they get you out exactly where you should be buying in. Have you ever experienced that? Your stop loss gets clipped, and you say to yourself, That's where I should have been buying in. But, young man with a hat, they do save your bacon frequently. And the next time you don't know whether you're looking at, what's that, Meta falling through the floor, or Peloton falling through the floor, in the UK, Persimmons falling through the floor, some Russian stock falling not through the floor, but through the mantle of the planet. Okay, some Russian gold miners, polymetal in the UK people listening. Thank God we got out of that. Stop losses have a place. I'm going to be talking about that at length this afternoon because we don't like them. But on VectorVest, there is a stop loss calculated for you every day. As you all know, Steve Chappell has done an enormous amount of work on advanced stop losses as well. But if you've got the discipline to simply react to the VectorVest stop loss, you're going to be ahead of 90% of the people out there who couldn't take a stop loss if it was to save their lives. And they will also commit the cardinal error, cardinal used in the proper sense of the word, not the religious sense, which is a pivot, of adding to losers. Where's that young man we were talking to yesterday? I was cringing in the seat when you told me that yesterday. Averaging down. Averaging down will get you out of trouble, but sooner or later it's going to eat you alive. I'm afraid. So stop losses are calculated. It's based on a 65, 13-week moving average. It's adjusted for the fundamentals, folks. So if the fundamentals of the stock are really good, we widen the stop loss, we give it more room to move. Give it more wiggle room. If the fundamentals are lousy, we tighten the stop loss. So by all means, work with Steve, with the rest of the guys on advanced stop losses. But your first step will just simply to be able to get out with the VectorVest stop loss. If you can do that, you're a mile ahead of everybody else. And it's difficult. There's a little man on your shoulder saying, don't do it. A little lady on your shoulder saying, a little devil. There is a compulsion to average down like a drunk looking for another beer. Have you felt that? Average my way out of trouble. That takes a bit of getting around. So the VectorVest stop loss, a calculated stop loss to get you out of trouble. It's also a great place to calculate your position size, which I'll be talking about at 4 o'clock this afternoon or 5 o'clock this afternoon. So, Ron, could I ask you, sir, to go into the stock viewer? Just the stock viewer by VST, and the problem is now I can't see that, I'm afraid. That's the stuff up. The top stock was at SMCI. I'm afraid I can't see that. U.S. Marines come to the rescue. Joey, if I move down a little bit, will it stuff up the sound quality? What? I'm good. Okay. Is that by VST? Yeah, okay. All right, so let's have a look here, folks. The top stock, Catalyst, this has changed a little bit since this morning. It's intraday data. As you can see, it's trading at a price of $18, give or take. VectorVest believes it's worth 23. So that's the first proprietary number. and it gets a tick. It's undervalued. It's the first tick of many. The relative value is 1.58. And that's saying, ladies and gentlemen, that we believe that over a window of 3 years into the future, that the darn thing is going to outperform a corporate bond by 58%. Doesn't tell you in what window that's going to happen. It's just saying that there's the potential of 58% there over a window of 3 years into the future. As I say, I believe that's the most important number on VectorVest. It's a measure of the future. The relative safety is 1.41. Now, on the scale between 0 and 2, when you get up to about the 1.41, that's a company that's making money, and all those ghastly ratios are getting better, and away on our side of the Atlantic, we would say that that number is not just good, it's not just very good, it's bloody marvelous. Okay? The RT is 1.56. That means that the short-term trend is strong, very strong. And when we put those three things together, folks, RV, RS, and RT, it's got the highest VST in the pack. Dr. Leda will always make this, again, he tells me every week that I don't need to look at anything more than the top 20 or 30, and as I've said before, he's right, 100% right. Now, I didn't get time to look at the CI. The CI is a measure of, let's call it the long-term trend. So if you think of RT as a measure of the short-term trend and CI as a measure of the long-term trend, that's good enough. So both the short-term trend and the long-term trend are at your back. The stop loss is $16. It's on a buy recommendation. The stop loss is $16.20. And VectorVest believes that it's going to grow earnings next year at 29%, which is quite a clip. Okay. So all the numbers look really, really good here. Ron, I know we're not supposed to, but let's look at a chart. Let's be devils. Okay. So let's pull up the old chart. Over 1 year, if you don't mind, sir. Right-click, view, that's a boy. International business machines. There we are. So what I've loaded here, folks, is I've left the technical bits for a later presentation. But I've just loaded a price chart, and I've loaded EPS, earnings per share, which is a big part of relative value. This earnings per share plot is incredibly important, and I think before making any buying decision, you should have a go look at that. As you can see, earnings per share has been upgraded. That ramp up in earnings per share is really good. If the earnings per share ramps up like that, then what's happening is that the share has done significantly better than we expected it to do. If there's a ramp down, it means that the share has done worse than we expected it to do. Okay, ramp up is good, ramp down is not so good. So we've got this stock. It's breaking up strongly. As you can see, it broke up pretty much on the day. In the UK, it will always break before the news, but maybe the market's tighter here. Maybe, what's her name, Nancy, is not involved in that stock. So that, by the way, that wouldn't happen in England. That would not happen in England. This stock is moving up strongly, and I'm not going to put on volume or anything now, but it looks to me, if the general market should in fact right itself, that's got a fairly decent future ahead of it. Okay? Anybody holding the stock? Okay? Good luck, everyone. Good luck. I'm waiting for I'm getting ahead of myself, for the DEW market timing indicator to turn up again before I buy anything more. The only bet that I've got in the American market at the moment is the GDX. That's the only thing, and I've been talking about that every Monday afternoon now for a month. Ron, if it's not too much bother, can we go back to the stock viewer, sir? Let's go to Super Micro. As you can see, it's trading at 80. We believe it's worth 114. That's the first we tick. That's good, especially in this environment, folks. Even Kramer is saying we should actually move to safe stocks. God, that guy upsets me immensely. I was going to roll up my sleeves just to look like him, okay? Oh, what a complete tosser. So the RV is 1.78. Now, again, that's a bloody marvelous number. It really is a great number. It's going to outperform a corporate bond by 78% over that window of 3 years into the future. Anything can happen, but the probabilities look good. The next number is relative safety, 1.38. That's up there. That's great. RT is 1.42, which is a great number. And when we put the three of them together, we get a VST of 1.52 as well. So clearly, there's a few decimal places different between them we can't see. CI is a very respectable 1.61. So we've got, by just looking at that one line, folks, we have analyzed the stock both fundamentally and technically. We've analyzed both the short-term trend and the long-term trend, its valuation, its future over the next 3 years, and how safe has this company been in making money over the last 5 or 6 years. And that would take you a lifetime to do, and that's why when I first saw this 12 years ago, I in fact signed up for a 30-day or 5-week trial then of VectorVest, and then got involved in South Africa, and for the last, 10 years nearly now, got involved in the UK. I would never be able to do that for one stock. Never mind 18,000 stocks. So the stop loss is 75, and we believe it's going to grow earnings at 42%. Now that's one hell of a clip. If you go to the right-hand side, folks, there's another number that's really useful, which is sales growth. Ron, maybe you could go to the, can you go to the right-hand side of the thing? Thanks, sir. No, a little bit further, man. There's sales growth there at 79%. And again, Dr. Toledo sent me an email about this frequently. Well, that he believes that sales growth itself is a really good sign that it comes ahead of earnings per share growth, which is sensible. Dr. Toledo, much more of a fundamental analyst than I'll ever be. I tend to get bogged down in too much technicals at times. So if we pull up a chart of that one, Ron, as well, sir. There we go. Now, this is earnings per share looking good. Been upgraded there, as you can see. But looking great. It's moving up from the bottom left to the top right. And by the way, Todd at the VectorVest Education Department emphasizes earnings per share in Lecture 4 of the Successful Investing Quick Start course, which if you haven't done it recently is certainly worth a review. It's on the front page of VectorVest under training. Now, I suppose, I made good money in this because you see it pulled back there. Now that's what technicians refer to as a bull flag. It's a textbook bull flag. And then the little bugger gapped out of the flag. Now that's as sure as you can get in this line of work. Anything can happen. But the fundamentals are great. And there was a really good technical pattern. And myself and Big Jerry, where's Jerry? We in fact go through all that in the swing trading mentoring group that I participate in once a month odd. And now it's going sideways again. As you can see, the price action has dried up. That's what somebody clever called a volatility contraction pattern. It's been called a million things over the years. One thing you learn very quickly about technical analysis is that the more complicated it sounds, the more you can flog it for. Simple as that. So that fellow, in fact, thought that volatility contraction pattern was suitably complicated. I used to know Gerald Appel well, who designed the MACD indicator. And he told me that story. He said that he felt that moving average, converging, diverging was suitably complicated. And he sold it for quite a bit of money. Market moving sideways here, folks. The old DEW is down. And apart from one silly little green light, Jim Penna mentioned this to me yesterday, maybe a dozen times. Apart from one green light, every damn thing is down. I think, guys, that when the market does right itself, that's certainly something that I'll be looking at. All right, so I found two stocks. I will be swing trading these. And by the way, that if you do come in the swing trading coaching, the top to the tick could have been forecast with a Fibonacci expansion, which I teach in my swing trading, bit of the swing trading course. It went to the 1.618 extension to the tick. Not a tick above it, not a tick below it. Was the Fibonacci stuff sent down by God? Absolute. Or was everybody waiting on the level? We're not going to answer that question here today. Okay. So that looks really good. If we go back to the stock viewer again, I'm still okay for time. Can you go down and find, oh dear, I had it last night, it's changed a little bit. Let's look at, Deckers. I was thinking of Skechers because of shoes. It's trading at $3.95. We believe it's worth $4.65. It's up $5 today, 1.32%. RV is 1.43. There's two ticks already. RS is 1.4. That's another tick. RT looks strong. VST is good at 1.4 on the scale between 0 and 2. The CI is low. So we got a situation here where the short-term trend looks really good, but the longer-term trend is a bit iffy. So we need to have a look at that. Okay, and we will. The stop loss is 359, and it should grow earnings at 20% next year. Can we have a wee gander at the sales growth there, Ron? I'm sorry I'm making you graft here, mate. It's going to grow at a fairly acceptable 21% next year. So if we pull up the chart of that, sir. And again, I like the earnings per share. Now, I've been at this with VectorVest now for 12 years. And I found that certainly if you want to be a swing trader or get a good entry for a longer term trade, that EPS moving from the bottom left to the top right, that's a bloody marvelous indicator. And if it's going the other way, my advice to you would be to stand aside. Okay? Unless you're into it for a day or two. So that looks very good to me. If you come along this afternoon, folks, there is a Wyckoff spring on that. I'll be talking about that tomorrow morning, in fact. Made famous by a trader of yesteryear called Richard Wyckoff, who wrote about it 100 years ago. Any Wyckoff scholars here? No? Okay. As my wife so beautifully said, I can make things complicated. All right, but it's a really, really good entry, and that looks exceptionally good to me. So that's Deckers Outdoor. let's have a look at it over 5 years, Ron, if we could. And folks, that's the real reason that the CI has come down. As you can see, if you look back, over the last 3 years, it's pretty much done nothing from there. That's what's caused the CI, and the long-term trend hasn't quite caught up with it yet. Earnings per share over the last 5 years hasn't blipped at all. To me, I would have thought that it's going to find some resistance at those old tops. I think that everything goes well, it'll pull back a little bit, and we could get the mother of all cup and handle patterns there. Technician, I know. What can you do? Nothing better than a good old-fashioned cup and handle. Nothing better. So that looks. So what I've tried to do now, folks, is I've tried to find 3 stocks that I think should prosper over the next little while. If nothing else, that'll buy a tank of gas for you for your trip here. If we can go back to the, I've got 5 minutes left, I think. We can go back to the stock viewer. And go right to, yeah, thank you, sir. Go to the top again, where maybe I've, let's have a look now. What's this one? OTI, down, no, up one. Yeah, that one, please. As you can see, that's trading at 17. We believe it's worth 16. There or thereabouts. The RV is 1.22, but the relative safety, folks, is 0.81. Now, that's saying that there's been ups and downs, ins and outs in these books over the last while. Those of you that sleep poorly will want to give that a miss. However, there could be an opportunity for short-term players that are managing risk proactively with stop losses. However, it is my experience that there are not that many people that are that good at stop losses that will say to themselves, give it another tick. So that number looks quite good to me. RT is great, 1.87, couldn't be better. VST is 1.41, very respectable, and clearly the high RT have pulled this up. And that's the beauty of Dr. Toledo's system, putting the fundamentals and the technicals together. The CI is lousy at 0.75. It's on a buy recommendation, and it should grow earnings at 29% next year. So if we pull that chart up, let's have a look at that chart, sir. And we start with the last year. So there is this oil. First of all, you can see earnings per share is good. And then it turned the corner. And it moves on to one of Dr. Toledo's buy recommendations very early. There's a really good trend line there. If you listen to Mr. Heller's presentation tomorrow afternoon, my mind tells me that the near perfect indicator would have in fact nailed that pretty much at the low. Excellent. A trend line in place. Well done, sir. Well done. And clearly a fairly marked trend line on the downside as well. Lots and lots of ways that you could have bought into that. But Dr. Toledo's buy recommendation nailed it pretty much to the, yeah, just about there would have got you in. That would have been a great signal, because it's, there's a trader out there called William Gann, and he said the safest place to buy is after the first rising bottom. And that was the first rising bottom of a wave of a similar degree. So we're moving up very nicely now. For those of you that have got the stomach for it, then that, so folks, don't be like me. Don't make it too complicated. There are many hundreds of Unisearch out there. Dr. Toledo himself tells me that the best place to start is with VST. Have a look at the top 30 or 40 by VST. I think for the majority of your investing stroke trading, you want to be focusing on undervalued stocks, focusing on stocks that are growing earnings strongly, RV, reasonably safely, RS, that are rising in price. And as we'll see during the course of the day, we want to be strong in the market when the overall market is rising, and we want to be very timid and very careful when the overall market is falling. The objective of a bear market is to survive it. I'll be back at, I think, 5 o'clock to talk about trading psychology. Don't make it too difficult, folks. And don't underestimate the power of the VectorVest metrics to keep your portfolio in the black. Thanks very much indeed.
We're so fortunate to have him on our team. You know, he's an animated fella, and he's just great to have. Just a vast world of knowledge coming from him. There's a lot we can take away and learn. This talk here, many of you have heard this talk before. For some of you, you're brand new to the system. You're learning. But what we're going to do over the next 2 days is we're going to put layers on. We're starting, you know, with the core VectorVest system, and we're going to add layer after layer after layer. You know, the key takeaways and what Dr. Bartolito was really trying to do was not just give you data. We live in a world where we have so much data thrown at us every moment. And for some reason, I've heard Jerry D'Ambrosio say this many times, but people find comfort in complexity for some reason. I know we all did at one time. We think, oh, this crazy new idea, we're going to do this and that. And you end up getting overwhelmed with this data. And, you know, Dr. Bartolito, he realized early on, a long time before everyone else, that it's not about the data unless you're an analyst. And there's a big difference between data and factual, valuable information. And that's what this talk was all about, understanding what your stock is really worth. You know, would you ever go and buy a car or a used car or a house, for that matter, without understanding its intrinsic value? And for the most part, the answer is no. That's why Dr. Bartolito wanted to know, what is your stock really worth? Then on top of that, we need to know, is it safe? Just understanding one data point doesn't give you that information. You have to have some genius behind it. And that's what the VectorVest system is. We can identify the safety of a stock, you know, its upside potential, is it trending in an upward direction? And when we put all of this together, and that's what we're doing over the next 2 days, you can increase your likelihood of being successful. There are no guarantees, but I can tell you this, and many of you know that have been around for a long time. We have subscribers that have been around 20 plus years. You know, that it's about increasing your likelihood of success. And in order to do that, you need factual, actual, valuable information that has been proven over time. And this is what you get. Now, Dr. David Paul made a good mention, and I want to reiterate this, and this came from Dr. Toledo as well, is the earnings is the engine that drives the stock price, okay? Rising earnings is really key, and that's what we want to focus in on. Now, a lot of people just give you an earnings data point, and there's a difference between our earnings and everybody else's earnings. So you can see, oh, this company just reported this earnings number right now. And that's good, but you have to look back historically. You know, has there been a trend in that? Our EPS, our earnings that we were looking at on a graph, that's forecasting 12 months out. So we're really getting an understanding of where we project this 12 months from now. And that's really important. So the earnings might be the engine that drives it, but there's another key that Dr. Bartolito pointed out in the updated green book that we have in the software, and that is the fuel. What is the fuel for the earnings? And that's the sales growth, right? So if we know that the earnings growth is rising and the earnings per share is rising, that fuel is the sales growth, because that fuel or the sales that are occurring, if we can see that the sales are growing, now there are outside forces, there's inflation, there's interest, each company operates a little bit different, but for the most part, if you want that earnings per share to hold up, we like to see that sales growth because that can tell us, is it likely that this is going to be sustainable? Just looking historically, companies that make money quarter over quarter, year over year, that's going to increase the safety level of these individual stocks. Naturally, that gives you a bit of safety that they're likely to continue that. But you could just take 2 seconds, look over at the sales growth numbers, because that's the fuel that can drive it. Does that make sense for everyone? Okay, great. So we just laid the foundation. We're going to take a quick break. We're going to make a couple of adjustments here. When we come back, Mr. Jerry D'Ambrosio is going to give us the secret to buying low and selling high. So this will be the next level. We understand how to analyze a stock. We're all stock market wizards now. We can do it with ease. But now let's understand when we should buy it. And I've got a quick message for those of you online, just to understand how the $100 voucher works. We're going to play that clip I pre-recorded just to alleviate some of the calls that are coming into product support. And we'll see you back in about 15 minutes or so, and we'll kick it off once again. Thanks again, everyone. Bring the special offers Hello, and thanks again for joining us for the 2023 two-day investment seminar. As you know, we're offering the $100 discount voucher to all attendees once again this year, and I want to spend a moment to explain what the $100 voucher can be used for and how to take advantage of it. This year, you can apply the $100 voucher to any one of the 4 courses listed on the offers page, or it can be applied to any of the 4 annual group coaching packages. The voucher is not valid for a base subscription like end of day, intraday, or real time. When you go to www.vectorvest.com/offers, you will see the group coaching packages button that you can click on to access the list of coaching groups. The prices you see are our special seminar prices and does not reflect the $100 voucher. When you submit an order for one of the coaching group packages, we will automatically apply the $100 voucher to the price listed when one of our billing specialists apply the order to your account. The additional $100 discount will not be displayed on the order page itself. If you're ordering one of the 4 courses listed, the $100 savings will be applied at the time of purchase, so you'll get an additional $100 off of the prices shown on the offers page. If you're ordering an annual coaching group and a course, the $100 savings certificate will be applied to the course and not the subscription, as there is only one voucher to be used per person. This voucher will expire at the conclusion of the two-day seminar and will not be valid once the seminar is over. Thanks again for joining us to kick off 2023.
to your seats, everybody. Thank you so much. I know that was a short break, but just trying to stay on time. Can you hear me? No? That's okay. He'll turn it on when we start. All right. Let me know, Joey. We're good? Everybody hear me okay? I don't talk as loud as David or Glenn, but I'll try to project my voice as much as possible. We got about a minute or so. I want to make sure everybody comes back into the room. What's that?
Big softly, Terry, big stick.
Yeah, that's right. That's right. Yeah, can we raise this a little bit? I don't think we can. What's that? Stand on the ground with it? That's a good idea. All right, folks. Well, welcome back, everybody. Welcome back, everybody joining us live stream as well. How's the temperature in here, guys? A little bit better? A little bit better. We're getting there. It was real warm in here before. It's gotten a little bit cold. We're trying to find that happy medium. It's tough in a room this big with so many people. But welcome back. Great to see a lot of you folks here. It's been a rough couple of years, but we're back. Last time we were here, I think it was 2020. It was right before everything started. So it was glad we were able to come back in 2020. My name is Jerry D'Ambrosio. I'm the manager of educational content with VectorVest. Been with the company now 16 years. A big part of my responsibilities every day is with the swing trading, I call them faction. We have different factions of our education team. Swing trading, retirement, options, successful investor type of an approach. So a big part of what I do is teach a lot of our swing trading courses, Trade Like a Pro, precision swing trading. So I'm happy to be here today. The next talk we're gonna go through here today is the secret to buying low and selling high. I have great news for you guys. You guys ready? The secret is to buy low and sell high. We're good? Who's up next? Guys, that's it. Secret is to buy low and sell high. Of course, there's a little more to it, but if you get this right, if you get this part right, coupled with what David just went through, you know, the VectorVest system of analyzing stocks, it's not just about stock analysis. It's about understanding market direction. You'll increase the probability of making money year after year if you just keep yourselves on the right side of the market. And look, nothing is 100%, right? No signal out there, no indicator is going to produce 100% profitable signals. We have to increase our odds and we have to make sure that we're buying stocks that are in tune with what the market's doing. So VectorVest believes in buying rising stocks in rising markets, in rising industry groups and sectors, by the way, and selling falling stocks in falling markets. So a little different than what you might listen to on television, right? I don't really pay much attention to the talking heads much anymore because they're always telling you to buy something. 2021, that's all they kept doing. And if you would have done that and just continued to buy stocks in falling markets, you know, you wind up in some pretty deep waters. We take a different approach. We're trend followers. We're not market predictors. We're trend followers. And I really hope everybody here believes that markets behave in trends. Now, not always, but for the most part, there are shorter term trends, there are longer term trends. I know the last couple of days, what's the matter, guys? Last couple of months or so have been pretty difficult, but for the most part, markets do behave in trends, and what we want to do is keep ourselves on the right side. The essence of making money in the stock market is the fine art of buying low and selling high, and it is an art form. It's not a science, okay? It is an art form that takes time to master. You're going to get better at this as you go along. I started with VectorVest 16 years ago. I was an English major in college. I was a high school English teacher for a couple of years until I moved down to Charlotte. I didn't know anything about the stock market back then, but everything that I've learned over the last 16 years has been kind of through the VectorVest lens of buying safe, undervalued stocks that are rising in price in rising markets. And it takes time. Don't think it's going to happen overnight, But you're gonna have a basic understanding here today that's just gonna help you guys get better and better as the months and years go by. So how do we know when a stock's price is low? Anyone have the answer? How do we know when a stock's price is low? Well, what is low to a buyer is high to a seller, and vice versa. So who's right? Who's right? Well, by definition, a stock price is low when it is more likely to go up than it is to go down, and that's the key word there, likely. Okay? How do we establish the likelihood that a stock will go up over time? How do we establish the likelihood that a stock will go up in the short term? There are a lot of different technical indicators that one can use. RSI, moving averages, support, resistance, things like that. But for the long term, how do we establish that a stock is more likely to go up than it is to go down? Okay? Fundamental investors who hold for the long term, they buy stocks when they see attractive situations regarding value and safety. So a fundamental investor looks at indicators like earnings growth, earnings per share. They look at volume, sales volume, right? How long the company's been in business is a big factor in safety. But in essence, earnings coupled with earnings growth create value and safety. Value goes up when earnings go up. If you've seen this slide, I know 100 times before. Inflation goes down and interest rates go down. Okay? We've done this talk a number of times. We've touched on this slide and this point a number of times over the years, and it's never been more relevant than it is now. Because what are we starting to see with earnings? They're struggling a little bit, right? Companies are starting, and it's just starting to hit companies more so recently than in the past, and it's never a 1-to-1 ratio. You know, inflation doesn't tick higher and earnings ticks lower. In a high inflationary and high interest rate environment, it becomes a little bit more difficult for companies to grow their earnings because money is more expensive to borrow. Individual investors, when you're in a high inflationary environment, tend to be a little tight with the wallet and not spend a lot of money. What does that do for a company's bottom line? That, of course, hurts it. Ron, if you don't mind, going into the program and go into the market climate graph. Okay, and right away, first off, let's open up the graph control panel, and let's add a couple of indicators. Right now, the indicators that we have on the chart, 50-day MA EPS. That is a 50-day moving average of the S&P 500 earnings per share. You guys know that our earnings per share is a little bit different than what companies report. Our earnings per share is a leading 12-month earnings forecast. So basically what we're saying is, if you see an earnings per share, for example, of $4.50, we feel that a year from now, the company is likely to earn $4.50. So it is a leading 12-month indicator. The indicator at the bottom there is the earnings trend indicator, okay? That indicator is on a 0 to 2 scale. You guys know what that means, right? Above 1 is considered good or favorable, below 1 is considered unfavorable. So the ETI is the earnings trend indicator of the S&P 500 earnings per share. What has the earnings trend indicator been doing over the last several months? Fallen like a rock there, and it's very close to crossing below 1. What's starting to happen, and let's take a look at that data point right there. What data point was that? The peak of earnings per share, that was July, 5 months ago, 6 months ago. Inflation's been going up for a lot longer than that, right? Interest rates have been rising for a little bit longer than the last 6 months. So what's starting to happen recently is that the high inflationary and high interest rate environment are taking its toll, which they most times do, to a company's earnings per share, okay? And the flattening out here and the lack of acceleration of earnings per share is causing the earnings trend indicator to fall. Ron, do me a favor. Go to add parameter. Click on CPI, Consumer Price Index. Check that box. We know that it was at 9% not too long ago. It's fallen nicely, thank goodness. Higher rates are hopefully are having an effect and bringing down that CPI number. Go back to add parameter. We're going to add a couple more. T-bills and T-notes. T-bills are the short-term rates. T-notes are the long-term rates. Check both of those boxes. Yeah, see that? Okay, just take off T-notes. I got to check that as a data error there. But here are the T-bills currently at about what, 4 and change. Back then it was at 2%. We're at almost 4.5% here. Look at look at what's beginning to happen now. Interest rates are rising, and we're looking at the last almost 2 years. Interest rates are rising, inflation has been rising, earnings per share continue to go up. Right? But now, and again, it's not a 1-to-1 ratio, now this type of environment that we're in really having an effect and an impact on earnings per share. What happens when the earnings trend indicator goes below 1? Bear market, a bear market in terms of how we determine bull and bear markets. You've heard a lot the term bear market before, and we're in a bear market, or we were in a bear market in 2021. When you hear that on TV or some other places, they're just looking at the value of the S&P, right, or the value of the market. Is it 20% lower off of its high? Then you're considered in a bear market. Okay? We look at things a little differently because we don't just look at the S&P price or the VVC price. We look at earnings, we look at inflation, we look at interest rates, and the combination of those things help us determine whether we are in bull or bear market scenarios. And earnings really is kind of the key there. Earnings ETI above 1, bull market. Earnings ETI below 1, bear market. So we're kind of heading into that in that direction here pretty soon. How do you guys think 2023 is going to be? How do you think S&P earnings are going to be in 2023? Thumbs up, thumbs down. Thumbs down. A lot of thumbs down, folks, joining at home. A lot of thumbs down. Interest rates are going to continue to go up next year. At least this year. That's right. That's the first time I've done that. We were talking the other day. I wrote a check or two, and I wrote something the date, and I wrote 2023, and I never do that. I always write the year before, and now I just said last year or this year. Anyway, so we'll see. 2023, big year. We can make money in any market, guys. We just have to remember to keep ourselves on the right side, and that's what we're doing here to help you guys do here today. Okay? Let's get back into the slides, Ron. So let's talk a little bit about safety. Safety improves with outstanding financial performance. Companies that do a good job, a great job, of growing their earnings every quarter, every year. Earnings per share, earnings growth, consistently and predictably beating expectations and forecasts. Above average earnings growth. What's the average that everybody kind of looks at? S&P average, right? So you want companies to grow their earnings faster than the average S&P 500 stocks. So that's what we can look for. And if companies do that, their safety will improve, their RS rating, right? Because RS is our indicator of safety, one of them. I think you can say that comfort index is as well. But we want companies, and again, safety improves with above average earnings growth. Steady increases in stock prices, right? The steadier and more consistent a stock price grows, the safer that investment is for the long term. Low debt to equity ratio, high sales volume. So companies like Apple, look, I can name a handful of companies in the last year, their stock prices have been getting hammered. But Apple's, Microsoft's, Merck, Johnson & Johnson, these are big companies with profitable products, right? And really, really high sales volume that help them weather storms like we've seen over the last year or so a little bit better than some other companies, right? So you want companies with high sales volume, low debt to equity ratio, consistent steady increases in price, consistent predictable earnings, and outstanding financial performance. And by the way, I'm talking about what fundamental investors look for, right? You know, I mentioned the different, I call them factions, of our education team. We have a retirement department that Jim heads up. We have swing trading, we have options, we have successful investor. And we want you folks to take everything that you can away from this course, but we also want you to be a well-rounded investor where, hey, you know, you got your, I manage my retirement, I self-direct a few bucks in my 401k, and I manage a portfolio, a retirement portfolio, a lot different than I manage my swing trading portfolio. I've said this in our swing trading coaching groups a number of times. We want you guys to get there. We want you to manage different portfolios. We want you to have a retirement portfolio where you buy high RS stocks, and the management of those stocks is going to be different. You're going to hold on to them for the long term. You want to make sure that all of these things continue to be in place. And then you have a portion of your portfolio where you might trade a little bit more actively. You might set aside some more money to trade options. We want you guys to get there if you're not there yet. Because, you know, I talked to Jim a little earlier, and I asked him, what have you guys been doing in the retirement group last year? He's like, we weren't buying much of anything. We were buying a lot of protective puts because for the most part we were in a confirmed down situation for most of 2021. So in times where you are less active in a safer, more conservative portfolio, you can be a little bit more active in a swing trading portfolio by buying and selling or shorting stocks when the market falls. Our swing trading coaching group portfolio last year from September of 21 to September of 22 made 25%. And I think 70% of the time we were short. So again, we want you to get there, you know, and there's nothing wrong with staying in cash or reducing your exposure during those confirmed down situations in your conservative portfolio. But again, during those volatile times, I think there is an opportunity to make money if you're a swing trader. But we are talking about value investors right now. Technical investors or shorter term traders, otherwise known as swing traders, they time their purchases when they expect price to go up. I'm going to add us a little something to this. They time their purchases when they see more attractive situations between or with price and volume. Okay, volume is a big part of technical trading as well. And one of the things that I try to focus on when teaching swing trading techniques, you know, I'll create some scans for some courses like Trade Like a Pro, where I'll teach some different techniques, but I'm always trying to layer in fundamentals. Because even though you're trading a technical pattern, I want good companies. I want to swing trade good companies, okay? For the most part. There are times where, look, you know, earnings might not be as favorable, or the safety rating might be a little lower, but I'm only in the stock for the short term. But I am trying to focus on valuation as much as, hey, what is the technicals telling me? What type of technical setup is this? Is it a support retracement? Well, how's the fundamentals? I put on earnings per share. Question I get a lot is, you know, in our coaching group, I might queue up a couple of trades for me to take or for the members to maybe consider, depending on the market. I always got the question, hey, earnings are a week from now. Would you still take the trade? I said, that's a good question. What I'll do is I'll put on earnings per share on the chart. Say, let's take a look at the chart. We like the setup as of the hard right edge. It might be breaking out of a channel or retracing from support, whatever the case may be on a technical perspective. But hey, how's the company's earnings, right? Is it erratic? Does it go from upper right to bottom left? Or bottom left to upper right? And what I'll say is, if it goes from bottom left to upper right, what is that telling you about recent earnings reports? They've been pretty good, right? They've done a good job of growing their earnings. So I wouldn't shy away from taking a shorter term trade on a fundamentally sound company that has done a good job of growing their earnings with solid earnings per share. If I like a technical setup, but I see erratic earnings per share, I'll pass, especially if they are reporting earnings in a week, right? Because look, they've missed a few times in the past, you know, especially now, likely to miss again. I'll pass on that stock and move on. So a big part of your swing trading stock selection is layering in those fundamentals, okay? So some key indicators of an imminent price increase include a breakout on high volume. Breakouts on low volume aren't as attractive for swing traders. You know, I always kind of take this from David Paul, and as you can see, it says here increasing volume. Increasing volume, rising price, bullish. Rising price, decreasing volume, not bullish. There's no conviction there, right? There's no conviction there. Falling price, rising volume, bearish. Falling price, volume drying up a little bit, let's maybe look for a potential reversal because there are less and less sellers here, right? Especially at key support levels. So again, imminent price increases include a breakout. You can look at breakouts above resistance, breakouts out of a channel, an uptrend. How do we determine uptrend? How do we determine uptrend? How are different indicators or ways? Higher highs, higher lows. If you're just looking at price, higher highs and higher lows. Moving averages, upsloping moving averages. Now, trend does depend on time frame, because a short-term uptrend may not necessarily mean that the stock is in a long-term uptrend. So different types of moving averages. Long-term moving average, 200-day moving average. Short-term moving average, 20-day moving average or less. So we want to take a look at all trends. I always, no matter the technical setup that I'm trading, I always look at the long-term trend of the stock. Why? That gives me a higher probability that the pullback that I'm looking at or the technical setup that I'm considering trading is likely going to lead to a profitable trade because the long-term trend is up. Does that make sense to everybody? Okay. News. Okay. Earnings, clinical trials, FDA approvals, things like that. So we always want to check the news before we buy anything. VectorVest is the only service, and David talked about this earlier, that combines the power of fundamental valuation with the insight or insights of technical analysis. That's our VST indicator: value, safety, and timing. Okay? So our mantra is that we advocate that investors buy safe, undervalued stocks that are rising in price. The question becomes, are they right for you? So let's hop into the program. I'll just read the next slide. High RS stocks usually are classified as prudent or conservative, and they have been proven to go up over time. So let's look at those high RS stocks in the VectorVest database. So we go to viewers, and if we resort the list, instead of VST, we look at relative safety. Now, a few of the same stocks might appear at the top of the list, but out of the 9,000 plus stocks that we track, and we talked about safety, we talked about relative safety, and the indicators that go into relative safety, these are the stocks at the top that have the best, that have done the best in growing their earnings consistently and predictably over time. So let's graph the top bunch. We don't have to graph any more than the top 10 is fine. Yeah, one has okay, that's a good point. Let's minimize that chart for a second. Would you buy that stock today? Would you buy any stock today? No, right? Go to the homepage real quick. What is our guidance telling us? Our guidance says that we advocate caution when buying stocks. Big day today, look at that. Look at that, Jim. Dow's up 500 points, NASDAQ up 200, S&P, good data today. There was good jobs numbers today, employment rate down, payroll up. That's unusual, right? Good news is usually bad news is good news. Sometimes good news is good news, though. We got a green light in the price column of the color guard. We got the primary wave up. MTI, is that above 1? 1.0, so it's right at 1. All right, maybe we're starting to move in the right direction. Got to be a little bit careful here because we're still in a confirmed down. I always like to take a look at the market every time I'm up here, so just to give you guys an idea of what the market's doing today. Go back to the viewers. Yes, so sell rating. Why does the stock have a sell rating? Why is it? Well, it's a high RS stock. It's also got a VST of above 1. It's got a good relative value rating as well, 1.22. By the way, David talked about relative value, didn't he? And he talked about how it's one of the most important indicators in VectorVest. It looks at future price appreciation potential. And some of the things that we will consider with relative value, interest rates and inflation, right? So did you guys know that the average RV in the VectorVest composite has fallen quite considerably over the last 6 months to 9 months? Why do you think that is? Why has the long-term price appreciation of the market suffered over the last 6 to 9 months? Interest rates and inflation, right? The higher interest rates go, the higher inflation goes. That has a negative effect on future price performance. So I thought that was interesting that the average RV of the VVC, and you could plot that on the graph. Ron, if you just go to graphs, change it to stock and type in the VVC. So if you go to a market timing graph, which I will in a second, you can't plot RV on the chart. You can plot our market timing indicators on the chart, but you can't plot RV. Let's clean this up, please. Take off everything and just put RV on. Here's the VectorVest composite, and I think we're looking at a weekly chart. End of week, just go to a 1 year, there we go, and put RV on the chart. You can see how the average RV over the last 9 months has fallen quite a bit, and that has everything to do with, again, valuations being lowered, interest rates and inflation rising. Okay, so I don't know if you guys knew that you can put our proprietary indicators on the market by looking at the VVC of a stock, looking at a stock graph of the VVC as opposed to a market timing graph. All right, so let's go back to the stock viewer. And the reason why that top RS stock has a sell rating is because the price of the stock is below its stop price. Okay? But let's graph them. There's a couple sell ratings in there. There's a few holds. Look, what's the buy to sell ratio? It's below 1, right? So there are more sells than buys anyway. Let's look at a 5-year chart. Yeah. Do me a favor, Ron. Right-click right there. I think you might be able to do it if you right-clicked right there. And can you unlock the... Click on that up there. Let's try that. Does that lower it? Trying to get a 5-year chart. Sorry, guys. There you go. I'm sorry. Easy way. Go end of day. I want a 5-year weekly chart. That's dumb. End of day. End of weekly. 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 That's okay. Weekly. Yep. Weekly 5 years. That's okay. All right. Take off RV and put earnings per share on. United. Okay. It's a high RS stock for a reason, because over the last 5 years, look at earnings per share over the last 5 years. Bottom left to upper right. Right now, under a little bit of pressure, but they've done a pretty good job, haven't they, over the last year? Look at the price performance over the last year. A little different than what the market's done, right? Why is that? Well, they've done an outstanding job of, through it all, continuing to grow their earnings each and every quarter and each and every year here, particularly over the last year or two, when a lot of other companies have struggled and the market's been under a lot of pressure. So we'll go through a couple of these, and you'll see the same thing here. High RS stocks. What's the common denominator? Earnings per share that go from bottom left to upper right. Again, we're looking long-term here. High RS stocks. You're a fundamental investor, or you're managing a more conservative portfolio, and fundamental indicators and fundamental valuation is kind of key to your stock selection, right? So here with CI, Cigna, another healthcare company, fantastic earnings per share. Let's go to the next one. Progressive Insurance Company, they struggled here, but they've rallied nicely. It does look like we are higher than the peak, but look at that weekly performance there. So conservative investors or prudent investors, because RS is classified as either a prudent or conservative indicator, You want to hold stocks for the long term. You want to manage a more conservative portfolio. You want to favor high RS stocks whose earnings per share performance looks like that over the last 5 years. Okay, let's close out of that. Let's get back into the slides. Okay, so what's the secret weapon? The secret weapon is market direction. Quote from Dr. DeLito. A long time ago, I remember him writing this in the Views. The single most important thing to know is whether the market is going up or down. Everything follows from that. Well, what's everything? Everything is how you manage your portfolio and how you pick stocks for your portfolio. Everything follows what the market's doing. So we are trend followers, so we're going to let the trend be your friend. Buy rising stocks in rising markets, sell falling stocks in falling markets. This is the tough part, I know, because we tend to fall in love or think very highly of the stocks that we buy, and we don't believe that they're going to fall. But you want to separate that from your everyday process and trade stocks that are going with the market. Short falling stocks in falling markets. Buy contra ETFs, inverse ETFs in falling markets. Don't continue to buy stocks in a falling market. Let's go to a market timing graph. So the market timing signals, they never fail to signal, particularly the confirmed calls, never fail to signal a major market move. Is it 100%? Will it always, well, first off, will it always signal a major market move? Yes, it always will. Okay? There are some times where you're going to get whipsawed. Let's go move from a VVC chart to the market timing graph. Okay, oh, somebody asked me about the DEW. I'll get there in a second. Let's change our graph layout to the VectorVest layout. I'll get to the DEW in a moment. It's a fantastic market timing signal. Okay? Price of the VVC at the top, there's the MTI buy-to-sell ratio and the RT indicator. And we'll put the confirmed calls on for a moment. So this is the last 1 year. And back us up a little bit more, Ron, to give us that confirmed down that was in November of 21. So this is really interesting. Since the November of 2021 high, there only has been one confirmed up signal that you should have reacted to. Okay? Why not this one? Do you guys remember we talked a lot about this confirmed up here, and that was this was in July. This was in what, March or May? March. Why, if you were managing a conservative portfolio, did you not, or should, or you did not react to that signal? No follow through, right? No follow through. Not only the next day did you not get follow through, but there was no day after that did the market move any higher than when we signaled that confirmed up situation. So little fake out signal there. No opportunity or instance where you should have taken positions, re-entered your conservative portfolio during that confirmed up situation. This one, I'll give you, it didn't last very long, but there was follow through. Okay? So over the last 1 year, in your retirement or conservative portfolios, pretty inactive. I know Jim says that, he does a lot of protective put buying in his retirement coaching group portfolio, but not a lot of stock buying. He didn't do a lot of stock buying, or any stock buying, excuse me, during confirmed down situations. Now, if you're a trader, here's kind of the rub here. You're taking advantage of these rallies, okay? You're seeing these attractive situations with price. What do I mean by an attractive situation? An inverse head and shoulders pattern, a support retracement, a bullish divergence between the VVC and relative timing. For example, right here, take off the confirm call, Ron. So here's the market from this point, and take off the MTI, take off the buy-to-sell ratio too, please. So you're in a confirmed down. You're in a confirmed down. But here you see the market basing a little bit, right? It's looking for a bottom right in this area. Look at the relative timing indicator. I did a special presentation a couple weeks ago on recognizing bullish and bearish divergences. As a trader, if you see the market falling and kind of leveling out at a support level, but an indicator, like relative timing, creating a higher low. If you're a trader, you're pouncing. You're getting ready to start buying stocks again. As an investor, thank you, Ron. Ron's drawing those lines there that are connecting the higher lows on RT and the lower lows of price. When did the confirm call turn up? Not for a few weeks or a month or so later. Okay, so you have to understand what type of portfolio you're managing, and the indicators and the timing signals that you use will vary. Okay? So the confirm calls will never miss a major market move. It can't. It can't miss a major market move because the market on a confirmed up, would you really consider this a major market move? I wouldn't. Okay? That was a major down move. Off of the November high was a major down move. We're kind of in the middle here of a potential another leg lower, okay, because we're in a confirmed down situation right now. But it can't miss a major market move because if the market goes up for a couple of weeks, take off RT, put the buy-to-sell ratio on. More stocks are getting buy ratings. Market goes up for 2 weeks, there's your confirmed up situation. So more and more participation, more and more stocks are in uptrends with the market rising. That's a really solid signal. Again, it's not going to fail or miss a major market move. We have other market timing signals in the program. All right, primary wave, that's on the home page. You can also load the primary wave. Everybody ready? Put the primary wave on. Obviously, that puts a lot more signals on the chart. So, for a conservative investor, that might be a little bit daunting or scary to see so many signals on. But if you're a trader, you really want to pay attention to the primary wave. You really want to pay attention to the primary wave. If you listen to our daily color guard reports, you'll always recognize that we will say to buy stocks at some level or another when the primary wave is up. When the primary wave is down, we'll say not to buy stocks. So our guidance really on the home page and whether we're saying to buy stocks or not has everything to do with the position of the primary wave. It's the short-term market trend. We have other signals a little bit faster. So let's do this. Zoom in to this recent kind of, right there, all the way, that's fine. So here when we recognize that bullish divergence in this area, you saw the primary wave turn up a couple of times. Now after the primary wave, the green light will appear in the color guard. We've gotten a couple of green lights over the last few days. So if Ron puts the green lights on, green light buyer, this just simply means that not only has the market gone up week over week, but day over day as well. And you can see as the market rises, more and more green lights start to appear in the color guard, and those are opportunities to buy. What I'm showing you guys here are explicit signals, right? These are rules-based signals. They're not, it has nothing to do with guesswork. I think everybody needs that a little bit more nowadays, right? They need more explicit signals based on rules as opposed to just, hey, the market's going up here, let me just start buying stocks again. Okay, so there's the green light. We got another one of my favorites, the GLBRT kicker. This one has, and then change the layout, Ron, to the GLBRT kicker. This signal requires a little bit more than the market going up day over day and week over week. What we've done is we've applied 2 moving averages to relative timing. RT, we know what RT is, right? We know what RT means for an individual stock. It means it looks at the short-term price trend of a stock. Well, here we look at the short-term price trend of the market. RT can be a little noisy. So what we did here was we applied 2 moving averages to relative timing. Moving averages help quiet the noise and they help identify true direction. We're used to moving averages on price. Great, you could put moving averages on anything. If you want to identify the true direction of something, which is a little hard to do with the naked eye, you apply moving averages to it. So along with the green light in the price column of the color guard, if momentum begins to build and the short-term moving average crosses above the longer-term moving average, and it's a 10 and a 15, by the way, and if Ron opens up the graph control panel, you'll see that down at the bottom. It's a 10 period and a 15 period simple moving average on relative timing. 10 period moving average crosses above the 15, green lights in the price column of the color guard, you got a green light RT kicker signal. No, and the down signal, by the way, is a confirmed down. Bless you. Confirmed down. Yellow lights here are basically any other situation. A yellow light in the price column of the color guard could be a green light in the price column of the color guard, but the 10-period moving average on RT is below the 15. Then, and so the confirmed down is your down signal. One of my favorite signals, because you know, I like to swing trade and I like to play the market up and down, and you don't necessarily have an opportunity, or when you're using the GLB RT kicker, if the confirmed down is your only down signal, all right, that down signal, that down situation could last a while. With that signal, there's not necessarily short signals, shorting signals, bearish signals, right? There's just one and it's a confirmed down. With the GLB, with the RT kicker combo, I love this, this timing model, because now you have down signals during down markets, right? So we want to buy rising stocks in rising markets, sell or short falling stocks in falling markets. I think this signal here, RT kicker combo, does a really good job of identifying building upward momentum and also building falling momentum, down momentum. And then finally, somebody was asking me about the DEW. Okay, and let's change the layout to the Pro Trader. You don't have to do the enhanced, just the Pro Trader. And just go to a 1-year chart. So here is a little bit more of a technical look at the market, because here we're looking at envelopes. Those blue lines above and below price are envelopes. They just keep price in a normal trading range. 30-day weighted moving average in white, and the DPO. And if we put the, Ron did it, put the DEW signals on, the DEW will generally, not always, generally turn up before the confirmed up. So here is your sequence of signals. You get the primary wave up, and this is particularly off of a bottom, but really off of any low point. Primary wave turns up. That's your first indication of a trend change. Green light in the price column of the color guard. GLB RT kicker. DEW confirm call. Those generally are the sequence of signals that you will get. So if you're a little bit more aggressive, you're willing to take on a little bit more risk earlier. If you're more conservative, you're going to wait for something like the DEW or the confirm calls to re-enter back into the market. Okay, so again, guys, these are explicit signals. This is not based on any guesswork. And mastering this does take time. I said that earlier. All right, it does take time, and it does take some work. You guys are all here, which is fantastic. You really want to kind of improve yourselves next year. So, you know, watch the daily color guard reports every day. Who does that? Who does that? Not nearly enough hands. Glenn, you do? Glenn watches them every day. Not nearly enough hands. Guys, please watch those daily color guard reports every single evening. It takes 10 minutes maybe. And if you do that, it's just like studying. If you study, you'll improve. You'll get smarter. You'll get better. So you have to just watch those color guard reports, particularly on Fridays, keeping yourselves on the right side of the market. If we see a bullish divergence, we'll point it out to you. Any market timing signal change, you need to know about it, right? Because you have to know how to manage, you know, the portfolios that you're managing. Okay, let's get back into the slides. All right, so again, the VectorVest market timing graph clearly shows when the market's rising or falling. We're just looking at the VVC. The VVC is the foundation of our entire market analysis. Everything starts with the VectorVest composite. And it gives you explicit market timing signals. The market timing graph is your key to success. Follow the signal that best fits your investment style. I know it says that best fits your investment style, but follow the signal that is suitable or that it makes sense for the portfolio that you're managing. I'll go back to, hey, let's manage different portfolios. Let's be well-rounded. Swing trading, options, retirement, you know, more of a successful investor. And that's why in all of our coaching groups, we manage different portfolios, because we know, hey, if you're a swing trader, there's a different types of stock selection that you're using and money management that you're using to manage those positions. Don't put swing trading or short-term stocks in with your long-term investments. Kind of muddies the water a little bit, you might get confused. Allocate the money differently and manage the conservative portfolio using a signal like the DEW with a confirm call. Manage your swing trading portfolio, maybe using the RT kicker combo because you're buying stocks when the market's rising and shorting or buying contra ETFs when it's falling. Okay? All right, guys, thank you very much. I'm going to bring Ray. Ray's going to come up before Glenn. Thank you, folks.
Thank you, Jerry. We're starting to build the layers. Can everybody hear me okay? We're starting to build the layers off of that foundation. So far we've talked about analyzing the stock, finding good candidates you may consider. Jerry just laid the groundwork for the different market timing signals. For some of you, that it may be a little confusing. There's a lot of signals. But as he said, there's faster signals. Some are more prudent, and then become more conservative signals like the DEW or the confirmed calls. Now we're going to start putting it into practical application. Okay, so for many of you, this was a good review. For some of you, this is brand new ground we're cutting. But now we're going to take that next step, and Glenn is going to come up and show us how to make money the easy way and start putting it into a practical approach, step by step by step, you know, just having a methodic approach to making money. And we're going to build off of that as we go, especially into the afternoon with lunch. When we get into retirement, we'll focus on those retirement signals that you should look at. So now it'll all start coming together to make more sense. So Glenn, I'm going to bring you up right now, and you can take it away with making money the easy way.
1, 2, check. Hi. No, I just said hi. Okay, there we go. All right. So, man, y'all need to be as awake as I am. I've had about 6 cups of coffee, so if you're not that, you know, it's all right. Where am I at? I'm of the mindset. Break. I'm sort of kind of the mindset of, yeah. I'm going to have the slides. I want everybody to close their books for the time being. All right. I'm a jealous guy. I want your attention. This is practical application, and I think that this is where the rubber meets the road. All right. This is really where the rubber meets the road. You guys will be able to watch the recordings. This is where the rubber meets the road, and the practical application is what makes or break you. Right. This is something I do want you to write down. A disciplined investing puts you on the path for financial freedom. Disciplined investing. How many of you, take personal inventory, how many of you invest by the seat of your pants? Don't raise your hands. I want you to think about that. How many of you invest by the seat of your pants? You see something on TV and somebody says, yeah, go, you like this stock, go buy it. You say, okay. And then the next time you're in that stock and the stock's going down, you go, darn. So, with that being said, how many of you, and I want you to raise your hands, how many of you look at investing as your personal business? Raise your hand. All right, now, for those of you who didn't raise your hands, I'm not going to berate you, not yet, but you need to, because as an investor, as a business owner, there's things you need to do to have a successful business. If you got people that are just lollygagging and ain't making you no money and you keep them on, your business is going to fail. So what do you got to do? I got to make the decision to decide who I want to keep and who I don't want to keep. Well, you know something, when it comes time to buy inventory, you got to know when to buy inventory. Oh, that's important. This is cyclical. This is the time to go buy it. This is not the time to buy it. So your business plan is so important that, and if you're looking at your investing as a business plan, this is making money the easy way. And if you don't got a business plan, you need one. And if that's the case and you don't have one, you need to walk away within the next 2 days with a business plan. It really is designed around about when to buy, what to buy, when to sell. That's it. If your business plan is more extravagant than that, that's on you. But sometimes you got to take you out of the equation and put your system in and trust it. That's what we've been doing for all this time. You trust what you've got. Guys, you guys are ahead of the curve with the system that you have. Whether you believe it or not, you are. Nobody does what we do. People ask me, who's your competition? We ain't got none. Nobody does what we do. People will tell you on YouTube, hey, I got a trading system and you got to pay me $50,000, $11,000 to get in on it. Folks, we got trading systems in there that are part of what your subscription is. Well, if you want to come to this seminar, you got to. All right, listen, I told you I was jealous. So next phone that goes off, you're going to automatically buy the URS. That's about $11,000. All right, so I'm just telling you that ahead of time. All these phones going off, ain't nobody said nothing, but I am. All right, I want your attention because this is that important. All right, so where's the thing? Dagnabbit. Did somebody take the clicker? No. All right. It's not going to, there it is. So, in regard, pineapple, in order to know what to do, keep it simple. Focus on these 3 key elements. Build a watch list, read the graphs, heed the color guard. I made it even simpler about knowing when to buy, what to buy, when to sell. But this is pretty much your little roadmap of what you need to do when trying to make money the easy way. How many of you have gone through the process of making a watch list of your stocks as a brand new subscriber in the software? Oh man, for those of you who didn't, you need to, because that's going to get you to understand what you really got and what you ain't got. And sometimes the stocks that you think you love are the ones that are hurting you the most. But this is where we reveal to you not what you want to hear, but what you need to hear. And everybody is out there trying to coddle you into subscribing to them to tell you what you want to hear. And that's the worst thing you can do. Build a watch list. And guess what? I'm still not telling you what you want to hear. I'm telling you what you need to hear to make the real decisions to clean up your portfolio. Read the graphs. Why? Because a picture's worth 1,000 words. Man, this stock is going to do good. When? I don't know, but it's going to do good. And then you incur the losses, and then you say at some point, somebody says, you need to sell that. Nah, I don't need to sell that. Oh, it goes down another 10%. You need to sell that. No, I can't. I got it. This dude told me it's going to be good. And at some time when you're down 30, 40%, what do you say? I can't afford to sell it. Well, can you afford to effectively still hold it? Well, it's not a loss until I sell it. But it's money that you can't use to put into a better position. It's the thinking. It'll be fine. And then 5 years later, I told you it was going to be great. Really? Okay. Heed the color guard. As Jerry just said, knowing when to buy low and when to buy low and sell high, market timing. There's a lot of people out there, even on YouTube, I'm looking at YouTube, even on YouTube that don't think you can time the market. Folks, we've been doing it for over 25 years. We got to be doing something right and it's got to work. Or else this many people wouldn't be sitting in this room right now and almost 2,000 people wouldn't be watching it on YouTube right now. Market timing is real. We don't predict. We keep you on the right side of the trend. How many people have had their bacon saved by our market timing? And the ones that ain't, you know why? Because you're putting a little bit too much of you and not putting enough of the system. You got to have a system that works and you got to trust it. All right. So, watch list instantaneously gives you the answers to making better investment decisions. Better investment decisions. Not what Joe Schmo is telling you is working. Or because the stock goes, how many times have you seen this? The stock goes up 200%. You go, man, I'm getting into that. And then the people who made all that money on that are going, hey, come on in. Let me take your money. better investment decisions, not always flying by the seat of your pants. Oh, I just talked about that. That's why you got a plan. And that's why you trade your plan. Plan your trades, trade your plans. And sometimes you may get a little hurt along the way. But you know something? That's real. If I showed you a system that just made money all the time, I'd be a little nervous. Real market brings upon real life decisions in what you do. Sometimes you got to stay the course, okay? Create a watch list of the stocks you already own so you can start separating the winners from the losers. I don't think that anybody who has not made a watch list of their stocks really understand the stocks that are hurting them and why. All you know is that I know this stock is going to go up. The problem is when. Rank analysis. We do the work for you. And that's the important part. Not only do you have a system you can trust, you've got a system that does the work for you. You know what we like, and I use this a lot. We're like the Dow scrubbing bubbles. We work hard so you don't have to. But it's real. We do the work. All watch lists are automatically ranked by VST. That's our master indicator. We track over 9,000 stocks. How do you know which ones you want? Well, let's use the system, let's use the tool that I've invested in. Talking about that, how many of you have annual subscriptions to the software? For everybody's hand who's not up, you need to have one. Number one. Number two, we've given I got to put my sales hat on for a second. Number two, we've given great prices for those. You guys need to take advantage of it. If you're on an annual subscription and you haven't, and you understand this stuff, you haven't yet, you need to take advantage of it. Because once we leave, it goes bye-bye. It's like an option. Ron talks about options. They go away after we leave. So don't call me up. Hey, Glenn, I know you. I saw you there. You look great. I like your suit. Can I get that deal? No. So I'm just telling you that ahead of time. All right? The best stock, so I'm just telling you that for everyone who does not have an annual subscription, you need to consider it. It's a great way to go. All right. The best stocks are at the top of the list. The worst stocks are at the bottom of the list. Favor buying the stocks at the... Folks, that's simple. That's easy. Out of 9,000 stocks, we can show you what stocks have the best combination of value, safety, and timing. If I get all a little hopped up, I'm sorry, I'm starting to sweat, but it's all that coffee. I had a lot of coffee. I really did. Weed the stocks off the bottom of the list at a comfortable pace. That doesn't mean all of the stocks that are hurting your portfolio, you go sell them right away. Weed yourself. That's what it's called weeding. When you cut your garden, you don't just cut all the weeds at one time, you weed the garden. You weed your portfolio. Read the graphs. Favor smooth, steady, rising price, steady. Man, that's easy. Look at the graph. Is it moving from the bottom left to the top right? Now, if you're in a stock that's a little bit more volatile and your investment style is, I don't like that volatility, guess what? It's telling you the story. That's not a stock that you really want. You may be making money in it, but with that volatility, you're going to be not sleeping well at night, as David talked about. You need to be able to sleep well at night, knowing that you have stocks that steadily rise in price. Sometimes in a falling market, 80% of the stocks in the market move with the trend of the market. So keep that in mind. All right? Heed the color guard. The daily color guard is the precise system of timing the market. Folks, we time the market. We will get you in and out at the right times. Now, I get this question asked a lot, especially on the YouTube channel. Do I like oil? I've given my insight on oil. I've looked at the VectorVest system in regards to that information as well. On paper, I still like oil. But if the system is saying it ain't the right time, it ain't the right time, no matter what you think, no matter what I think. That's why you use the system to be able to let you know what's going on. Look at the graphs. Look at the market timing. Is the market timing telling you that it's okay to buy stocks? How many, and you can raise your hand if you want. I think Mark's going to raise his hand. How many of you think that you're smarter than the market? There you go, Mark. All right. Let me tell you something. How many people watch NCIS? Do you want to get denozoed? That's when Gibbs walks up to the back of DeNozo and smacks him in the back of the head. You don't want to get DeNozo. Market timing, heeding the color guard. We give guidance every single night. How many people watch the daily color guard report? Everybody's hand should be up. We put a lot of work into those color guard reports every night. Folks, it's a simple way to recap the day and prepare you for the next day. Heed the color guard. There's the guidance in the color guard. As a matter of fact, put me on the home page. Put me on the home page. Folks, it's right there on the home page. You open up the system, what more do you want? What more do you want? So those positions that you're in, what does it say? VectorVest advocates caution when buying stocks at this time. It doesn't mean to go back up the truck. What does it mean for the positions that you have? Manage them. Does it mean to go add on new positions? Do it with caution. That's like coming to a yellow light. What do you do when you get to the yellow light? You slow down. What do you do in your portfolio? You slow down. I'm from New York. We speed up. But I'm not telling you from an investing perspective to speed up. The guidance is there. We're one tick into the green. Why are you talking about caution? Well, we're talking about caution because nice up day, but what does one day not make? That's absolutely right. So the guidance is right on point. Oh no, well, the guidance may be telling me to be cautious, but the market's up. Okay, go ahead. With the high VIX, what do you think has a possibility of happening tomorrow? And you sit back and go, exactly. Caution means just that. We give you that. When I'm looking at the color guard, part of looking at is looking at the color guard. What's the first thing that catches your attention? There's two things that I see there. What's the first thing? What's the predominant color? Still, don't back up the truck. Well, think about it. This is a business, and I'm trying to be able to move out and do something brand new in my business. What is this telling me? Just slow down, folks. Well, your investing is your business. What do? Slow down, folks. If you're not looking at your investing as a business, you're hurting yourself. As a business, I'm getting the information that I need to make the next strategic move. Yes. Somebody asked the question. Oh, that's awesome. Yes.
What's the batting average of the color guard?
When you say the batting average, the question is, what's the batting average of the color guard? I don't know how to answer that question because I don't know what you're trying to get me to gauge. The color guard member is quick. Today we could have caution. Tomorrow we could have don't. Tomorrow we could have buy. So it all depends on what's going on in the market. But when I'm looking at overall from a color guard perspective, these colors, the predominant colors will, if you look at a market timing graph based on this stuff, the market should be doing a little bit of a consolidation. So you tie the color guard in with a market timing graph, that'll get you a better answer. I haven't done that, so I can't answer it the way that I think you're asking me. But do I feel comfortable using it? Absolutely. Absolutely. The second thing is I see all three colors being represented in the color guard. The market's having a hard time what? I almost fell. Having a hard time of really discerning a real trend. Well, the caution backs that up. When the market's good and everything is great, color guard is green. Boom, the market timing backs that up. So the batting average, I think that it's designed to help you in this time to know what to do from a management perspective. It's not telling you to be long, it's not telling you to be short, but it's telling you right now, caution, manage the positions that you have. That's the best way that I can answer that question. All right? All right, so, yes?
I understand that this is being moved by all the activity of the 9,000 stocks.
Right?
Let's say there's 5 million shares or 50 million shares traded today. What percentage of that 50 million is being traded by Joe Blow, us, and what percentage is being automated traded by the big houses?
So the question is, with the market and looking at the stocks, 50 million shares being traded, how can we discern who's doing what? I'm thinking that The majority of the trading is always going to be done by the big trading houses. We as retail investors have hardly enough moxie to move the market. The markets are being moved by the big money moving markets. All right, so a higher percentage being done by the big boys. And we're just, and I answered that question because a lot of people say, when I go put my order into the broker sees my order and gets me out and then the stock's price goes up. Nope. It ain't you, unless you're Mark. It looks at Mark's order and gets Mark's out. Unless you're Ravi. Ravi, where you at? Ravi's somewhere. Well, he was somewhere. He's got a stock that he likes and that kind of stuff, but it's not us. It's not us that moves the market. Yes, I'm going to take one more question before I move on.
That's the reason to get on the right side of the track.
I agree with that.
Right there.
Well, amen. Hallelujah to that. I'm with you. All right. So I am not going to take any more questions until I'm done. On the break, I'll be able to answer anybody else's questions. Got to keep moving. All right. So the three main things, as I mentioned, is build a watch list, read the graphs, heed the color guard. So I went through, and we're going to come back to that. I went through, and I wanted to get a feel of stocks. We're going to build a watch list. We're going to do it on the fly. Do me a favor, Jim. Go to the Viewers tab, and we're going to create a watch list for Tampa. And we're going to go to, I don't know where we're going to put it. Put it in a watch list viewer. Do we have a Tampa? We have it. What is? I can't read that. Good Lord, have mercy. No, which one is that? My watch list. Can we create a group? Create a group, just call it Tampa. And guess what? Going forward, if we take this computer, it'll be the new watch list for Tampa. Just call it Tampa 2023. And then under that group that we just created, Jim is going to create a new watch list, and we're going to call it My Stocks. So I went through and I asked certain people in the room what stocks they wanted. I had to do it that way because I was going to say, hey, if you raise your hand, I'll call you. But I knew somebody was going to call out and go, I'll be like, no, you're in timeout. So I didn't do that. All right. Let's go look at the stocks that I have. Jim, put these in for me. CPRX. Jim's going to build this watch list. And for those of you who haven't done this, this is how simple it is. We're doing it on the fly. Practical application. Put in ConocoPhillips, COP. Oh, here's another one this came from YouTube. Zim. How many of you have traded Zim? That dividend is no joke, isn't it? But then they take a lot of it.
Just don't be holding options because it doesn't adjust.
See, again, but we're going to take a look at the stock. Put in DRV. That was for Ravi. I don't know where he went. PPS. Someone gave me PPS. Let's go put in Mullen. EV space. MULN. PPS. It doesn't come up. Somebody gave me that. Sigh. Huh? Oh, apps. Oh, APPS. There we go. Put in, did you put in Mullen, MULN, in the EV space? All right, MULN. My fault, sorry. I'm moving a little fast. Told you, that's all that coffee. We did ConocoPhillips already. CB. That's not there either. It is? All right, put in AMD, Advanced Micro. Who gave me this? Riot. Give me that crypto. Yeah, I told you I was going to call you out on that. All right, put in Caterpillar, CAT. And CPRX I had twice. All right, we're missing one. Nope. No. We're missing one, and everybody in this room knows what stock we're missing. What stock are we missing? Absolutely. You guys know me well. This is a family. I love you guys. All right. So whether these are stocks that we own, whether these are stocks that we're interested in, it's just that quickly we've built that watch list. Jim, you going to change the, thank you. First thing you look at, some stocks are hold, some stocks are buy, some stocks are sells. But we got them. And somebody told us to buy them, and we're holding this. Why? Because Long term, I know that this is going to be a good stock. This is where the rubber meets the road. This is where the more well-informed decisions are made. These are your employees in your business. Which ones are good? Which ones are not so good? Not what you want to hear, but what you need to know. And that's the value add that VectorVest brings. We take all of that data and we give you usable information. Folks, you listening to that? That's usable information. All right, so the first thing the list does, remember, it does the work for you. It's sorted by our master indicator, VST. So the stock that has the best combination of value, safety, and time is at the top of the list. Whoa, CPRX, that's a good-looking stock. David walked you through the analysis of looking at value, looking at RV, looking at RS and relative time. And I'm not going to recap that, but now that you know that, you apply it to your stocks. Let's go see CPRX, RV 1.56, relative safety 1.41, and it's in an uptrend. Woo! That's an employee of the week. For your business, that's an employee of the week. What's next? Caterpillar, 247, 251, fairly valued. Relative value, good. Oh, relative safety. So this is a guy that comes to work. He's got good upside potential, but maybe sometimes he comes in a little late for work. Well, relative safety tells you the stock's ability to, from an earnings perspective. So, all right, but it's not a bad guy. Is it an uptrend? Yeah. So right now he's up. Earnings growth, 19%, positive earnings. All right, ConocoPhillips, 119, value of 174. Just click on it for me, please. There you go. Oh, that might, that'll work. Fundamentally sound, relative value, relative safety. David did a great job of explaining that we give the fundamental analysis with the insight of technical analysis. What's hurting it? RT's below 1. It's a good, solid company, and I get this question asked a lot. Hey, I own this stock. Should I be getting rid of it? Well, is it fundamentally sound? Yes. Is it going up in price? No. What more do you want to, you just want to hear Glenn say, well, you need to get rid of it? You don't need it. You don't need me for that. You got this system that you can trust to give you that information. Oh, man. Remember, this is making money the easy way. This is a simpler way to be able to ascertain and discern, I'm not using Glennisms, ascertain and discern which stocks you need and which ones are hurting you. Next one, CB, 227 with a value of 206. Well, it's overvalued. It means people are willing to pay a premium to own it. Upside potential, it's above 1. Relative safety, it's above 1. It's in an uptrend, and it's a buy. But I'm looking at that RT. I'm looking at that upside potential. I'm looking at that relative safety. A graph is going to give me more information. Next stock, real quick, AMD, 67, 73, undervalued, good upside potential. Should outperform a AAA corporate bond by 42%. Good safety, ooh, it's going down in price. So then you sit back and you say, man, this whole semi space is rocking and rolling. I'm in a fundamentally sound stock. But what's it doing? It's going down in price. You know, getting that information of knowing, even though it's fundamentally sound, that maybe I've got to, weed it out. It's a hold. I got to weed it out of my portfolio. Sometimes it hurts to make that decision. But it's a decision that's got to be made. Why? Because this is your business. Why is that important? Because this is your business to make money. And if the stock is not going up in price, that's hurting your business. That's simple. Do you guys know that women make better investors than men? Do you know why? Guys are born with egos. We don't always want to admit when we're wrong. That's real. Whereas a young lady will look at that and go, listen, it's going down in price. We need to get rid of it. That's real. Because that's us putting us in the equation and not using the system. the system that's designed to help you to run your business. If you pay for some sort of a CRM system and you don't use it, how is that helping you? Folks, this is your business, and these are the techniques to use the VectorVest system to make money the easy way. Take you out of the equation and use a system that you trust to do the work for you. Go to the next stock. Digital Turbine, trading at 15, 19.25 value. Upside, good. Oh, not so safe. And it's going down. Oh, 2 out of 3 are not so good. It's got great upside potential, but what does that mean? Sometimes it's not a good time to be in a stock at this time. So what do? You wait for the right time. Timing is everything. Next stock, Apple. As much as I love Apple, how about this? I may love Apple, but I'm not in love with Apple. Why? Because stocks don't love you. And a lot of us are in stocks that I know it's going to go up long term. But what about the now term? Is it growing your business now? Apple is trading at 127, value of 90. It's overvalued. Upside potential, flat. Safety, still makes money. What else is hurting it? RT is below 1. So as much as I may love Apple, I know when to not be in it. Why? Because I've got a system like VectorVest who's weeding the stocks that I should not have, no matter what I think about the stock. Get out of your own way and let the system do the work. We do the work. Mark, if I gave you 250 stocks and told you to pick 5, how are you going to do it? I know that, but I'm just asking if you don't have the VectorVest system, your answer was supposed to be, I don't know. Excellent answer, Mark. That's why you need the VectorVest system. You just took all the thunder out of that. All right, that's why you need the VectorVest system, so I can take 250 stocks and have an easy way from a VectorVest standpoint to know which ones are the ones that I need to consider. All right, the stocks that are selling, and look at that. Not only is Apple going down in price, it's a sell recommendation. That's so important. If the stock that you own gets a sell recommendation in the VectorVest system, holding it is at your own peril. But I know the stock is going to go up. Is that a good business decision? Start asking yourself that question. Is that a good business decision? If the answer is no, move on. All right. So do me a favor, sort it by recommendation. So the stocks that have the buy recommendation, I'll do it again. Those stocks that have the buy recommendations, you're pretty okay on those. Just make sure you manage them. Especially when the guidance says right now, caution is advised, manage those. Start paying attention to the holds. They're a hold because they don't meet all the criteria to be a buy recommendation. What I really need you to pay attention to are the stocks that are sell recommendations. Those are your bad people in your business. Those are the bad stocks that are in your portfolios that are hurting your portfolios. As a business, I need the stocks that are helping me make money. So this process right now, one, is really simple to do, but everybody needs to do it to start to understand. I'm going to take your question after when we get into the break, all right? But I will answer your question. From the making money the simple way, this is the most important thing. And these stocks, remember, you don't have to cut them all at one time. Start cutting them. Start cutting them. Start cutting them. All right? I'm going to leave those there for the time being. Put me back into the slides. Going back to heed the color guard. Once you start to weed your garden, you need to find stocks to get into. We'll probably start looking right at the stock viewer. Looking at the stock viewer to start helping you find stocks to get into. But go to the next slide. The color guard functions like a traffic light. Remember, all that yellow, slow down. If those stocks that are the holds, that you still want to hold on to, manage those stocks. Every stock in the database has a stop. Everybody asks me about when to get out of a stock. Every stock in the database has a stop price. It's a 13-week moving average adjusted for the fundamentals of the stock. Now, a lot of people may not like it because it will guide down. If the fundamentals are good, but getting weaker, it will guide down. And people say, I don't want to do that. That's fine. There's a lot of other different ways. But from a simple, remember, this is all about simplicity. From a simple way of having a stop price and when to get out of a stock, every stock's got a stop price in the software. All right, color guard. Green's bullish, okay to buy. Yellow, neutral, like we're at right now, caution is advised. Red, bearish, do not buy stocks. Notice it doesn't say go sell your stocks. It's not what it, because selling is a personal thing, and everybody sells for different reasons at different points. But it does mean don't buy stocks. I don't care if the stock's going up 345% that day. It's up to you unless you're that aggressive. The color guard does not tell you when to sell. Go to, I got the thing. Go to the next slide. Next slide said, did I miss that? No. 3 yellow lights in the color guard, buy with caution. Do not buy at this time. Primary wave, ooh. Primary wave dictates the action because it's the fastest indicator we have. It will generate, as Jerry showed up on the graph, once you put on the primary wave, it generates a lot of calls. If you look at all of those calls and go, whew, that's too much for me, then don't trade it. You don't have, we're not telling you that you got to trade it because it's up to you. Man, when we do the work and you reap the rewards, when you do the work and you reap the rewards, that's what it's all about. Find a trading timing signal that fits you. Become a green light buyer. That's easy. Even so, green lights should not be used with impunity. All green lights are not alike. Green lights, which appear when prices are low, offer better opportunities to make money than those that appear when prices are high. Jerry put on the green light buyer, he put on the kicker, and he put on the kicker combo. That green light buyer is an excellent way to tell you when it's okay to buy stocks, gives you down signals when it's not okay to buy stocks, and gives you yellow signals where you just sit still. All right? That was done by Dr. Bart DeLito, and then the stock viewer is the place where you start to go find new stocks at the right time. Do me a favor, go into the software real quick. Let's go into the stock viewer. So now we're going from our watch list into the stock viewer. Over 9,000 stocks. When it comes time to replace stocks at the right time from a market timing perspective, this is where you start. Again, the rank analysis is done for you. All of the rank analysis is already done for you, and you can sort it by however you feel comfortable buying stocks. If you're looking, because you're a little bit more conservative, you want to sort the list by relative safety. Sort it by relative safety. Whew. 9,000 stocks now bring you the safest stocks at the top of the list. All right? Say again? Okay, there we go. And now you look at these are the safest stocks in the database. You want to find the stocks that have the biggest opportunity to outperform a AAA corporate bond over the next 1 to 3 years. Sort the whole list of over 9,000 stocks by relative value. Folks, 9,000 stocks, the information is returned that quickly. This is your way of looking at, this is your zip recruiter for your stocks to find new candidates. Right there. Woo! Relative values, but you know what? A lot of this is because a lot of stocks are getting beaten up. They're getting beaten up, but they've got great upside potential. I'd be careful with the sells. What does that help to back up? That this may not be the right time to be buying stocks right now. The system, by way of rank analysis, is telling you the same thing. Whoo! So it's not, none of this is just done willy-nilly. It's done to give you the information that's usable right now. All right, and let's sort, let's go put it back on VST, the master indicator. Again, out of all of the stocks, over 9,000 stocks, these are the stocks at the top of the list that have the best combination of value, safety, and timing. These are your superstars. But even if they're superstars, if the guidance is saying, caution, be careful, I need to look at the graphs of these, see if they're moving up. I got to look at the analysis to see what it's been doing. This is the practical application that if you haven't done, you need to do. This is real world. This is what makes the difference between having a winning portfolio and not. Take me back to the slides. Watch the daily color guard report for expert daily advice, guidance. Not advice, it is guidance. It is guidance. Before anybody walks over, you said to do, it's guidance. And we've got a lot to put into the guidance. This is all the information you need to know to become a successful investor in VectorVest. Folks, this is preliminary to a talk that I will give tomorrow about being a successful investor. This is the basis. This is the easy way. You need to take you out and use the system that you've got. I'm telling you, you guys are ahead of the curve when it comes to having a system to help you. Sometimes it may not feel it, but you know why? Because you did something that the system said you shouldn't do. How many of you have done that? Before I get off the stage, how many of you have gone against the guidance? That's real. That's why I asked the question. That's real. The guidance is there for you. We are there for you. Those people out there don't like you. They just want you to buy something. You know who does like you? We do. And we're here for you. The system is in your, it's the plethora of information at your fingertips is phenomenal. It really is. So folks, that's making money the easy way. That's why I wanted your attention. Notice no phones rang? Yeah. All right, so I'll answer your question during the break. All right, I'll do that for you. I'm going to bring Ray up. The cool thing is that I'm the one that's going to bring you up before. I should have kept this for another half an hour so you didn't eat, but never mind. Anyway, Ray, come up. Thank you for letting me have your time.
Wow. Glenn is a passionate speaker. We're glad to have him here. And that passion, each one of the presenters carries a little bit different approach to everything we do, but there becomes a time in our lives, most of you who have been here for quite some time have had that aha moment. And that aha moment is the moment you realize that you can do this, that you can gain financial stability on your own. You know, when Dr. Bartolito started this entire endeavor, he said, why am I paying a money manager to lose money? I could lose money on my own. And that's where it all started. And, you know, we've all worked for VectorVest for years. Glenn, 20 years, 18 years. I've been here 14 years. You know, most of our staff has been here even longer than myself. The reason is we've all had that aha moment. The same with many of you that are in the crowd had that aha moment. What Glenn just talked about is the base, very easy way to make money. And if you think about it, he mentioned it as a business, but when you create a watch list, if you're brand new to VectorVest, the very first thing you need to do is build that watch list. Our watch lists are not like any other watch list where it's just a list of stocks, you know, ranked by alphabetical order. It really gives you that insight. And if you think about it, the stocks at the bottom of your list, when you sort by recommendation, or if you sort by RT on the stocks that you own, the stocks that are hurting you are at the bottom of the list. So think about it this way. The stocks at the top of your list, let's say they're giving you a $100 bill, but the stocks at the bottom, they're pulling a $100 bill out of your back pocket. Okay, so if we think about it, if we can start cutting those losers, and it doesn't happen overnight, but if you can manage that, it's very simple to do, But if you're always rotating those losers into top VST stocks, eventually you end up with a baseball team. I'm sure Jim could probably tell you the best baseball team in history, but that's the objective. In that simple methodology and approach will change your life. And I don't know how many times I've talked to people who came to me and said, that approach changed everything. And it's very simple. Weed the losers, find great replacements when the market is in your favor. We haven't had a lot of opportunity where the market was in our favor this year, okay? But it's our jobs to make sure that you guys make money and you do it consistently. The institution, Wall Street, they want you to buy. That's not the name of this game. The name of this game is to see another day, use factual, trustable information, and have an easy approach to relieve the stress that's involved. That's what this talk is all about. It's the first practical layer of using the VectorVest system, and we're going to build upon that much more. Really quick before we break to lunch, and the people in the room, please, when we cut the stream, I've got one more message for you. But all of those of you at home, we've been getting a lot of chats, and product support has been getting a lot of calls about the offers. You can go to vectorvest.com/offers. That $100 voucher that we have is redeemable for one of the annual group coaching packages or one of the 4 courses highlighted that we have. The concept that Glenn just talked about was all about the Successful Investor course. So if you are interested in what Glenn was talking about and you're relatively new or you just want to gain financial stability the easy way, the Successful Investor is the course for you. Okay? And you can also apply that $100 voucher to one of the courses or the annual group coaching renewals. For those of you, especially those of you at home online, many of you renewed your base end-of-day, intraday, or real-time subscriptions last year during this event, so your renewal's coming up. For everybody who commits to an annual subscription or renews an annual subscription over the next 2 days, will get access to the recordings of this for 12 months. Otherwise, we're going to leave it on YouTube for about a week. So go ahead and place those orders. Some of you are legacy subscribers paying a lower rate than you're going to see on the offers page. Go ahead and fill out the order. It's going to come through to our billing team, and one of our billing specialists will make sure you get the lowest possible price that you've been paying. I'll have a message after the break for you in regards to this. Chat into us. We have our product support team that's committed to working long hours through the entire weekend to make sure that we get those orders in. But if you are renewing a group coaching of any sort, get that in now so you can take advantage of your $100 savings certificate. The orders will be processed in the order in which they're received. So we have people standing by, and I know we've been getting a lot of questions. We'll keep an eye on the chat. If you have more questions, we'll keep the answers coming in. So we're going to take a quick lunch. We'll see you back after the lunch. And for those of you in the room, please stay for a minute. We'll see you in a little bit. Hello everyone. I just want to spend a few minutes covering the special offers we have for everyone in attendance at the two-day investment seminar. As you already know, we are offering a $100 savings certificate that can be applied to either one of the 4 courses on the offers page or one of the annual group coaching packages. The discount will then be applied on our end when one of our billing specialists processes your order. We are also giving the 2-day video recordings to anyone who either renews an annual subscription of any kind or upgrades their monthly subscription to an annual subscription, including the coaching packages. Those who renew a base subscription of end of day or intraday, real-time or group coaching package will receive those recordings for 1 year that will be put into your university in about a week or so from now. If you're renewing the same annual subscription that you are currently on, we will charge you for another year at the discounted rate and extend your subscription out another 12 months from what you currently have remaining. If you are upgrading to a new subscription, like a coaching package, we will prorate the subscription that you currently have and discount your new purchase by the amount of your existing prorate. In this case, your subscription would be good from 12 months from the time we enter your order. Our billing team will enter orders throughout the week, so please be patient while we are aiming to have these orders completed by this coming Thursday. If you are a legacy subscriber paying a lower rate than you see, you can fill out the order form and our billing specialist will make sure you are charged for what your current rate is when they process your orders. To see all the special offers and download the slides for the 2-day investment seminar, go to VectorVest.com/offers. At the top of this page, you will see an image of the discounted voucher good towards coaching groups and featured educational courses. And no, you do not have to print or do anything with this voucher. We will handle all the discounts on our end. Below that, you will see the button to access the group coaching packages. If you click the Learn More button, you will see the special pricing listed for each coaching package. Just an important side note, if you're currently a real-time subscriber, you will notice that the Successful Investor Coaching Package is the same exact price at real time, which is $1,295. If you purchase the Successful Investor Package, you will be able to apply the $100 voucher. This is a no-brainer option for those of you looking to renew or upgrade to real time. When subscribing to a coaching group, you will also get access to any coaching groups below that level you subscribe to. For example, if you subscribe to the Swing Trader Coaching Group, you will also get access to the Retirement and Successful Investor Coaching Groups. If you scroll down this page, you will see a list of all the groups and the software that is accompanied by each group. If you go back to the main offers page, VectorVest.com/offers, you will see the VectorVest 7 base subscriptions next to the coaching group offers. If you are just wanting to renew your end of day or intraday subscriptions, or move from a monthly to an annual subscription, you can use this link. Another special note, if you're a legacy subscriber paying less than what you see offered, you can still fill out these forms and we will honor your discounted rate when our billing specialists process your order. Remember that everyone who upgrades or renews to an annual subscription of any kind will get the recordings to the 2-day for 1 full year. If we scroll down this page a little further, you will see the special courses that we are offering at a discount today. If you purchase any of these courses, you will also be invited to the next set of live mastery sessions we will be holding. First, we have the Successful Investor. The live mastery sessions for this course will begin in just a couple of weeks. And this course will teach you how to buy and sell stocks to safely and consistently average 15% growth per year. Next, we have the Retirement Portfolio Transformation. The live mastery sessions will begin in mid-February. This is a 3-part management method to grow and protect your retirement portfolio. Then we have a brand new course, Uncovering Trends, Technical Analysis the Easy Way. This course was developed by Mr. Jerry D'Ambrosio, Mr. Stan Heller, and Dr. David Paul. This is a practical approach to trading the most popular and widely used technical indicators. This course will be activated in the university and modules will be released along with live mastery sessions at the end of February. And last but not least, we have the special offer for the options paycheck that will begin in the beginning of February. This course is designed to help generate 3% per month trading options. That's 36% per year. And if you go all the way to the bottom of this page, you will see the link to download all of the slides for all of the presentations. If you have any questions at all, feel free to chat them into us. Thanks a lot. I just want to spend a few minutes. Hello, everyone. Hello, everyone. I just want to spend a few minutes covering the special offers we have for everyone in attendance at the two-day investment seminar. As you already know, we are offering a $100 savings certificate that can be applied to either one of the 4 courses on the offers page or one of the annual group coaching packages. The discount will then be applied on our end when one of our billing specialists processes your order. We are also giving the 2-day video recordings to anyone who either renews an annual subscription of any kind or upgrades their monthly subscription to an annual subscription, including the coaching packages. Those who renew a base subscription of end of day or intraday, real-time or group coaching package will receive those recordings for 1 year that will be put into your university in about a week or so from now. If you're renewing the same annual subscription that you are currently on, we will charge you for another year at the discounted rate and extend your subscription out another 12 months from what you currently have remaining. If you are upgrading to a new subscription, like a coaching package, we will prorate the subscription that you currently have and discount your new purchase by the amount of your existing prorate. In this case, your subscription would be good from 12 months from the time we enter your order. Our billing team will enter orders throughout the week, so please be patient while we are aiming to have these orders completed by this coming Thursday. If you are a legacy subscriber paying a lower rate than you see, you can fill out the order form and our billing specialist will make sure you are charged for what your current rate is when they process your orders. To see all the special offers and download the slides for the 2-day investment seminar, go to VectorVest.com/offers. At the top of this page, you will see an image of the discounted voucher good towards coaching groups and featured educational courses. And no, you do not have to print or do anything with this voucher. We will handle all the discounts on our end. Below that, you will see the button to access the group coaching packages. If you click the Learn More button, you will see the special pricing listed for each coaching package. Just an important side note, if you're currently a real-time subscriber, you will notice that the Successful Investor coaching package is the same exact price at real-time, which is $1,295. If you purchase the Successful Investor package, you will be able to apply the $100 voucher. This is a no-brainer option for those of you looking to renew or upgrade to real-time. When subscribing to a coaching group, you will also get access to any coaching groups below that level you subscribe to. For example, if you subscribe to the Swing Trader coaching group, you will also get access to the Retirement and Successful Investor coaching groups. If you scroll down this page, you will see a list of all the groups and the software that is accompanied by each group. If you go back to the main offers page, VectorVest.com/offers, you will see the VectorVest 7 base subscriptions next to the coaching group offers. If you are just wanting to renew your end of day or intraday subscriptions or move from a monthly to an annual subscription, you can use this link. Another special note, if you're a legacy subscriber paying less than what you see offered, you can still fill out these forms and we will honor your discounted rate when our billing specialists process your order. Remember that everyone who upgrades or renews to an annual subscription of any kind will get the recordings to the 2-day for 1 full year. If we scroll down this page a little further, you will see the special courses that we are offering at a discount today. If you purchase any of these courses, you will also be invited to the next set of live mastery sessions we will be holding. First, we have the Successful Investor. The live mastery sessions for this course will begin in just a couple of weeks. And this course will teach you how to buy and sell stocks to safely and consistently average 15% growth per year. Next, we have the Retirement Portfolio Transformation. The live mastery sessions will begin in mid-February. This is a 3-part management method to grow and protect your retirement portfolio. Then we have a brand new course, Uncovering Trends, Technical Analysis the Easy Way. This course was developed by Mr. Jerry D'Ambrosio, Mr. Stan Heller, and Dr. David Paul. This is a practical approach to trading the most popular and widely used technical indicators. This course will be activated in the university and modules will be released along with live mastery sessions at the end of February. And last but not least, we have the special offer for the options paycheck that will begin in the beginning of February. This course is designed to help generate 3% per month trading options. That's 36% per year. And if you go all the way to the bottom of this page, you will see the link to download all of the slides for all of the presentations. If you have any questions at all, feel free to chat them into us. Thanks a lot. I just want to spend a few minutes covering the special offers we have for everyone in attendance at the two-day investment seminar. As you already know, we are offering a $100 savings certificate that can be applied to either one of the 4 courses on the offers page or one of the annual group coaching packages. The discount will then be applied on our end when one of our billing specialists processes your order. We are also giving the 2-day video recordings to anyone who either renews an annual subscription of any kind or upgrades their monthly subscription to an annual subscription, including the coaching packages. Those who renew a base subscription of end of day or intraday, real-time or group coaching package will receive those recordings for 1 year that will be put into your university in about a week or so from now. If you're renewing the same annual subscription that you are currently on, we will charge you for another year at the discounted rate and extend your subscription out another 12 months from what you currently have remaining. If you are upgrading to a new subscription, like a coaching package, we will prorate the subscription that you currently have and discount your new purchase by the amount of your existing prorate. In this case, your subscription would be good from 12 months from the time we enter your order. Our billing team will enter orders throughout the week, so please be patient while we are aiming to have these orders completed by this coming Thursday. If you are a legacy subscriber paying a lower rate than you see, you can fill out the order form and our billing specialist will make sure you are charged for what your current rate is when they process your orders. To see all the special offers and download the slides for the 2-day investment seminar, go to VectorVest.com/offers. At the top of this page, you will see an image of the discounted voucher good towards coaching groups and featured educational courses. And no, you do not have to print or do anything with this voucher. We will handle all the discounts on our end. Below that, you will see the button to access the group coaching packages. If you click the Learn More button, you will see the special pricing listed for each coaching package. Just an important side note, if you're currently a real-time subscriber, you will notice that the Successful Investor coaching package is the same exact price at real-time, which is $1,295. If you purchase the Successful Investor package, you will be able to apply the $100 voucher. This is a no-brainer option for those of you looking to renew or upgrade to real-time. When subscribing to a coaching group, you will also get access to any coaching groups below that level you subscribe to. For example, if you subscribe to the Swing Trader coaching group, you will also get access to the Retirement and Successful Investor coaching groups. If you scroll down this page, you will see a list of all the groups and the software that is accompanied by each group. If you go back to the main offers page, VectorVest.com/offers, you will see the VectorVest 7 base subscriptions next to the coaching group offers. If you are just wanting to renew your end of day or intraday subscriptions, or move from a monthly to an annual subscription, you can use this link. Another special note, if you're a legacy subscriber paying less than what you see offered, you can still fill out these forms and we will honor your discounted rate when our billing specialists process your order. Remember that everyone who upgrades or renews to an annual subscription of any kind will get the recordings to the 2-day for 1 full year. If we scroll down this page a little further, you will see the special courses that we are offering at a discount today. If you purchase any of these courses, you will also be invited to the next set of live mastery sessions we will be holding. First, we have the Successful Investor. The live mastery sessions for this course will begin in just a couple of weeks. And this course will teach you how to buy and sell stocks to safely and consistently average 15% growth per year. Next, we have the Retirement Portfolio Transformation. The live mastery sessions will begin in mid-February. This is a 3-part management method to grow and protect your retirement portfolio. Then we have a brand new course, Uncovering Trends, Technical Analysis the Easy Way. This course was developed by Mr. Jerry D'Ambrosio, Mr. Stan Heller, and Dr. David Paul. This is a practical approach to trading the most popular and widely used technical indicators. This course will be activated in the university and modules will be released along with live mastery sessions at the end of February. And last but not least, we have the special offer for the options paycheck that will begin in the beginning of February. This course is designed to help generate 3% per month trading options. That's 36% per year. And if you go all the way to the bottom of this page, you will see the link to download all of the slides for all of the presentations. If you have any questions at all, feel free to chat them into us. Thanks a lot. Hello, everybody. Welcome back. Can you guys hear me okay? Is that on? Joey, can you hear me? Good. Okay, welcome back from lunch, everyone. Hope you had a great lunch. We're going to get kicked off. Welcome back for everybody who's online. We're going to take it into the next evolution of the two-day seminar, starting with Mr. Jim Penna, where he's going to show us how to find the right stocks for a secure retirement. For many of us, it doesn't matter how young, how old you are, where you're at in your journey, whether you're gearing up, preparing for retirement, or you're in your retirement years, the next evolution of the two-day is going to be all about securing your retirement. So without further ado, Mr. Jim Penna.
Thank you. Thank you, Ray. Is this thing on? Check 1, 2. How's that? Good? Good afternoon, everyone. Always a tough time to talk right after lunch, because I know you guys are going to want to sit back and relax a little bit. So a couple of things before I get started. First, I know there's a lot of familiar names and faces here and probably online, but I want to take a minute to introduce myself. My name is Jim Penna. I'm the manager of retirement services here at VectorVest. I've been with VectorVest now for just about 15 years, just over 15 years. And it's been a wonderful time to spend with my friends. Jerry came on about a year before I did, so it's been a great run. Before I was at VectorVest, my background, just real quick, was in trading. I worked on trading desks for a bunch of years, starting on a very small desk for a brokerage firm and ending up at Night Securities trading on a bigger floor. So that's kind of where my background is. I took my Series 7 test back in 1992. So that's how old I am, just in case you needed to know. One important thing, though, before that, I was a police officer in Connecticut for just about 10 years. So at any time, if it sounds like I'm telling you what to do, that's kind of where it comes from. Just so you know, right? That's where I grew up. But anyway, thank you for taking the time to be here. And I'm looking forward now. I got back-to-back talks, but we're going to take a break in between, so don't worry about that. I am not going to yell at you like Glenn did. But please don't confuse that with a lack of passion for what I'm talking about. Okay, I have the same passion. It's hard to express it the way Glenn does, but I believe in what we do here. Everything I'm going to talk about today, I truly do believe in. So with that, go Glenn. I'm out of law. I'm going to keep going. I'm just going to keep going. Finding the right stocks for a secure retirement. So I'm going to talk a lot about, in my second talk, building and managing a retirement portfolio. Right now, I'm going to take to a very specific level of what we've talked about already this morning. I'm going to build a watch list. I'm going to go into this actually, we haven't gone into Unisearch yet, have we? I don't think we've gone into the Unisearch tool. So I am going to introduce that. And I'm going to use it specifically to find good quality retirement stocks. So let's go ahead and turn this thing on. For those who have followed through either the coaching group that I do or some of my other webcasts and things, you'll know I like to use quotes. And one of the quotes I like to use, it's attributed to Abraham Lincoln. I looked it up, so as far as I know, he did say it, and it makes sense to me. He said, "Give me 6 hours to chop down a tree, and I'll spend the first 4 sharpening the axe." And I think I like that quote. I'm starting it for my talk, but I think it could be the first slide of the day here, right? You're here to build a platform, to build a foundation, to be successful, regardless of it, whether it's a trading account or a retirement account, whatever it might be. Sharpen the axe before you get in there and start chopping it down. So I thought that was an appropriate quote for us. And this thing is still... No. There is not another one up here. Okay, so our first slide here, and this is very important, just generally speaking in the VectorVest program, especially when it comes to Unisearch and you're starting to look for the type of stocks for whatever your objective and your goal is. And that's really the key, right? I mean, you can search for stocks, you can time the market, you can do all these things, but for me, it's understanding that objective and that goal that you're going for. So we have what's called the strategic investment matrix. And what you'll see here, this has been around since forever, this matrix here. What we talk about is we break down this investment matrix from speculative to aggressive to prudent to finally conservative. Okay, so naturally what I'm going to focus on here is going to be the more prudent conservative. And Jer, if you hit the button there, it'll kind of, I have animations in some of my slides, so you have to click through it. Unless somebody has the one that works, you can run it up here, that'd be great. But maybe it's right in front of me. There we go. So what I'm going to focus on is the prudent investment and some conservative ideas too as we try to find these right stocks. Remember, I'm up here today to talk to the more prudent investor, okay, the more conservative investor. It doesn't mean that when we talk about swing trading and technical analysis and some short-term trading, it's not antithetical to that. Okay, it doesn't mean it's all you can do. You can allocate your portfolio to different strategic goals and objectives. So just keep that in mind as we go through. And it was definitely part of 2022, right? I'm going to talk about the portfolios. Listen, retirement portfolios, our portfolios had some drawdown. We had ways to mitigate it, and I'll talk about that in the next talk. Our dividend portfolio actually held up pretty good, but there are a lot of ways to protect, to mitigate against these larger drawdowns. So we talk about the strategic investment. I just want to say that I'm going to be focusing on prudent, conservative types of searches when we go into the Unisearch tool. Right? But being a successful investor is going to be determined, in my opinion, by you sitting down and understanding your goals and objectives. And you don't have to have just one. Right? You can allocate to some shorter term, you can allocate to options trading, and you can allocate to your investment portfolio. So being a successful investor, many of you have heard this story before, but I have to tell you about the greatest money manager that I've ever met. Okay, greatest money manager I've ever met, and it's an important story, so I want you to follow it close. So as I mentioned, I'm from Connecticut, so I'd gone back home a few years back, and I met some of my old cop buddies, and we decided to go up to the casino up in Connecticut. Foxwoods. So we go up to Foxwoods, and we're walking in the front door at the Foxwoods Casino, and as we're walking in, there's a guy kind of behind one of the pillars, and he's, "Hey, buddy, can you come here for a minute?" I figure I'm with my buddies here. I walk over. "Yeah, pal, what's the matter?" He goes, "Listen, can you do me a huge favor? Can you lend me $100? And I looked at him and I said, "What? Lend you $100? I said, "I'm walking in the casino. What? I'm going to give you $100. He goes, I said, "How do I know you're not going to take that money and gamble it away?" I go, "What are you talking about?" He goes, No, don't worry about it. He said, "My wife, unfortunately, I need to get her prescription and I need the money to help my wife. That's why I need the $100. I said, "Well, how do I know you're not going to gamble it away when you walk into the casino?" And he looks at me very serious and he goes, No, don't worry. I've got gambling money." The greatest investor ever, the greatest money manager. Anyway, let's keep moving on. So we're going to talk about the Unisearch tool. We say it's the most powerful search engine on the market today. Regardless of what your goals and objectives are, the Unisearch tool is there to help you make it a whole lot easier to find the type of stocks that you're looking for. It allows you to search for stocks meeting a certain set of conditions at a fixed point in time. Now, there are a lot of ways to use it. You can searches can be performed on stocks, watch lists, industries, and sectors. You can also search under prudent, conservative, aggressive, or speculative, whatever type of stocks you're looking for. And then you can do them by group or alphabetically. So it's a very, very powerful tool within the VectorVest program. What I'm going to focus on for the retirement-minded investor is relative safety. We've talked about it several times already today, and David Paul talked about it, Jerry talked about it, and I'm going to go even a step further with relative safety. It's defined as the consistency and predictability of financial performance. Those are the primary factors in assessing relative safety. What two better words to describe the type of stocks that go into your retirement portfolio than consistent and predictable? Right? I don't think I can think of any. So let's talk about what it entails. I'm going to talk about the searches here that go into it, and it might be the next talk where we get deeper into relative safety. But let's start here. To find the stocks, these are just 5 searches that I've chosen. These are 5, there's 5, 6, maybe 7 searches that I stick to when I'm looking into the VectorVest program. Ruler stocks, for those who know me, is my favorite search within the program. Premier growth stocks is 1A. Blue chip dividend payers, I'm going to talk about that in the second talk about the portfolio and what the blue chip dividend payer search does for you. Pale blue chips and safe and sound. Okay, these are 5 what I believe are really good searches that focus on relative safety that we can take advantage of. Now, I have them here, just some slides for you to look at. I'm going to go into the Unisearch tool in a moment and talk about the parameters that are on each one and discuss the important parameters. So let's start here. It's hard to see. The important parameters for ruler stocks, right? It focuses on relative safety. Just to make this list, the relative safety on that underlying stock has to be 1.4, which is excellent on the 0 to 2 scale in the VectorVest program. Not only that, but the earnings growth rate in percent per year has to be at least 14% to make this list. So when we talk about consistent and predictable financial performance, that's what we're talking about. And then we take the sort, which is relative safety, times, I believe it is the growth rate. Right? So that combination brings the best combination of growth and safety to the top of the list. It's found in the prudent folder, and we're going to go in and take a look at that search. What I'm going to do, I'm going to go through these slides quickly first, just to go through them. Premier growth stocks. Now, it's funny because this is a search that doesn't even have relative safety as a factor in the parameters of the search. But when we go in the search, you're going to see some very well-known, good quality companies. And here, the growth rate has to be at least 14%. And it's the sort that I really like here. It's VST times RT times CI, if I'm not mistaken. Is that right? I believe it is. So that's another great search for finding retirement-minded stocks for your portfolio. Blue chip dividend payers. This is one of my favorite searches. I actually had the honor of having it put in. I created this search. It's about as basic as you can get in the VectorVest program. It's as basic as you can get. We take stocks that are in the Dow Jones Industrials Transport and Industrials Transports and Transportation, and we take S&P 500 stocks. That's it to make the list. Not only that, the yield on these stocks has to be at least 3%, the dividend yield. And then finally, we have what we call the drip watch lists. These stocks on this list have to have not only paid, but have grown their dividends from anywhere from at least 10 years to 25 or more. Okay, so we're looking at mature, well-run, strong cash flow companies that are able to continue to pay and grow their dividends. So I love this search. We'll talk about that one. And then finally, pale blue chips takes into account dividend analysis. That is, I'm going to talk more about in the second talk, but it takes it piece by piece. So I like the way that it takes both growth, safety, and yield and gives you parameters on all of those. Okay, so these are the searches. You have them in there that I'm going to use. Safe and sound is another good one. We'll talk about that. We'll run some quick tests. Jared, let's go ahead and jump into the Unisearch tool. So from the home page, you go to the main toolbar. We go to Unisearch. And this, again, is our search engine. And you can see it defaults over here on the left. You have the search directories or the folders here, and it breaks them down. Again, there are some just labeled prudent, conservative, speculative, aggressive, and there's a lot of titles here. There's a lot of searches in the Unisearch tool, and that doesn't even include all the searches you can create on your own, right? You can adjust these, create your own, as many of you already know. So Jared, let's go ahead and go in and we'll choose the prudent folder. So we'll go to searches prudent, we'll scroll down a little bit and we'll go to ruler stocks. And here we have the parameters that need to be met, and we'll just go ahead and run the search. We'll talk a little bit about the top stocks. And what I'm going to do is incorporate part of what Glenn talked about, how you can take these searches and build your, what I call a master watch list. And you can either cherry pick through, you can choose one search, take the top stocks from one search. It's, you know, ultimately it's up to you. So what we're looking at here, boy, it is hard to see them. There we go. That makes it a bit easier. So Catalyst, we've seen CPRX come up a few times. I think when we sorted simply by sorting by relative safety, we found that CPRX was actually the top stock in the database, not just in this particular search. So this is the type of stock that you're seeing. Jeff, scroll down a little bit. How many stocks are actually in the search right now? Yeah, go more, because I don't think there's, I'm surprised if there's even 10 in here. So there's only about 10 in here. I ran the search in our retirement coaching group a few weeks back, and in my entire time here at VectorVest, I was amazed that there were like 4 stocks that came up, which is like almost like its own market timing indicator, right? So I think Dr. David talked earlier, or somebody was talking about, I think maybe it was you, talking about relative timing and relative value falling because of rising interest rates in the market. And so it's similar here. You see the relative safety numbers falling as well. You know, usually this search has many more stocks than this, but this is even more than we've seen recently. So what we're looking for here, and one of the things that you'll notice about relative safety, high relative safety stocks, are whether you sort the database that way or if you just look at ruler stocks, what you'll see is when you see relative safety, again, it has to be at least 1.4 just to make the list. When you see relative safety there, all of the other numbers generally that we care about are going to fall in line. Not every single time, but most of the time. So if you look at relative value here, well, see again, there'll be a few that don't quite fit, but relative values are going to be strong. Relative timing, listen, that depends a lot on the market and where it's going. That's the technical part of it. Comfort index, strong on most of these. A lot of ruler stocks don't pay a dividend, but when they do, the dividend growth, the dividend safety is very strong as well. So that's one of the great things I love about relative safety is that the other numbers, again, generally speaking, will fall into place when you're looking to build these portfolios. Okay. Again, you'll see many of them don't pay a dividend, and I'll talk a lot more about these dividend parameters in the next talk. But this is why I love relative safety. I actually did a special presentation a few years ago. It was Dr. D's idea for a title, and it was Why I Fell in Love with High RS Stocks. And then a while later, Dr. D told me to do a follow-up, and we called it Why My what was the title? Why My Relationship with High RS Stocks Continues, right? My love affair, whatever it was. But I love these relative safety stocks. I love, especially in ruler stocks. Over time, listen, I'm going to talk about performance in our portfolio. There was drawdown in 2022, right? There's just no way around it. These are growth stocks. These are quality stocks that took a hit. And we're going to talk about ways to mitigate those drawdowns, how to manage your portfolio once you have it in place. But, you know, we do our best to follow a process. There was some drawdown. And in the next talk, I'll talk about ways to mitigate that drawdown throughout a year like we're having, and that we may continue. I know the market's up today, But, are we out of the woods yet? We don't know. When will we know? Jerry asked the question before. When will we know when a stock's price or the market's price is too low? How do we know when it's too low? That is right. That's the textbook answer. But the real answer is the software that we're working on at VectorVest. And some of you have asked me about it today. But there, we have real time, intraday, end of day. We're working on. It's going to be very expensive, and you're never going to see me again when it actually comes out. But it's called VectorVest end of next day. That's when you really know a stock is bottomed out. It's the VectorVest end of next day. So Jared, what I want to do is take the top 10 from this search, and again, I'm going to incorporate the idea of building a watch list. So you can build this master watch list. If you don't want to just say, okay, I'll take the top 10 ruler stocks or top 10 pale blue chips, whatever, the power of VectorVest and the ability to just create a watch list and be able to cherry pick from that group of stocks is great. So Jerry tagged them. If you right clicks, he can go to watch list. And now the system knows that we've highlighted those, and we have to create, Jerry, I think we created a Tampa 2023 folder a little while ago. And in that group, you can add a watch list and just call it RS. Keep it simple. And once we do that, and Jerry hits OK at the bottom, the system now knows that watch list is open, and I have the top 10 ruler stocks in that watch list right now. Okay? All right. Jerry, let's go to the next search, which is Premier Growth Stocks. And that's going to be in that one's in the retirement, search is retirement. We'll go ahead and click there. And again, we'll bring these stocks to the top of the list. And again, even though, yeah, I'm sorry, let's take a look at the parameters first. So again, the earnings growth rate and the sort that brings the stocks to the top of the list is really what I love about this particular search. So the growth rate is there. Now you'll say, well, Jim, you're talking about RS, but you've got stocks here that don't have the RS. But they do have, the relative timing is doing well. The relative value is there on a lot of these. And you can see a lot of them are buy-rated stocks. So Jared, let's go ahead and tag these as well, and let's put these in the portfolio, in the watch list. Yeah, so the system knows what watch list we're on. And we'll go ahead and hit that one as well. I just want to make sure I get the right searches that I'm using. So let's go ahead to blue chip dividend payers, Jared. That's also in the retirement portfolio. So again, we shift gears here a little bit. Okay, so in my next talk, I'll talk about allocating assets to, again, the foundation of what your goals and objectives are. Growth and or income. Here we're talking about income. In this particular search, I talked about already the parameters that need to be met. One of them is dividend safety. That's the only parameter in the VectorVest program that's not on a 0 to 2 scale. It is 0 to 99. And anything above 50, we say, will ensure that you have a payout ratio. In other words, earnings per share versus the dividend, or earnings yield versus dividend yield. We want to make sure that that's favorable. And so the dividend safety greater than 50 does that. I remember when I created this search, talking with Dr. D, I was killing myself trying to build you can customize your own dividend payout ratio. And I'm in there trying to do all kinds of formulas, and I'm talking to Dr. D on the phone about that week's special presentation. And he James, what's the matter with you? Right, he was calling me James. He goes, just use dividend safety greater than 50. That's what it's for. And so I typed it in, right, let out a deep breath and said, sorry about that, Dr. D. I didn't mean to bother you with that. But what it does, so Jared, if you scroll over a little bit to the dividend information, it's an important indicator because you'll see when you compare, say, earnings yield versus the dividend yield. Right? Or you can just do earnings versus the dividend paid. Both of these are much stronger, right, or higher versus the dividend or the yield. So I have that comfort knowing that the dividend is safe because the company is earning certainly much more than it's paying out in its dividends. So it's just an important factor when finding the quality dividend stock. So it's been my experience. Is that one going to be close? 347 to 340. The earnings yield, the yield is 556 versus the dividend yield, which is 346. The earnings per share is 347 versus the dividend of 216. So yeah, just barely above, but still giving you that favorable ratio. And this is why we put them into a watch list, so we can kind of cherry pick through, right? It might not be, based on that, it might not be my top pick. But I haven't found a dividend safety above 50 that didn't meet that criteria for us. So one of the things that's important, you'll notice right out of the gate, what do we have? Exxon, Chevron, Valero, any others up there? For now, three of the top 10 or so are petroleum stocks. So we also are very careful not to overweight any portfolio in any one industry or sector. For our dividend portfolio, we use sector 2 per sector, okay, to be sure that we are diversified when we're doing this. But unlike ruler stocks, it's not hard to find these candidates here. And again, they all must have a dividend yield of at least 3% to make this list. Okay, Jared, let's tag these, and we'll throw those into the watch list as well. The top 10? Yeah, we'll just take top 10 is good. Yep. And then later, I'll talk about the portfolio, the model portfolio that we use. So one of the great things about that particular search is that not only do we get to take advantage of the nice yield and the safer, steady income from the dividends, but over time, we do have capital appreciation as well. Now, again, 2022 was not the most favorable, but we'll talk about protective puts later, how to do that. So, Jerry, we threw those in. Let's go ahead and throw those in. And our next search we're going to take a look at is pale blue chips. And that is in the conservative folder. There are some good prima donnas and steady eddies I like too, but the reason I like this particular search, pale blue chips, is because relative safety is a part of it. 1.25, it has to be at least to make the list. Then we also have our growth rate, at least 10. But then it takes each dividend parameter and puts a parameter on each one. I always like that about this particular search. And then some other basic pieces of information. And then we take the VST vector plus the YSG, which is yield, safety, and growth. And again, I'll talk about that in the next talk as well. So another great search, Cigna Corp. Cigna has come up earlier. Jerry, let's just take a quick look at the graph. This is one of the searches, one of the stocks that came up. We were talking about earnings. Wow, took a nice hit there, a few. But when we put it on the longer term graph, say 3 or 5 years, whatever you want to put it on, you'll see the earnings per share and how that, what I call that northeasterly direction, right, the effect that it has. Now, I don't know if they had earnings or some other news came out on it recently. I'm not 100% sure. But what I'm looking at here is the bigger picture, right? So we see earnings, and as the quote I like to steal is, it's not a coincidence. As earnings per share continue to rise, so too, over time, does the stock price, right? Every stock's going to have its drawdowns, right? No stock is going to go straight up, as we know. But this is what we like to see. And again, I'll have to take a little research and see what's going on there. But Jerry, all right, thanks. You can get out of that graph now. But just another really good quality company. STLD, who told me? Was it Ron? Or he must be out at the desk. He actually bought, Ron never buys stocks. He actually bought STLD, he told me last year. So if that's not enough for you to go out and buy STLD right now, I have no idea. He said he's bought like one stock in the last 10 years or whatever, but I'm sure he's traded a lot of options on them though. So anyway, a lot of very good stocks. Again, you have your dividend information here, and RS has to be at least 1.25. So another reason why I love the search. Jared, let's throw them into the watch list. And then finally, we'll take a look at safe and sound, which I believe is in the prudent folder. And safe and sound is another one. Relative, it has to have relative safety above 1, and I believe it's RT above 1 as well. I can't see from here. RV and RS, yes. So relative value and relative safety have to be greater than 1 to make this list. Okay, so I like that, and then I like the sort, which is RS times CI, which really, in my opinion, is one of the best sorts for a more prudent-minded search. As we talked about comfort index earlier, right? Comfort index is the price growth persistence of the underlying stock, right? The ability to withstand severe and lengthy downturns, I think is how we define it in VectorVest. So that's what we're looking at. So that's a great sort there. Again, CPRX comes. So by the way, there's going to be a lot of overlap between these searches, and you'll see when we go into the master watch list. So we've taken the top 10 out of 5 different searches. My guess is there'll be probably about 35 stocks in the watch list that we go to. Okay. So let's go ahead and send those over, Jared, and we'll go ahead and switch to the watch list. So here in the watch, so I can't see. So how many stocks ended up in our watch list here, Jared? 40. So 40. All right. So we had some overlap, right? We took the top 10 from 5 searches, and we've got 40 stocks in our watch list. So what Glenn did earlier was kind of take some stocks that you guys had mentioned, but this is a little different now. Now I have potential candidates to make it into my portfolio. So it will be a little different between building the growth portfolio. Again, as I'll talk about in the next talk, I use strictly ruler stocks in the portfolio I'm going to talk about, but and then in one of them we use just blue chip dividend payers. But that doesn't mean you can't come in here and say, all right, I'm going to build this portfolio based on these type of stocks. I'm going to collect some dividends. I'm going to put some growth within my portfolio. And one of the great things, down below on any watch list, you have kind of the summation of the average of all of the stocks that are in the watch list. So you've got an average relative value of 1.41 with an average relative safety of 1.23. So right out of the gate, I'm feeling pretty comfortable with those. RT, I don't focus on too much right here because it really depends on the market and where it's going. This comfort index above 1 is good. But earnings growth rate is very strong, okay? The stocks that do pay a dividend, right? The average yield is 1.5%. Dividend safety is good. Growth rate is good. YSG suffers because they're not all dividend stocks, so don't let that one fool you. So that's what we're looking at. This is the type of stock that you have in here, and the ability to go in and be able to cherry pick through here and build the type of portfolio that you want to build makes it a whole lot easier. So again, it's taking the idea Glenn was talking about, build this watch list, but we can go in here and say, okay, listen, you can do this with more aggressive stocks you want to trade or be more aggressive with. It doesn't matter. The process works for whatever your objective is. But I think this is just a great way. David was talking about Deckers earlier, I believe. It made our list here. Strong relative safety, relative value. And again, you can sort it by any of these headers. You want to stay away. And also, just remember, if you start to build, whether it's just a model portfolio in the portfolio manager that you begin and then go into the real world, just remember what we haven't done, Jared, if you slide all the way over, what this doesn't do is even a little more all the way to the end, is break down the industry and sector. So you just want to be sure in any portfolio that you build. Certainly now I don't want 8 tech stocks out of a 10 stock portfolio. Unless you're shorting 8 of those 10, then that's probably a good idea. But you don't want 8 petroleum stocks out of 10. You don't want whatever it might be, healthcare or whatever. So we try to diversify. Whether you do it by industry or sector is going to be up to you. I am going to talk about the trading system viewer. I'm going to go in and show you the plans to build and manage, and you can see how this is one way to build a portfolio. Because it's VectorVest, there are ways to make it a whole lot easier than I'm doing. But the reason I do this is part of what happened in 2022, because we used just ruler stocks, and listen, they're growth stocks, and they took a hit. So there was some drawdown, but we were able to mitigate, and we don't allocate in our retirement-minded investment plans, we don't allocate all of our assets into just growth stocks, right? We're going to allocate them in a different way. Again, I don't want to get ahead of the next talk, but we're going to take the concepts here and actually apply what to do with these good quality stocks once you find them, okay, in the next talk. All right. Are there any questions on that before I move on? This talk is going a little quicker than I wanted to go there. Yes? What's the highest dividend yield? Off the top of my head, I can't tell you, but Jerry's going to click 2 buttons, and I'm going to tell you the highest yielding stock out of 9,100 stocks right now. So what Jerry just did was go into, by the way, the question was, what's the highest dividend yielding stock that I've seen? That was the question. I'm sorry if I didn't repeat it. So what Jerry just did was go into the stock viewer page, and we can go to dividend yield, and he did it already. So you've got a stock here. Oh, this is Zim. Somebody commented on this earlier. Jared, go to the next stock. Honestly, I'm not going to talk about Zim right now. So the next stock has got a dividend yield of 74%. The very, very last thing I ever want you to do is to determine that the dividend yielding stock I am going to purchase, I'm purchasing it because it's the highest yielding dividend. Don't do that. I'm going to go back to the cop days. Don't do that. Okay. Drop the mouse. Step away from the computer. That is not how we go about finding the best yielding stock. So while it's a great question, to kind of revert back to the blue chip dividend payers, I use a floor of a 3% yield. And there's a reason I do that. When I tried 4 or 5% yield, the quality of stock went down a little bit. The better idea is to knock it down to maybe 2 or 2.5%, and you'll get a lot more candidates that are maybe better quality stocks. My point is, don't ever rate the quality of a dividend paying stock based solely on its yield. Okay? Did I say don't do that? Jared, let's while we're on the subject, let's go. So anyway, the yield I like to look for is at least 3%. Okay. The highest yielding one I ever saw was Zim at 190,000%. We're not going to get into that one. Now, there is what's not in any slides here that I'll take a minute to talk about, and somebody mentioned monthly portfolios, right? Dividend portfolios. Jared, if you go into the watch list viewer, I believe in the dividend folder, there should be the monthly dividend payers. So what you have here as well, and I won't go into actually building a portfolio of this in the next talk, but this is a great way to come in here, and if you're looking for a steady income on a monthly basis, one way to do it is kind of stagger your quarterly dividend payers, if you want to put that much time into it, kind of stagger that payout. Or you can come to the monthly dividend payers where, here the yields are going to be usually pretty strong. Now, some of these must be, why are the yields at 0? These are ETFs, maybe? Oh, dividend yield. I'm sorry. I'm sorry. I'm looking at earnings per share because I believe they are ETFs, right? Yeah, I'm sorry. So go back to dividend yield. You'll see the dividend yield here. The yields here are very strong. Now, this is sorted by value safety timing. Okay. Anytime you see a dividend safety at 58, it's telling you it's an ETF. One of the things, you're not going to find the dividend information as strong as you will on blue chip dividend payers. One of the things you have to take into account building a monthly dividend portfolio, if Jerry slides over a little bit, is volume, right? Some of these don't trade very much. Don't go buy one that has an average volume of 2,000 shares, right? That's one you're going to want to stay away from. So sometimes what we do is sort by average volume and kind of take those. Those are usually the higher quality ones that we might find. And you can build a dividend portfolio this way. My take on that is you have to be, a little more aggressive on your money management techniques. Maybe, tighten the stops a little bit, a little tighter than we might use in the blue chip dividend portfolio. But it's a great way to generate a nice monthly income. Just understand that the fundamentals and the things we've talked about are not going to look as good on the dividend portfolios. Speaking with one of our attendees earlier, I don't have it here to show you, but I have in the past. We don't track preferred stock in our portfolio in our program. But if you Google ETFs that track preferred stocks, you'll get a handful of names, and those yields are usually 6, 7, 8%. But the problem with those, especially preferred stocks, they suffer more when interest rates go higher. The idea is, what am I buying stocks or preferred stock for and worry about the stock price when I can go into a T-bill or a note, and I can get the same return in a much, much safer place. So in 2022, a lot of dividend-paying stocks suffered, certainly preferred stocks and preferred ETFs. But listen, and this cycle will change, right? When, I don't know, but the cycle will change. So if you want to write it down on the slide there, think about Googling some of those. Preferred ETFs, if you're looking for a yield, 6, 7, 8%, usually without a whole lot of volatility. But that's another great way to look for a steady income. Okay. Any other questions before? I think we're going to take a short break, and then we're going to come back. But yes.
I've been able to create those watch lists, but they are sorted on each list with a different criteria. So once you have your watch list, what criteria do you use to cherry pick? And that's where I always get stuck. I don't know which two stocks to take from those 40.
Right. It's a great question. So the question was, once you take these stocks from different searches that have different criteria, what criteria will I use to choose my stocks? Did I phrase that correctly? Good. So that's a great question. So here, what you would do is you would determine, and this might be a little clearer after my next talk, you're going to determine which stocks you're building for which portfolio. What's your objective? Is it dividend? Is it a safe, steady dividend income? Or is it the high RS growth stocks? Right? So in this particular watch list, you may have broken these down two ways, right? Perhaps if I was sitting home or sitting at work looking at I would have created the watch list with high relative safety, and then a different watch list with dividend port stocks in there. That way I could sort it by relative safety. I would use those factors much better. And then I would use here in the dividend portfolio, dividend yield, dividend safety of those. So really the answer to your question is you might build two watch lists. You might say, here's my growth watch list, here's my dividend portfolio. I believe we're going to take a break right now. Oh, I got time. I have 10 minutes? Okay. I'm sorry. Oh, I have time. I'm sorry, I have time. So what we're going to do is you could build I thought it was 2 o'clock, I'm sorry. You can build two different watch lists to do that. So that would be a great way to do that. All right. I think building the watch list is really, whether it's putting stocks you either own or want to own, or putting in prospective stocks that you want to purchase, the watch list is a great place to go. I mean, you could even pull up a graph of the watch list if you want to. You could right-click there, Jared, and show a graph of the watch list. We'll take some questions. I have a few moments before we take a break. Yes?
Do I recall you're saying that when the confirmed call is down, you should not be buying the stocks?
So the question is, My first answer when you said, I recall you saying, I was going to say, no, I never said that. The question was, he recalls hearing me say, when there is a confirmed down, do not buy this stock, any of these stocks. And yes, you have heard me say that. And I'll say it again. When we talk about building and managing the portfolio, we allow the process that we set up to manage our risk. And part of that management technique is not buying stocks for the prudent, retirement-minded investor during a confirmed down call. So again, I'll sneak ahead a little bit. So if I go out, confirmed call comes, we build a portfolio. The risk management techniques are already in place. The stop criteria is there. Hopefully the idea of buying protected puts when we need them is there. Selling covered calls is there. But the stop criteria is there. If a stock is stopped out, we do not fill that position during a confirmed down. Now, there can certainly be some management around that, right? What could I do? Well, I own 10 ruler stocks in a growth portfolio. I just got stopped out on 3 of them. What could I do? Leave it in cash? Yes, that's one way to be conservative. The other way is to perhaps build one position on perhaps a contra ETF, right? I was mentioning out there, this is not by any sense a recommendation or telling you to go do it, but for a while I've been saying for some of our retirement portfolios, if you get stopped out and you're in cash and you're looking to do something, GLD, gold, has been a good safe haven. The dollar over the last year has been a good safe haven, right? So you can add to them. But the short answer to your question is no, I will not fill positions here with long positions during a confirmed down. So that's a long-winded answer to no, I don't. Yes? Yeah, great question. The question is, of course, depending on your objective, how many portfolios do you recommend having? And that's going to segue perfect into my next talk, because we're going to talk about the 3 core strategies for retirement. So I'll give you a quick preview, right? We talk about growth, we talk about income, and actually income part 2, which is selling covered calls. Again, from the retirement-minded view, you may have as many as 3 different portfolios going. It depends where you are, though, in your retirement planning, whether you're 10 years from retirement, 5 years into retirement, whatever it might be. It's going to ultimately be up to you how you allocate into the plans I'm going to talk about. For instance, let's say you're 2 years into retirement, right? And just for the sake of math, you have a $100,000 portfolio. Just for the sake of math, makes it easier for me, my public school math skills. Oh, that's what I was going to say. So Dr. Dave was up here earlier talking about all the degrees he has. PhD in like 5 different things. And I laugh because I have a college degree in political science. So tells you how mathematical minded I am. But anyway, I thought of that earlier. I don't just share that. God bless him. Anyway. What the heck was I saying? How you're going to allocate. So let's say you have that $100,000 portfolio. I'm 2 years into retirement. Am I going to put a third of my net worth into growth stocks? No. Good answer. Some folks said no. Probably not. If I'm 8 years, 5 years from retirement, might I consider that growth portfolio a little more? Right? You're never going to put 100%. Now, the only one, when I say 100%, let me also be clear to this. When I say you put this theoretical $100,000 in, I'm talking about the equity that you are allocating to the equities market. Okay? I'm not talking about bonds or real estate or crypto. Oh, don't even get me going on that. You don't want to hear my opinion on crypto. Or maybe you do. I don't know. We'll talk about that out there. But anyway, you're not going to allocate all of that to any one portfolio. But remember, when you hear me say, if you have a $100,000 portfolio, I'm not necessarily saying that's your entire net worth, right? So that's up for you to write down on your pad or your notes and say, okay, this is what I'm allocating to the equity markets. And by that, I mean blue chip dividend payers, growth stocks, or what I'm going to talk about in a few minutes, selling covered calls as another safe, steady income way to generate income there. So it's a great question. I'm going to talk more about allocation after we're going to take a break, right? Yep. We good? Unless there's one more quick one. Yes, sir.
Yeah. Is there a watch list that has just weeklies? 'Cause I do cover calls, but I do them weeklies. Is there one?
Is
I
Ron
do
in
my
here?
own, but I don't know if you've got one. I've never found it.
You know, we got to ask when we're done. I got to ask Ron. I know there's one in. I have one. I don't know if everybody has access to it, but we'll check. I'll check with Ron. I'm sorry. Repeat the question. The question was in the watch list. Do we have a watch list for stocks that trade weekly options? So yeah. So the one we have built, I think, is built into Ron. So we'll chat with him after, see how we can get that set up. Okay. All right, folks. Well, I'm coming back. So if you got questions, we're going to take a break, and Ray's going to come up, and I'll be back in just a bit. Thank you.
Okay, like Jim said, thank you, Jim. Watch your step on the way down. But we're going to take a quick 20-minute break or so. We'll be back at, 2:30 Eastern Time. So we'll stretch our legs. And next, Jim's going to come up and show us how to actually build and manage that retirement portfolio. So we'll see you back in a few minutes. Hello, and thanks again for joining us for the 2023 two-day investment seminar. As you know, we're offering the $100 discount voucher to all attendees once again this year, and I want to spend a moment to explain what the $100 voucher can be used for and how to take advantage of it. This year, you can apply the $100 voucher to any one of the 4 courses listed on the offers page, or it can be applied to any of the 4 annual group coaching packages. The voucher is not valid for a base subscription like end of day, intraday, or real time. When you go to www.vectorvest.com/offers, you will see the group coaching packages button that you can click on to access the list of coaching groups. The prices you see are our special seminar prices and does not reflect the $100 voucher. When you submit an order for one of the coaching group packages, we will automatically apply the $100 voucher to the price listed when one of our billing specialists apply the order to your account. The additional $100 discount will not be displayed on the order page itself. If you're ordering one of the 4 courses listed, the $100 savings will be applied at the time of purchase, so you'll get an additional $100 off of the prices shown on the offers page. If you're ordering an annual coaching group and a course, the $100 savings certificate will be applied to the course and not the subscription, as there is only one voucher to be used per person. This voucher will expire at the conclusion of the 2-day seminar and will not be valid once the seminar is over. Thanks again for joining us to kick off 2023.
The clerk calls the session in session. I've been watching a lot of CNN the last few days. We are in session. All rise. The House is in session. All right. All right. People are still settling in, so I'm going to tell you a story. Fundamental investor and a technical investor are at a steakhouse having dinner. And as Dr. David alluded to earlier, after the first or second drink, they start arguing. They start getting very animated. So one of the guys, the technical investor, is talking, and I don't know, he's Italian like me, and he's talking with his hands, and he hits a steak knife that's hanging off the side of the table. And as he's talking, he hits it, and the steak knife goes twirling into the air. So they both pull back from the table, and the fundamental investor is sitting there, and he's watching the knife as it falls from the sky and goes right through his foot. Goes right through the fundamental investor's foot. And the technical guy looked at him. He goes, "You watched it coming. Why didn't you move?" And the fundamental investor looked at him. He said, "I thought it was going to come back." All right. The other one's classic, man. It's just because they all heard it 100 times. All right, let's go ahead and jump in. We're going to kind of build on that last talk, and there were some great questions that kind of segued into what I want to talk about. Now. So, I'm going to talk about how to build and manage a retirement portfolio. I've been saying for a while now, I'm no longer able to say, well, let's go ahead and build a portfolio or manage it's one word to me now, right? Building a portfolio is easy, actually. I just showed you how to find, among other ways, to find some really good quality stocks to put in a portfolio. I chose the 5 searches I like. You may have others you like. So it's really pretty easy just to pick them out, get some good quality stocks, and own them. But what's key, the key to everything, is how do you manage those stocks once they're in your portfolio, right? How are we going to manage those stocks? So that's what I want to talk about in this talk. A long time ago, we were on the road for seminars when we were on the road a whole lot more than we are now. Years back, we had come back, we had a meeting, and we were talking with Dr. DeLito about, I said, Dr. D, a lot of the questions, that I get in some form or fashion, from our attendees and our customers is, how do I keep from running out of money in retirement? In some form or fashion, that's the question I would get. So I said it to Dr. D, and he said, James, just tell him to keep making more money, right? And so I'll never forget it. It made it onto my slides. It's my quote for this one. But it makes sense, right? Now, let me just put one little caveat before that. I'll use another quote that I don't have on a slide. But you guys heard of Ray Dalio, the Bridgewater money manager, hedge fund manager. Paraphrase this quote a little bit, but he said, you can't make money in the market without taking some risk. But you also can't keep your money if you don't know how to manage it and protect it, right? So even if you're making money, if you don't know how to manage and protect it, it's kind of useless. So we want to just keep making money. That's kind of the process here. I'm going to talk again about the retirement-minded investor and what we're looking for. You can retire with peace of mind knowing that you can steadily grow your portfolio, generate a safe, steady income, and to me, most importantly to me is that you preserve your capital, right? It's the old Warren Buffett rule, right, of making money. Rule number 1 is don't lose any money. And rule number 2 is see rule number 1. So of these 3 strategies, right, so you can go out, you want to grow your portfolio, you want to get paid, and most importantly, you want to be able to protect your net worth. So as I go through this and talk about building and what stocks to build and put in there, preservation of capital is really important to me, and I want it to be for you too. A secure retirement, we say, is one in which you have enough income to live the life that you desire, where work is optional and retirement is affordable. Right? Everybody says, well, what are you going to do when you retire? I'm going to sail around the world or whatever. To me, it is golf and a cold beer on the front steps, reading a book or whatever it might be. That's my ideal retirement, right? Whatever it is, so I'm not going to come up here and tell you what your ideal retirement is. Your ideal retirement might mean that you work. It's up to you. My goal is to make sure that you have the ability to choose. We talk about retiring with peace of mind. We say in VectorVest we have the strategy or this idea that there are 3 P's to peace of mind, to retire with peace of mind. Profit, provide, and preserve. And a lot of you who are in the coaching group or have taken the retirement courses have seen this many times. On the profit side, we talk about building your portfolio, and this is more about the growth portfolio, ruler stock type stocks, right? We want you to be able to go from having this roller coaster ride, okay, to a steady climb in your portfolio. Now, nothing goes straight up. And we certainly learned that in 2022. And I'll never stand here and tell you that I'm going to build for you a portfolio that's never going to have any drawdown. I would be lying to you. And if anybody stands up here and tells you, I'm going to build you a portfolio that never has any drawdown, walk out the door. Okay? So we want to make sure, though, that you don't just spin your wheels. There's a big difference between turning your wheels in the sand, 1 step up, 2 steps back, and being able to manage that drawdown, manage that risk to have that more steady climb, again, when it comes to growing your retirement portfolio. Next, we talk about provide. I don't want you to have just a couple of dividends, again, for the retirement-minded investor. A couple of dividend-paying stocks. Okay, I have a few bucks coming in. Oh, look, ABC stock paid me $40 this month. We want you to be able to have a steady flow and understand how to find the right stocks, manage them the right way, and have a steady flow of income coming in. And then finally, as I said, the reason most folks aren't able to protect and preserve their net worth, first and foremost, is because they're not prepared or they don't know what to do. Okay? I think probably a lot of folks in this room probably do, but a lot of folks don't. That's what I mean by building and managing. Anybody can go out and buy some good quality stocks. What do you do next? Well, we want you to go from being unprepared to knowing what to do when these markets turn against you. Again, there will be drawdown, as anybody in the coaching group, retirement coaching group knows. We've had drawdown, but we were able to help to mitigate those drawdowns. I'm going to start with profit, okay, the profit side. Capital appreciation comes from owning companies with consistent and predictable financial performance. I talked about that in the previous talk when I talked about relative safety. This is the same slide as before. It's an indicator of risk. It's an indicator of risk. Consistency and predictability of financial performance are the primary factors. So I like to use Dr. D's quote again, good portfolio management starts with buying the right stocks. So I played a lot of baseball when I was younger, and the only reason I have a college degree is because they paid me to play baseball. So I use my team here, the 69 Mets, right? I want you to look at it this way. The sports analogy I use is the same way you'd want to have the best players on the field or on the court or on the ice, right? The way to win games is to have the best players out there, right? So if you have, Tom Seaver and Jerry Kuzman and Jerry Grody, and I can give you the whole roster if you want me to, that's how you become champion. I used to use the 27 Yankees, but I'm really, truly a Met fan, so. That's how you build. It's the same idea. Build a roster of stocks that will allow you to be successful. Good portfolio management starts with buying the right stocks. What I like to do, we talk about relative safety, consistency, and predictability. What I like to do is take a couple of, just a minute or two, to talk about really what goes into relative safety. And in Dr. D's little green book, as we call it, Stocks, Strategies, and Common Sense, there is a chapter on relative safety. And he talks about the stock, the factors that go into assessing relative safety. These are just some of them, right? They're green, so it's hard to see. I don't know why I made them green. Earnings consistency. So when you hear relative safety, the reason I go through this is what I want you to think of, right? Earnings consistency. Does the company make money quarter over quarter, year over year? Right? It's pretty straightforward. Dr. D talked about company size and company longevity. He always talked about, just because a company is large doesn't mean that it's safe, right? We do like the larger companies, but one of the great examples, even though it's made a bit of a comeback from years ago, but GE was one, right? It was not a very safe stock to be involved in, but it was a very large company, but relative safety was poor. But anyway, company size, longevity, Dr. D writes in his book, better the devil you know than the devil you don't. He uses 5 years. Make sure a company's been around at least 5 years when you're talking about relative safety. So these are the factors that go in. Price behavior, think of comfort index, right? A high CI, a good price. Now listen, as I said, nothing is going to go straight up, ever, right? But we want that nice, again, lower left to upper right move when we talk about price behavior. And then finally, debt to equity ratio is a very important factor that goes into it. Does the company have the ability to weather any headwinds that it might run into, whether it is specific to that company or whether it's the macro view like we're seeing in the economy now. So that goes in. So it's not just, hey, relative safety, talks about, stocks that make some money. The reason for this slide is to get you to understand there are some very important factors that go in to that relative safety indicator. Okay, so that's the checklist that we use. We looked at, this is before CI fell apart, apparently. I took a screenshot of CI about a week and a half, 2 weeks ago. I'm not sure what happened to it. But as of 12/13, the relative safety on this stock was 1.42. I believe this is actually, I think this is a 10-year graph. It's a 10-year graph. Relative safety was 1.42, comfort index at 1.63, right? So the price behavior, the earnings per share on that northeasterly direction that we see, these are the kind of stocks when we talk about relative safety, is that what we're looking for. Okay. We've already looked at ruler stocks. Again, this is a slide that you have, and we'll go in a minute and take a look in the program. But these are the, again, the search, the parameters that we use, and the stocks that come up. Now, this is a portfolio, and I don't have it on the computer, but it doesn't matter. This was taken, again, about a month ago. So this has drawn down a bit from here. Okay, this has drawn down. This is the ruler stock portfolio that we use in our retirement coaching group that meets every Tuesday. It's a model portfolio. It began in the short term as a back test and was turned into a model portfolio about a year or two in, and we've been tracking it ever since. And we're up now. This was an average annualized rate of return of about 28, 29%. It is now down around 24.5, 25% annualized rate of return. And this is using a very specific investment plan that I'm going to share with you in a moment, right in the stock trading system viewer. The first thing that stands out, I am sure, to everyone looking at this slide is this, right? The drawdown. Okay. So how do we get around the drawdown? How do we manage that drawdown? I'm going to address that a little bit, talking about covered calls. I'm going to talk about buying protective puts when the time is right to buy insurance on your portfolio. But Jerry mentioned it earlier. What really hurt this portfolio, what crushed this portfolio, was that March 29th confirmed up call. Okay, Jerry made a great point and said that if you had waited for follow-through, right, the next morning after that confirmed up call came, the market was down, and it's never come close to that mark since. This portfolio is set up in the Genius, and it automatically bought 10 stocks that next morning. Okay. So while I show this, and I'm still confident in the system, we had it during the pandemic. We had drawdown. We've had drawdown here. But I have no doubt when these macro headwinds go away that this portfolio will begin to do what it was meant to do in the beginning. But I just want to stress that now while I have this slide up, because the following confirmed up call, we did wait for some confirmation of the upside before we populated any positions. And it's what I'll do moving forward. And in fact, if the macro conditions, and I'm going to show a market climate graph in a minute, continue the way they are, what I'm going to do in this model portfolio in our coaching group is I'm going to buy positions because I'm going to stick to the process. But I'm going to do what's called married puts, and I'm going to buy a put option along with that stock, right? Because I'll share with you why. Jerry, let's go into the program for a minute. Somebody might say, wow, you got a confirmed up call. But Jerry made the great point, right? There was no follow through. And we are in times that are unique to even those who have been in the market for a long time. Inflation and interest rates where they are, the kind of drawdowns that we're having, right? I know we had it in 2008, but inflation hasn't. It's been 30 or 40 years since we've seen some of these numbers. Okay, Jerry, what I'd like you to do is go to a market climate graph. And for those wondering why, well, Jim, you got a confirmed up call. You're not going to buy the next morning? And the answer is no. Why wait for the follow through? Right? This is the beauty of VectorVest. It gives you so much information. Up here is the earnings trend indicator. Down below is the green, I believe, is the, I can't see, CPI. So that's inflation. And down below that are T-notes. T-bills, I'm sorry. So you got interest rates at 4.42. You got inflation up over 7%. From a macro view, is that good to own equities? No. Right? It's what Dr. D says it's all about. Earnings, interest, and inflation. These are not good numbers. And so the beauty of coming here to the live session, instead of me telling you click a button and you've got a black box system, is that you're able to go into a thing like the market climate graph and say, you know what, I don't have any problem with you putting a little subjectivity into how you build your retirement portfolio, right? It's going to be very different from, the techniques that are used for shorter term trading that these guys are going to talk about later and tomorrow. Okay? If you wait a couple of days, or instead of buying 10 or 12 or 15 stocks on the morning after a confirmed up call, and you say, well, I'm going to go in and I'm going to wait for that green light after the confirmed up. I'm going to buy 2 or 3 positions. Right? There's absolutely nothing wrong with doing that. You're not going to miss the bottom. You're not looking for that blast off phase, so to speak, for a more aggressive type of trade. Right? This is the consideration I want to convey to you. You may want to hit it right at the bottom. Good luck. Good luck. But this screenshot right here, this graph, is the reason for the next confirmed up call for the prudent, conservative-minded retirement investor to be careful. Okay? Be careful and wait for that follow-through to come because of that. All right? What I want to do next is go... Joe, we can go back into the slides for a moment. Oh, there we go. So back at that point of this screenshot, it was 26.6 was our annualized rate of return. And the other thing I want to convey is when we talk about these type of portfolios is to keep a longer view, keep that longer term view in mind. Because if you start trading your prudent conservative portfolio on a day-to-day headlines, you're going to drive yourself crazy. I don't want you to do that. Like I said, now it's down to, it's about 24% annualized rate of return now. Is there anyone in here who thinks that over a 5-year span, an annualized rate of return of 24% in your prudent, retirement-minded portfolio is not enough? Is there anyone? Because if there is, meet me at the table after, because we're going to talk. Okay, we're going to talk. Now, 2022 was different. We had drawdown, and we're going to talk about that as we go through. Dr. D said, again, to finish up that chapter, intelligent investment decisions cannot be made without including a knowledge of stock safety. Do not let stock safety be your missing link. Okay, so that's relative safety. I don't think I have anything left to say about relative safety. If I haven't conveyed it to you yet, I can't do it. I'm going to switch to the next piece. So I'm going to shift gears here and talk about providing a steady income flow. And there are two parts to this one. It's from covered calls and from collecting dividends. So let's talk about dividends first. And let me pause for a second, talk a little bit about allocation. And I started to talk about it at the end of the last talk. So depending where you are and how you want to allocate your assets, the assets that you allocate to the equity markets, right? I use the theoretical $100,000 portfolio. Sometimes it's easier to use, let's say you have $300,000 to invest. You can put $100,000 into growth portfolio, right? The profit side. You could put $100,000 into provide, and then I'm going to talk about what's called a covered call portfolio or the buy right portfolio. And you could put $100,000 in there, right? That's the easiest way for me to break it down for you. Is that always the most practical or smartest way to do it? Absolutely not. Absolutely not. In fact, in this market, I would lean much more towards what we're going to talk about now is the provide portfolio, the dividend portfolio. So when we talk about that steady income flow, first let's talk about dividends. And the whole idea, as we know, is simply to get paid, right? I want to get paid for owning that stock. Dr. D said the best of all worlds is collecting dividend checks while prices of your stocks go up. That comes from finding solid growth stocks that pay dividends. And as only Dr. D can say, VectorVest is ideally suited to find these babies. Let's go find them. First, I'm going to go through this kind of quickly because I think we all have, this is more for your slides to take with you. Dividend, it's a distribution of a portion of a company's earnings to its shareholders. Okay. The dividend yield is the amount a company pays out relative to its share price. So dividend yield equals annual dividends per share divided by the price per share. Okay? Just some quick definitions of what we're talking about, right? The dividend is what they pay. The yield is that percentage based on the price of the share. Now, in VectorVest, we have these basic industry standard dividend paid, the dividend yield. You can get that anywhere. What we have, though, that no one else has, are these proprietary numbers that Dr. D created, the YSG, or the yield safety growth vector. So it takes into account the yield, the dividend safety, and the dividend growth. It's on that 0 to 2 scale, just like the VST, only it is for the dividend information. Dividend safety is an indicator of the assurance that regular cash dividends will be declared and paid at current or higher rates. Okay, so stocks with high DS values have shown consistently strong performance. It's just a good indication that the company is continuing to make money. Dividend growth is important, is most important to me. Forecasted annual growth rate of a company's dividend based on historical and predictability of the dividend payout. Here's an important point here. It's a subtle yet important indicator of a company's financial performance. Okay. Most of the companies you're going to find in blue chip dividend payers are mature companies. They have a very strong cash flow. The relative safety numbers are not as strong as what ruler stocks looks like. But that's fine, because what it does is provide insight into the board's outlook and the company's ability to increase earnings. Dr. D says the biggest black eye a company can suffer is either skipping a dividend payment, cutting their dividends, eliminating them, whatever it might be. Right? So if you have a dividend-paying company in your portfolio and suddenly they say, you know what, we're cutting it in half, or we're not paying it, we're suspending our dividend, probably time to think about cutting ties with that underlying stock. And again, we take those indicators and it gives us a good indication on that 0 to 2 scale. Stocks with the highest YSG values have the best combination of yield, safety, and growth. Okay? So that's the kind of the foundation of what we look at. Before we go into the the trading system viewer, so I just have another view of the blue chip dividend portfolio. So the thing to keep in mind about this particular portfolio, and again, that's drawn down just slightly from here, I believe, over the last month or so. But this is a little bit longer term. This is 8-year look. What you see here, again, is obviously the drawdown in the pandemic and then the drawdown we've seen. As I said, higher interest rates tend to hurt dividend-paying stocks, generally speaking. The average rate of return on this over an 8-year span is just about 14.5%. What that doesn't include, what you're looking at, first of all, does not include the dividends paid. That's just capital appreciation on this portfolio. So, is it through the roof? No. Is it as high as a growth portfolio? No, but it's positive. It's not a very actively traded. I say in a very admiring way that it's a very boring portfolio, quite frankly. But it's 14.5% return. Now, in the VectorVest portfolio manager, when a company pays dividends, it doesn't automatically show up. You got to add it in there. I haven't done that in this portfolio. What I have done is created a spreadsheet, and it's very time consuming and very cumbersome, but I can go through the trade history and calculate to the penny how much dividends have been paid throughout the course of this portfolio. I didn't quite get it done before I got here for our trip here to Tampa, but I can tell you there is approximately $65,000 on top of the 143% gain that we've seen already. Okay. That's just in dividend payouts. What this also doesn't include is if you determine that you want, if you're not taking those dividends out, is reinvesting those dividends. And the power of reinvesting dividends is extremely powerful. Not that you have to do it. If you're looking to take that cash out because you want to, that's fine too. If you're living on it, paying bills, or doing whatever with it, that's fine. But just know that that power is there for you as well. So I'm kind of going past this prologue here. So this is where these portfolios are. What I'm going to do is go into the trading system viewer and show you these portfolios. Okay. Jared, before. Well, actually, let's do this. Before I get to part 2 of providing income, let's go ahead and do this. I'm going to do this on both the growth, which is ruler stocks, and I'll do it on the blue chip dividend payers. And then we'll come back for part 2 of providing income, and we'll do covered calls. I think that's a better segue. So, Jerry, I don't know if we showed this yet today. Has this been shown yet today? When you click on the Viewers tab, okay, my talk's not designed to go step by step through functionality of Trading System Viewer. So if you have questions, we'll talk about it. I'm sure before we're done by tomorrow, someone will go deeper into this. But the Trading System Viewer allows us to build in. Now here we have the ability with a couple of clicks of a mouse to build or a pre-built trading system for you. And what you see are the name of the searches, the category. They're defined as aggressive, prudent, or conservative. You've got the market timing that's used. You have 1, 3 month, 1 year, a whole lot of information across the board here, okay, for the trading system viewer that you're looking for, okay. Jared, if you go ahead and click on market timing, this is the way I do it because it just makes it easier than scrolling down all of these. You're going to see that some of these, again, it's for 2022, have taken a beating over the last year, okay. But again, we're looking at the long term. What you see here is, let's see, Jerry, I'm looking for ruler stocks, PL, that one right there, okay? It's showing the drawdown, that's fine, right? What it doesn't show you is the last 5 years is what it doesn't show you. Let's go ahead and click, Jerry, let's click on, let's click there. And we'll go ahead and turn it into in Portfolio Manager. No, you know what? Hold on, Jared. Close out for a second. Let's go up here. Is this going to tell us about the search? This is what I want. I'm sorry. Or the trading plan. So what Jerry did was click there to see the performance of this portfolio. If Jerry continues to scroll down, you'll see all different 1 month and all time and all kinds of different numbers on here. Jerry, if you scroll back up, you're able to click here and get the trading system rules, which I want to focus on for just a moment. So this is how easy it is for the next confirmed up. We're going to wait for the follow through, of course. And the macro tides will shift. I'm convinced of that. I know they will. When they do, you should be prepared to build this type of growth portfolio. So that's, not tomorrow. I know the market's up a lot today. Don't do it Monday morning. So what it does here is give you the rules during the confirmed up call. It gives you, we use the Profit Locker Pro risk management system, right? It is the default prudent 50% target, a 15% what is essentially a trailing stop or a ratchet stop. And then we have some other factors that go into the Profit Locker Pro numbers here, okay? If you scroll down just a little bit, we have more information here. This is using 10 positions. Is your portfolio larger? Are you investing 15 or 20 positions? By all means, you can change that within the portfolio manager. This one uses 10. Some basic rules here. What I want to come down to is minimum stocks per industry is 2, so that we're not overexposed to any one industry. And that's an important one there. Okay? Investing the average value of the portfolio. And when we get a confirmed down, we have no action. We just simply allow the stop criteria to extinguish the position. Okay? That is the ruler stock portfolio. That's up 24% annualized over the last 5 years. Right? That's the exact trading system we use. That includes this year's drawdown. What it doesn't include is the ability to protect that portfolio using protective puts, and I'm going to talk about that in a minute. Jerry, you can go ahead and cross out of that one. And then again, if you want to just build this, the tab Jerry was on just before that was right here. You can start with an empty portfolio. So if Jerry does that, if he clicks there, if you name the portfolio, again, you'll fill in whatever you're going to fill in, and you click OK. And then to go take a look at it. All that's going to do, the genius or the portfolio manager knows that we are currently in a confirmed down, so nothing's going to happen. But the morning after we get a confirmed up call, that portfolio is going to populate, in this case, 10 stocks, regardless of what the markets are doing. And this takes me back to the March 29th confirmed up. On the next morning, right, the market opened to the downside, but the genius bought 10 stocks. In the coaching group and in the real world, I advocate, right, waiting for that follow through. But the process did it, and that one morning is half of the drawdown that we see in this ruler stock portfolio. So in the real world, we're not just going to blindly go in if the market's down 200 points at 9:31 in the morning and buy 10 or 12 or 15 stocks, whatever it might be. So it's just an important real world concept that I want to kind of relate to you. Okay. Jared, let's go back to the trading system viewer real quick, and I just want to share the same thing with blue chip dividend payers. It should be right here, somewhere up here. There it is. So we do the same thing. And you can see the rules here. It's a little different. That's the performance. It's been holding up pretty well. The drawdown is there, but it's holding up. If you scroll down, you'll get, again, the longer term view of all of this. And everybody has access to both of these trading system viewers. If you're a subscriber, you have access to it. And then, Jared, let's go to the rules quick. So here are the rules for this one. Naturally, we use the confirmed up call to enter. Use the same concept of making sure there's follow through. Here, this is not the Profit Locker stop. It is the not the Profit Locker Pro. It is the Profit Locker. And it simply uses 100% gain. In other words, just allow the stock to run. And it uses that 15% stop, which again is a stop that ratchets or trails using VectorVest proprietary techniques as your stop criteria. Right? I don't worry so much about drawdown on the dividend portfolio, because remembering your objective and why you're in the dividend portfolio, your objective is to generate income. Right? So that's what we're looking to do. Yes, sir.
I just have a question. Are you connecting this to your account so it does it automatically, or is it giving you the stocks and then you go in?
Yeah. So the question was, am I connecting this to my live account to be done automatically, or am I using this and then going out into the real world and purchase them? That's the question, right? The answer is no. We are not actually So when that portfolio manager populates the 10 stocks, it doesn't mean I own them in my real world portfolio. Right? If you have RoboTrader, it'll set it up, but you still have to click, right? You still have to click a button to buy the stock, so it doesn't automate it in that sense. So all the more reason that morning of after that March up call, even though the portfolio manager bought the stocks, in the real world I would have gone to the homepage and looked at the color guard or in the price of what the markets were doing, and in the real world I never would have gone out and bought 10 ruler stocks on that morning. Okay, but good question, no. And the only other comment I want to make here is that if you scroll down, you'll see here in the blue chip dividend payer, I use sector on this one, no more than 2 stocks per sector. And then again, we would just allow it to extinguish based on the portfolio. I'm going to take another question, but I still got to get to covered calls, and I don't have a lot of time. Yes, sir.
You had 2 drawdowns on the graphs on both of those portfolios. One was the one you discussed, and the other one was about probably the COVID.
It's exactly what it was. Yep.
And so did the same thing happen? We got a confirmed up call, but there wasn't any follow through, or was it something that you just couldn't avoid?
It was, I don't believe it came right on a confirmed up. Oh, I'm sorry. The question was the drawdowns on the equity curves that I'm showing. We see 2 of them. One of them we know, the recent one. The one in question was the COVID, the pandemic sell-off that we saw, which we know was much shorter term and very short-lived. So we had a confirmed up call here, and the market really, right, we didn't really know what was going on here, right? But we did, and this will segue into my protective puts portion here. So at that point, we really didn't know what COVID was going to be. We didn't know the effects it was going to have. But Jared, go to the confirmed down, right? That's the confirmed down call. What date was it? I can't see it from here. Right, so it was a few days in where the confirmed down call would have come. And I know if you put the DEW, it was even a few days before that. So it was not the exact same scenario where it was the day after. Here we got the confirmed up call, headlines started coming in, and then the sell-off came in. And what I'm going to talk about, I got to keep moving, is what we did in our retirement coaching group and what you should do as an individual investor was, as those headlines started to come, as the DEW went to a down situation, and at the very least when the confirmed call came, if you're managing your own retirement net worth, I'm going to ask you to raise your hands. How many people in here understand the idea of a protective put or buying insurance? Have you all bought put options before? For those who didn't, for those who raised their hand, great. That was the pandemic was the perfect example of why you should understand how to do that. If you don't, that's a URS purchase. That's a URS purchase. The idea behind being able to protect your portfolio is, to me, it's key. Anyway, so let's keep going. Provide, I'm going to talk about covered calls, steady income flow from not only dividends we talked about, but let's talk a little bit about covered calls. There's a great book that we were referred to by Dr. D. had read this book, and he suggested that we should take a look at it, so naturally we took a look at it. There's a great quote from a gentleman named Lee Lowell. He wrote a book called Get Rich with Options. I'm not going to read through the whole thing. I want to define what a covered call is. Remember, I'm talking about providing a safe, steady income in your retirement portfolio. Mr. Lee Lowell described, he was an option trader in the pits up in New York. He defined in the most logical, easy to understand way that I can think of to define what a covered call is. And he said, what you need to understand is there are traders out there who will give you money today for the right to take your stock away from you if it reaches a much higher price. Okay, that's what a covered call is. You own a stock. You own 100 shares of ABC stock. I'm going to sell somebody else the right to buy my stock or call away my stock at a higher price. Not only is he going to pay a higher price than that current stock, but he's going to pay me to do that. Right? So that's the idea behind generating income in a covered call. Okay. That's a quick and easy definition that we use for it. Of course, you have to own a minimum of 100 shares to do it. Here's just a quick breakdown of what a covered call looks like. Let's say you buy 100 shares of XYZ. You pay $60 per share. You simultaneously sell a covered call, right? It's covered because you own the underlying stock. Right? That's what covered means. You go out and you sell someone else the right to take your stock away at $62.50. And here you're using a 45 days expiration. That person pays you $2 per share. So your net cost, or your cost basis now for XYZ stock is $58 per share. Right? That's your break even, it's your cost basis. A couple of quick what ifs, right? And this is not an options course I'm teaching right here. It's just an overview. So what does that mean? At expiration, what if XYZ is above $62.50? Well, if it's above at expiration, when you wake up Monday morning, XYZ is no longer going to be in your account. Your broker's going to call it away. It's going to be taken away at a price of $62.50 plus the $2 that you got to keep. Right? That's $4.50 profit on 100 shares is what? What is it, 7.5%? 7.5% roughly over a 45-day period in this case. Okay? Think if you had we talked a little bit about monthly dividend. If you had a monthly dividend payer that paid you 7.5% a month, that'd be pretty cool, right? 5% a month, 3% a month would be pretty good. Now, what if XYZ is below $62.50 at expiration? Well, you do have a cushion there. The $2 that you took in is roughly a little over 3% cushion, where the stock could actually go a little bit against you or go sideways, you'd be okay. And then finally, you have to understand that if XYZ goes below your cost basis, that you will begin to incur losses. But that's inherent in the fact that you own the stock, not because you're short a call. Selling covered calls adds no risk to your position. Your risk is inherent in the fact that you own the stock. Now, some would say a disadvantage or a risk is that what if that stock takes off? What if XYZ goes to 85 in 3 days? I lost it at $62.50. What good was that? My answer is it was a perfect trade. Why? Because when you hit the enter button, you knew, or I hope you did, exactly why you were hitting the enter button. You were hitting the enter button to capture as much of that 7.5% return in 30 to 45 days as you could. Right? I don't care if stock goes to 180. You made a good trade. I've talked to people who say, well, that's silly selling cars. I said, and so my question is, how many stocks have you bought in the last 5 years that went from 60 to 180 in a month? No one has done. I'm sure no one in here has done. Anyway, that's the covered call. Here's some guidelines for you. Again, this is not intended to teach you exactly options. Ron's going to talk about options. Our coaching group goes through this. If you have questions, we can talk about them after. But here's some good guidelines on doing what's called a buy right. Buy right means you buy the stock and you sell the call simultaneously. So that's what write means. Writing and selling are synonymous, right? I write a contract or I sell it. What I look for in our coaching group is we want at least a 5% return on investment if the stock is called away. It has to be worth doing this trade, so that's what I want. Premium received, again, a guideline. I want at least 2% of the price of the underlying stock. Generally, the way we go about choosing our stocks for this, that's usually pretty easy to find. Our expiration date, again, the guideline is 30 to 45 days. That's pretty much an industry standard for covered calls. You could err a little bit shorter term. You can go a little bit longer. It's just a guideline, but 30 to 45 days out. We are going to use out-of-the-money calls so that we can capture some capital appreciation potential. And then when you're looking at the option candidate for that underlying stock, we need some liquidity. We want at least 100 contracts of open interest. And I think when Ron comes up tomorrow, he's going to talk more about that. But all we're looking for is some liquidity in that underlying option. And then for what I do in the coaching group, I'm never going to hold these through an earnings report. Right? The buy right is a very specific trade. designed to generate income, and I'm not going to mess around with earnings reports. Okay? So those are just, that slide is just some good guidelines for you to use as you move forward. This is an example of a covered call. Right, I got a couple extra minutes? Okay. This is for a covered call. It's hard to see here, but this was an example of a trade we did in our retirement coaching group. This was on, what stock did we do this on? Occidental Petroleum, right? We bought the stock, we sold the call option on that date, on 10/4, purchased 100 shares, we sold the 70 strike, and that left us with a cost basis of $62.38. Okay. What happened was, how many weeks later? 3 weeks later, we bought back the call and sold the stock simultaneously, okay, at an aggregate price of 67 1/8 for a 7.25% return. Okay. The stock was kind of volatile. It did go up higher, but I don't care what it does once I'm done. I captured my 7.25% gain. This was an actual trade that we did. And listen, not every trade went through. It was a tough year. But we did generate income using the buy rights. The buy rights we did based on these rules were profitable. I forget the exact percentage, but it was profitable. So that's selling covered calls. Part 2 of generating income in your retirement portfolio. The most popular, the easiest option income trade that there is, except for when Ron talks about selling credit spreads, then it takes second place. We let Ron take first place. Finally, I'm going to take 2 minutes because I talked about preservation. I probably should have made this the first P. But this is most, if you walk away from nothing else of all my ranting up here, understand that you have the ability to buy insurance on your portfolio. And that you should be buying it, especially in these current markets. Protect your assets, right? Protect your assets. Mark Twain, my fellow Connecticut Yankee, said, don't just sit there and worry, be proactive, do something, anything about what's worrying you so that you can gain information, focus, and control over the situation. I've suffered a great many catastrophes in my life. Most of them never happened. It's another great quote to if you're protecting your portfolio. Now, I'm not saying it's going to protect it dollar for dollar all the way down, but if you're able to mitigate the kind of drawdowns that we've seen, that's going to help you as you manage your portfolio. Buying put options to protect either individual stock positions or your entire portfolio. The type of stocks we buy, generally, what I use in the coaching group and what I would recommend to you is the SPY puts. Some folks like to trade the SPX. Either way, you have a broad index to protect the type of stocks that we purchase in the retirement portfolio. Quick case study on this. This is just a screenshot. It's called the options replay. It's kind of a look back at how this trade worked out. Let's see what the date was. On 9/20, in our coaching group, I bought 2 SPY October 394 put options. Those were at the money puts on the SPY, the S&P 500. Paid $10.90, we'll call it $11 per share. Cost me $2,200 to do that. Okay, this was just 2 in the buy right portfolio. What happened? Well, 3 days later, we sold those options at, what did I sell them at? $22, right? For a $2,200 profit. It's a 100% gain. $2,200 profit 3 days later. We did another trade not long after that on October 5th. Here the SPY was down to $375. We bought at $8.99 a share. We bought another 2 contracts. And this one was, I think, this was a long-term one. This was 6 days. 6 days later, we sold them at whatever it is, another 100% return we had. Okay. Those are just a couple of examples. We currently had a couple of bear put spreads that we closed recently for profit. Now, to be honest, not every one of these works. And in fact, I like it a little better sometimes when they don't work. Because if I don't need my insurance policy, what does that mean? It means my asset wasn't damaged. Okay? So this is not a trade to play the market to the downside. This is protecting your, if you're in cash, you don't have to do this unless you want to trade with Ron or with Jerry and Dr. David. Okay. You're doing this to protect your portfolio. They all don't work, and it's honestly perfectly okay if they don't. And we have risk management techniques for these as well. So we'll try to get out of those. Okay. Sir, one question, I'm going to wrap up. I went a little longer. The question is there a timing system to buy this protective put? Great question for me to end on. So here's my guidelines for that. The line in the sand that says, I've probably waited a little too long, but I'm going to buy protective puts when the DEW goes down. Okay? Not even the confirmed call, even though sometimes the confirmed call, if the confirmed call comes first, use that. I buy protective puts because I see the RT tick down. I buy protective puts if I see a red light in the buy-sell ratio column. I buy protective puts if I watched a scary show the night before and had a nightmare in the morning. Right? I worry. Right? But I try to do what Mark Twain says. I try to be proactive. I want you to worry about your net worth. Worry about it. But in a positive way, where you take action to protect it. Learn how to buy protective puts if you don't already. Use the market trends, the color guard, timing the market to understand when it's time to protect them. Okay? And it'll help mitigate the drawdowns with trades like that. With that, I'm sorry I went over a little bit, but I'm going to go ahead and wrap it up there. Thank you. Just not enough time.
That's great. Well, thank you, Jim. That's an important topic to cover in great depth. That's why Jim spends so much time with it. But when you're gearing up towards retirement, you know, if you're planning for retirement and you still have time, congratulations. But if you're there and you're gearing up for it, this protection piece is absolutely paramount. You've got to be able to protect your portfolios. So I know many of you are part of the coaching packages and have access to Jim. If you're being introduced to this for your first time or you wanted to learn more about mastering this topic, I talked about this a little bit this morning. You know, hold on to that one piece, that one thing you want to master and master it. Then in the offers page, VectorVest.com/offers, you'll notice one of the courses is the Retirement Portfolio Transformation. And that course is all about understanding these concepts. And don't get scared by the option pieces. In that course, Jim covers everything and teaches you exactly when to do what you need to do. So it really is a great course for those of you who want to take that next step. So next, we're going to bring up Mr. Glenn Tompkins again for an extremely exciting talk on situational investing, going with the ebbs and flows of the market, and he's going to show you some pretty powerful performance. Take it away, Glenn.
Joey is on. Sigh. Check. Yep, I just shouted you out again. Joey. Check, check. Thank you, sir. Are you mad at me now, Joey? Okay. I like it when you're mad at me. All right. This is going to be a fun talk again. You know something? What talks do I ever get that are not fun? All right, so. Situational investing, and this is important because just as its name says, you have to know what to do. Now that's an alarm. That's a little different. That's an alarm, especially if you got to take meds and stuff. I got meds I got to take, but I'm waiting until I'm done. Situationally, what to do. So we're going to start with a little bit of psychology right here. I'm going to make a statement. Trading is your business. You're going to respond, and I will make time for it. So we're going to try that. This is your business.
And I will make time.
Holy smokes. Listen, do y'all need some coffee? Because I can go get you. We got a lot of coffee out there. This is your business. All right, because it's important. And for those of you who are not saying it, then you know there's a difference between understanding that and being committed to that. Being committed to this is your business, because the things that we talk about in here are all inclusive in helping you to grow your business. So from a situational investing standpoint, let's start off recognizing, I didn't want it on this side. Joey, I'm moving my mic. You're going to hate me for it, because that's where I put it. And blah, 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 blah. That's what, all right, I like it here. And that's just how Joey sounds. All right. Recognizing what the market is doing and implementing strategies that are consistent with that behavior. So, just because there's a stock that you think you like, just because that there's a trading system that you like, just because, whatever, what all of the just becauses are all about, is it conducive? Is it consistent with what's going on? And remember, going back to the beginning, what did I say? You need to have a trading plan. Plan your trades, trade your plan. But if you're not going to do that, then you set yourself up possibly for failure. You don't want to do that. So situationally, what is the market doing? My when to buy. What stock should I look at? That's my what to buy. What stops am I going to put into place? That's my when to sell. That is my trading plan, situationally. Common strategies. Now, let's go see where your heads are at. How many of you are buy and hold in all markets? And you know, it's all right if you are, and I got somebody who was brave enough to put their hands up. And you know, it's a tough market to be able to do that. There's no ifs, ands, or buts about it. It's a tough way to be for us to try to do that. I totally understand that. But I'm going to show you something, and you're going to have to make a decision. Riding the wave. Ooh. Going up. How many of y'all are on board with that? Going up when the market's going up, just like a wave. Going up when the market's going up. Going down when the market's going down. A great question came up, though. What happens in a down market, in some of your trading that we have, what happens in a down market where you have to short stocks? What if I'm not comfortable shorting stocks? Well, then, if that's the case, Jim just talked about protective puts. For those stocks that you want to hold long term, if that's what you want to do, hedge. Or maybe you do contra ETFs. And if you're brand new to contra ETFs, first thing I'm going to talk about is you probably want to look at non-leverage contra ETFs to step into the game. But if you're a little bit more aggressive and you want to trade in those down markets, the 2-time and 3-time leverage, but folks, you don't want to hold them any more than a day or two. You got to understand that. They're not for long-term investing. The non-leverage, though, might be a little bit more in line with longer term to play the market to the downside. And for those of you who go to cash in a down market, I want you to know this. Markets go down faster than they go up. Don't forget that and understand that when a down market comes, instead of sitting back from a situational standpoint and going, oh man, the market's down, I'm just going to go to cash. You know something? I won't berate you if you go to cash. If that's what fits you, do it. But understanding that down markets do provide you with an opportunity to make money. You just got to know what vehicle works for you. All right? Bottom fishing for big profits. Whew, that's big. After a market has been beaten down, that rubber band stretches and you turn around and, man, market comes off of a bottom and just takes off like a bird. How many of you have come late to the party? Raise your hands. Let me tell you something. Within the VectorVest system, folks, we give you plenty of opportunity to know. Get your shopping list ready. Hey, today was an explosive day. And then you still don't listen. Well, because the market was going down. Hey, these stocks are up. Yeah, I know, but the market's good. Hey, these stocks are really up. Okay, I'll do it. And then the market goes down. Being able to get in early on those opportunities when it's bottom fishing, you read the VectorVest views, you listen to the daily color guard reports. We prepare you for those opportunities. You've got to be like a cat on a hot tin roof and be ready to pounce at the right time. But we give you plenty of opportunity to know. All right, so when it comes down to understanding the different situations to get into, situationally, we need to look at historically what has worked in those situations. So we're going to go through a myriad of about 3 or 4 different back tests. So for those of you who've always said, man, we need to see how you do a back test a little bit more, well, this talk is going to talk about it. All right, and it's laid out what we're looking for each scenario for the situation. So this is the buy and hold in all markets, whether the market's up or down. Can it be done? The answer to that question is yes. Will you like the results? That's going to be up for debate. All right, so let's go into the system. And Ron is mousing for me, and Ron was like, hey, take it easy on me. Well, you sat for the wrong talk for me to take it easy on you, because it's going to be a lot of back testing. All right, let's go to the back tester. Where's it at? There it is. And there's stuff up there. Which account is this? This is the education account. Jerry, I think we should be able to delete all of those, right? This is the one that we use for strategies and stuff. I think, oh, fine. Let's just highlight them all. Highlight the first one, scroll all the way down, highlight the last one, right click. The only person that's probably going to hate me for it is going to probably be Todd. But Todd is one of my good friends, so he'll forgive me. Sometimes you've got to ask for forgiveness rather than ask for permission. So.
You just copy it. You could have just deleted everything, and once you were done, you could just paste it.
But the only problem with that, with everything that we got going on this internet, it probably would have taken me a lot of time. It's going to already take me a lot of time, so I wanted to clear out what was there. That's a great suggestion, but on this internet, probably I didn't want to. So that I could have copied them. I could have copied them over just to save them, but they would have still been there, type of deal. So I didn't want to do that. All right, so we're going to click on back test an idea. Man, if I fall down, somebody better come help me. Don't laugh. Make sure I'm good first before you laugh. Because if you laugh and I'm not good, I'm going to be very upset. All right, first thing I want to do where it says back tester, let's name this. And we're going to call this Tampa 23 buy and hold. All right, and now we're going to build a custom trading system. So we're going to go down to build a custom trading system, and we're going to set it up. Now this is for a buy and hold. What are we not going to use? Market timing. They'll be afraid to talk. All right, we're not going to use market timing, so he's going to uncheck market timing. On the situation for up, he's going to click on that. Automation rules. Well, we're only in one situation. We're buying and holding. So it's only buy long. All right? What is the search that we're going to use? We're going to find ruler stocks. We're going to go to search is prudent. A lot of questions are on YouTube. What is ruler stocks? Ruler stocks are stocks that go up pretty much in a 45-degree angle. You can put a ruler on the screen, and those stocks are following along with the ruler. That's what a ruler stock is, really going from the bottom left to the top right. I've seen that asked on more than one occasion on the YouTube channel. All right, we're going to go to ruler stocks. Let's go to stop criteria. Are we using any stop criteria? Nope, because we're buying long and holding. Let's go to more settings. What does the book say? How many stocks are we going to buy? 20. Why would I want to change that to 20? Why would I want to do a 20 stock portfolio? Only one word, it starts with a D. Diversification. If I'm trying to hold these stocks long term, 20 stocks, I want to try to grab as many industries, different sectors as I can. So we're going to do a 20 stock portfolio. And let's go set up a date, a long-term date. Go down to, click on OK. Oh, you got that. How do you get that thing out the way?
Let me.
There we go. All right.
Not the best way to do it, but it worked.
All right, click on finish. Now we've got to set up our date range. Just to let you know, when you first set up a test in the back tester, it automatically goes out a year. We're going to go back, buy and hold, we're going back to 1996. That's going to, all right, so go down, click the begin date, click it again. You know how to do that, right? Go back and just go back, find 1996. And we're going to buy on the date of 9/13/1996. Man, a lot of y'all wasn't born then, were you? He's up to August. Go back, go up 1 month.
Oh, September, sorry. Sorry about that.
Is it what date?
13th.
The 13th. Friday the 13th. Whoa, we starting this off on the right foot. All right, and we're going to hold it up until 12/5/2022. So that was the time period that Steve had click on OK. That's the time period that Steve had set up for this test. And this is where the fun begins. Let's hit on finish and run. Now, we're going to watch this as it goes, and the young gentleman who gave me the answer about how to protect those, this is why I didn't want to do that, because it's going to take a minute. So as you watch this go along, you go, hey, that's good. And the market is going, and so this is why, from a situational perspective, you're going to ask the question, is it okay to buy and hold? And you look at this and go, yeah, I'm a genius. This is buy and hold. And that equity curve looks good. I'm good. And then as it goes along, it's just hitting new highs. It's up a lot of percentage, 122, 144, 54. Man, that thing is just moving. All right, but this is going to be a long test. And Jim says to me, he says, well, I don't think you're going to have a hard time talking over this test. And the answer to that is no, I will not. All right, so as you watch the equity curve, it's got a long way to go. 1996, 2006, 2000, it's less than 20 years. Man, let me tell you something. If it goes past the number of 20, that's fingers and toes, I'm in trouble. I am so much in trouble. All right, and we look at the top. What catches your attention as you watch this graph go? No, the max drawdown. Look at that max draw. Now, wow, look at that pullback. If you're sitting in this portfolio during this time, what are you doing? But wait a minute, I'm still up 111% on a retirement long-term buy and hold scenario. So what did I say? You would have to make your own decision when looking at this. Holy smokes, going back in time, I'm still up 100%. How many of you can say that in a long-term buy and hold portfolio that you've been up over 100% at any point in time? Okay, and that's fine. That's fine. But notice that there weren't a lot of people that raised their hands. Most people don't. So, and now look at that pullback, look at that fall down. And what did the portfolio do? I'm still in good stocks that are diversified. And look at that run again. That's a beautiful thing. What's that drawdown? Still at 42%. What's the percentage of winners? 85% of the stocks are winning trades. That's another factor when looking at this kind of scenario for long-term buy and hold through all markets. All right, look at that. Wow, big pullback down again. But you notice something? It's still not as big as the previous pull down of 42%. That number didn't get any bigger. Interesting, right? How much are we up right now? 184%. How many of you have ever been up 184% in a portfolio? Several. Guess what? Still, not a lot of hands went up. And this is buying and holding in all markets. That's the key part of this. And this is kind of, I got to give this side of the room some love as well. I need to do a DJ thing. Party over here, party over there, party. But I'm not going to do that. All right, so We're still at that 42% drawdown. Buying and holding is attainable, but at what cost? Are you willing to sit through a 42% drawdown? Even though you are currently up, wow, on a, what did this start off with? What was the portfolio? Probably a $100,000 portfolio. How many of you would be happy over this time period? Now you've grown that to almost $1 million. Well, I'm $400,000 off, but it's closer to $1 million than it is to $100,000. Somebody's sitting back on, holy smokes, $654,000. How many of you would be happy with that? Yes or no? But at what cost? How many, look at this still with that diversification, 90% of the stocks that are bought and sold, you're 90% winners. This is your business. Yeah, I will make time for it. I'm not saying it no more because y'all are letting me down. How much are we up now? 600. What is that? 800 or 600? Let me go look. Joey can't follow me. Look at that. We're sitting at almost $1 million on a portfolio that started off at $100,000. Still only 40% drawdown, 90% winners. We're now $1.2 million portfolio on a $100,000 portfolio. We didn't hit 2 million. Did we hit 2 million? 147, $1.5 million. So, the question comes up, can you effectively buy and hold through all markets? The answer to your question is yes. But are you willing at any point in time, how many of you have the stomach for a 42% drawdown in your portfolio? I like that. He's young. That's why you can do that. You're young. Listen, you look at all of the gray hairs in this building, they don't have that resolve. I'm just telling you, I like your enthusiasm, but I pray that you got a lot of years to live to be able to do something like that. But that's a lot of money that was made to actually prove that you could do buy and hold over a long period of time. What did you need? You needed a plan. I had a plan. I was going to go buy, I wasn't using market. All I was going to do was buy ruler stocks. That was it. That was the plan. I did that. That's an awesome equity curve. But you sit back, 90% winners, that's huge. 42% drawdown, that's real. A lot of you, could you have sat through that? So to answer your questions, the question that came up, can you do buy and hold? The answer is yes. But at what cost to you? And are you willing, really willing and able to do so? We finished with what? 1,421%. The book says 1,422. It's a little off. But the max drawdown, 42%. The annualized rate of return, you made 54% a year. How many of you are actively making 54% a year? I'm waiting for that one person. I'm waiting because I'm finna take you outside and we're going to talk a little bit about what you're doing. All right, 54% a year, folks. All right, that's one situation. Take me back into the slides, please. There it is. Look at that. That's just, wow. That's awesome. Next situation. Well, let's take the market with its ebbs and flows. Let's ride the wave. When the market is up, we go long. When the market is down, we go short. So I am saying in this particular talk, we're talking about selling stocks short. I would probably go through and do this again, probably with contra ETFs, non-leveraged contra ETFs to see how that would work out. But in this case, we are selling stocks short. All right? Buy stocks on long waves, sell stocks on short waves. The riding the waves, we're going to use Chapel Champs goes ballistic, new highs, goes ballistic and new highs short. So on the upside, I've been trying to make a search for the last 18 years. I'm going to call it Tompkins Troopers. But ain't nothing trooping enough for me to be Tompkins enough. So one day you're going to see it. I'm going to be the guy that's going to do this, the special presentation, and I'm going to be all hopped up. Go, yeah, finally done. And then you're going to jump on all of it, and then it's going to go down. And I'm going to be, I'm sorry. I have to do another video and go, I'm sorry. All right. Oh, not yet. I didn't. Why? You didn't do that. I did that. All right. Let's go back to the software. Let's go set this up. Remember, folks, this is time consuming, ain't it? How much is your time worth? Number one. Number two, as I test these different scenarios, or as you go through and test your own scenarios, you've taken a lot of the time off the table, and now all you have to do is let the system do its work. And as you say that, as I say that, there's going to be times when it's not going to be as pretty. But what do you need to have? The patience. You know, when do you change your investment strategy? When what you've got going, you've got a lot of trades that just aren't making money, maybe at some point in time you step back a little bit. That's why stops are important. That's when you step back a little bit and go, holy smokes, what's going on? And that's the time you reassess your trading plan. Does everybody understand that? Yes or no? Yes. All right, so never, even though we do a strategy of the week every week, it's not designed for you to change your strategies every week. You stick to what works for you, because what works for me may not work for you. Once you've honed in through this process or whatever process you want to use to find your trading plan, you stick to it. Someone was talking to me about a stock that they own, and they said, man, should I sell it? Always remember that when I go look at the graph and the stock is going down, the first words out of my mouth, and I said this to two people, the first words out of my mouth are, the damage is already done. It's up to you now as an individual to do what's best for you. Whether that means close the position. I like the idea of closing the position. Even though you're going to take the loss, you've now freed up that capital to take what you've learned here and put it into a better stock. Or, well, I need to hold it. Okay, that's on you. But as David said, how low is low? Or was it Jerry? How low is low? You don't know. And at some point in time, a 20% decline turns into a 30% decline, which turns into a 40% decline. And then again, someone says you need to sell it. I can't afford to sell it. Can you really afford to hold it? That's a decision that only you can make. But the VectorVest system is going to provide you with that information to help you to make the hard decisions. Some of these decisions are going to be hard. Why? Because we get encumbered and attached to a stock. Y'all need to get off that horse. As much as I love Apple, I know when it's not time to be in Apple. No matter what stock you hold that you feel that you're in love with, they don't love you back. You be like, hey, Apple, Daddy needs a new pair of shoes. Apple going to look back and go, I don't care. And that's going to happen each and every time. You're going to get denozoed, I'm telling you. All right. Are we ready to start a new one? All right. We're going to call this one Tampa 23, Ride the Wave. Now, we're going to take a different step. We're not going to click on Build a Custom Trading System. We're going to select Existing Trading System. How many of you know that we have a trading system viewer? Everybody. All right, put your hands down. How many of you don't know that we have a trading system viewer? You can't put your hands up because it's up on the screen, so now you know. Now you know. All right, this one for riding the wave, we buy stocks long on the up wave, sell stocks short on the down wave. We're going to go find the trading system. Chapel's Champs goes ballistic. Hey, we're going to click on it. Now, the cool thing about trade. Now, and I don't want you to raise your hands. How many of you are not making money with VectorVest? I don't want you to raise your hands. Because that's bad PR. Where's our PR guys? Yeah, that's bad. Don't look at the people who raise their hands. That's not what we want. All right? But if you're not making money with VectorVest, folks, you've got a trading systems viewer that gives you and actually holds your hands through a trading system of knowing when to buy, what to buy, and when to sell. Who out there does that? That you don't have to pay gobs and gobs of money to. Folks, you've got it right here. And remember, I made the statement that you guys as VectorVest subscribers are ahead of the curve? I wasn't whistling Dixie. You guys have at your fingertips the people back at the main office that do this work for you, and all you need to do is follow it. So when I see anybody in this room or hear anybody tell me that you're not making money with VectorVest, I gotta sometimes hold your feet to the fire and ask, what are you doing? Not in a bad way, but in an inquisitive way to see what you're not listening to within the VectorVest guidance. Folks, on the Daily Color Guard Report every night, we fill you in on what happened and prepare you for the next day. On Fridays, we give you insight into the market with Angie Akers. Throughout the week, especially on the YouTube channel, folks, I got to give hey VV Nation, I got to give out a plug for that, folks. We put a lot of pertinent information that's not always talked about in the VectorVest software. How many of you do not follow us on YouTube? That needs to change. And y'all can do that before you leave, even on your phone. Go to YouTube, search for VectorVest, subscribe to the page. Hit the bell icon. You'll be alerted when new videos come out and when new live streams come out. How many of you watch my live streams throughout the week? Hot dog, that's what I'm talking about. You know, a lot of people don't always get to watch it because they're working. I totally understand that. But, say again? Or watch the replay. You got to do that. We're going to grow our channel a lot this year. All right, dang it, it's going to happen. I told you it was going to happen. That's because I got a lot of energy. Stop. I told y'all not to laugh at me unless you found it. Yes, I'm okay. I like you. All right. We're gonna select Chapel's Champs Goes Ballistic. He's going to select it. Now, the cool thing about doing that is that everything is already set up for me. It knows when to buy, it knows what to buy, and it knows when to sell. It's already there for me. Chapel's Champs, using the stop criteria of the profit locker, ATR. Try to maintain 10 stocks. Automatically replace closed positions. On the downside, sell short. Ballistics new highs short. Using the profit locker, ATR. Try to maintain 10. It knows what to do. Holy smokes, folks. I just clicked on it, and it knows what to do. And now I can go run a back test. Let's go down to change the date for me, Ron. Let's go change the date from 1/7/2019. Man, it's a 3-year test. That's kind of cool. The end date is going to be 12/5/2022. So it knows what to do. How much time did it take for me to test this? And I'm going to show you something quick to help to confirm and solidify this whole scenario. This is riding the waves. And again, what's the stop criteria? What's the call? Go to edit account settings. Oh, no, scroll all the way over. You got it. Scroll all the way over. There it is. We're using the green light buyer RT kicker. And Jerry talked about the kicker combo, taking the ups and the downs, but using the RT kicker, which uses the confirmed down call on the downside. But the green lights are confirmed by 2 moving averages of RT. That's a good wave to ride. All right? What's the date? Did you change the date already?
1/7/2019.
And set it up to 12/5. Let's run it. All right, so now, a couple of different things. A lot more calls. Lot more calls, number one. Number two, I've actually got stops in place. Number three, I got the calls. Well, the calls, I got the market timing calls. This is really 1 and 2. So that's going to be a little different. Do you expect the gain to be nearly as high? No. Oh, but you know what's going to probably change? What's going to probably change? The drawdown. All right, look at the equity curve. So it's a little jagged. It is. And you know something? What am I up? I'm still up over, I can't read that. Sorry, Jerry. 38. I'm up 38%. You know something? Let me go to the other side because I don't give them enough love. Let's go to the other side. All right, I'm up 38%. Equity curve a little choppy. Could you deal with that? With a drawdown of 15%? Could you deal with that? Let's talk about that. What's the percentage of winners? 51%. Whoo! Anything better than 50% is a good thing as far as winners. You agree with that? If you could be in a trading system that has at least 50% winners, you're ahead of the curve. So I'm a little bit now. I'm 57% winners, 15% drawdown, nice looking equity curve with all the. So I'm riding the waves. I'm up on the green light with the RT kicker, and on the down calls, confirmed down calls, I'm playing the market to the downside. 15%, 57% winners, and this has got commission. Well, that's going to screw it up a little bit. That's all right. 50% winners, 51% winners. I took a $100,000 portfolio and turned it into $232,000. Folks, I'm only looking at a 3-year test here. Anybody happy with that? When I asked the question of people who's not making money with VectorVest, folks, yes, this is looking back in time. But as it's looking back in time, how many people have some semblance of, that's not the word I'm looking for. I'm not looking for confirmation of, dagnabbit, I'm losing my head a little bit. Comfortability, that's not the word I'm looking for. Anyway, confidence, I knew it was a C word, confidence. This does give you a little bit of confidence, doesn't it? I'm gonna add to that a little bit. So yes, Lynn, you had a question.
So this is telling you to get out of certain positions at certain times.
So based upon the system, the question is it telling you when to get out of certain positions at certain times? Yes. So in an up situation, we're long. In a down situation, we're short. So when the situations, remember this is situational investing. When the situations turn or change, what you do is different.
So specifically you're saying get out of this position, this position.
It will tell you to, yes, we're closing by way of this system. It'll tell you we're closing these stocks and opening up these stocks. One more question, yes.
Do you need a robo-trader in order to apply the system?
Do you need the robo-trader to apply the system? I'm not trading through robo-trader. This is just a back test. These are not actually putting any trades. Now, if I wanted to initiate this to a broker that VectorVest has a partnership with, then yes, I would need robo-trader, but I would still need to click the button to initiate the trades.
So you can do it manually?
Yes, you can. So I can run this, and I'm going to show you how you do it manually in a second. All right, we finished up 644% in 3 years, folks. 644, go back into the slides for me. No, not yet, don't do that yet. 26% drawdown. I cut my drawdown in half. Is that a lot more doable, yes or no? Yes. Holy smokes, and look at the equity curve, and 56% winning trades. No, because I gotta go into the software anyway. Put me back into the slides. One question, go ahead. Profit Locker Pro is what you need for this. But Steve was working on a process to use it without Profit Locker Pro. I had not tested it. He was going to show you that today, but I had not tested it, and I did not want to step on that and break it without, I needed to do it justice. All right, so he was going to show a way without the Profit Locker Pro, and I'm going to say the stop was something like the stock not equal to a buy on the long side. Yes? So he'll do a special presentation to show that. Yeah.
Sorry. So question, I've used that system, and some of the shorts are not, you can't short the stock.
Great question.
A few of those that come up, and you'll have 10 of them, and half of them you can't short.
For all you out there in VV Nation, The question was, in some of these scenarios, in real world, you can't short these stocks. I understand that. My suggestion would be, one thing is to see, if you're in a big broker house, that shouldn't be as much a problem. I don't know who your broker is, and I don't want you to put it out there. But broker houses can make a difference in regards to that. That's one way to go. If another way to go is go down the list. Remember, it's the power of the search, right? It's still the power of the search. So if you can't find the ones that the broker has, go down to the next stock. All right, so that would be my second answer to you. All right, and I'm not trying to bash any broker houses, except for Robinhood, but you didn't hear me say that. Stop laughing, VV Nation, because I didn't say that. No, yeah, go ahead.
By when do you expect this search to be available without using profit locker? Because
I just heard about it. I haven't the slightest idea. I'm sure that soon. I'm sure that because he wasn't here, probably the next time Steve does a special presentation, he will show that. I'm thinking that that's going to be the case. All right. So with that being said, 696% gain, annualized, 3 years, folks, annualized 178%. How many of you are a little bit more prudently aggressive? What I like to call progressive. That's probably a progressive way of going. I like that. Yes?
Is there a way of switching out short and doing contract?
Yes, you can do a test. So go back into the system for me, and let's make a copy of this. I don't disagree with that. So what I would...
Yeah, because I use a lot. I'm a nut.
So what I would do is I would... Martin, hold on a second. What I would do is I would create a search specifically looking at non-leverage. Everybody needs to write this down. I would make a search in the VectorVest system that's specifically looking at the watch list of non-leverage contra ETFs. It will be, and you can use that as the short side, but it's going to still buy long. You want it to buy long. That would be, now I've not done the test, but for those people who are saying, man, I'm having a hard time with the contras, that's going to be my way of telling you to test that. I don't know if it's good or bad. On paper, I'm thinking in my mind, it should alleviate a lot of the losses that the contras are showing right now. So try it. Somebody send me an email and tell me if it's good. A lot of questions, I know. Let me get through the last. If I got a little bit of time after my last little piece here, I'll answer your question. All right, it's if you go to the watch list viewer and look under ETFs in the watch list viewer, you'll see a lot of bullish ETFs and contra ETFs. You will see a watch list that says non-leverage contra ETFs. That's where you find that. Yeah, go ahead.
if you chose 3 years, take 5 years, 7 years, I think the result will be distorted.
Say that again?
You chose 3 years, right?
Right, I chose that.
5 years, 7 years, it won't be the same.
All right, so let me talk about that real quick. If I'm being more in tune with what's going on in the market right now, besides the buy and hold, would I go past 3 to 5 years or so right now? Or would I be more in tune to what's going on in the market right now? So whether it's skewed or not, I think it's more realistic in the current market's condition. Does that make sense? So you're right, it could look bad 5 years, 7 years. It could. Am I worried about that for being a little bit more aggressive? Why would I not look at the more current data? So 3 years is right in line with that. All right, let's go back to the slides. I'm going to do one more. And I'm probably going to hold off on the last one because you've got them in your book. All right, so I'm going to do one more. Yes, all right, I'm going to do one more. All right, nice looking equity curve on a 3-year graph. And the thing is, as I've walked you through it, I think you're getting a bit of a handle on how to initiate utilizing the back tester. So do I need to do all 4 of them? The answer to that is no, especially if it's in the book. So the art of bottom fishing, it requires a different way of thinking. You want to identify stocks that are hitting a bottom when the market has bottomed. All right, how do you know when a market is bottomed? Utilizing the VectorVest system, how do you know when a market is bottomed? In the BSR and the what? And the MTI. For those of you who are new, those are two market timing indicators. When the buy to sell ratio hits a level of 0.20 or lower, the market is looking for a bottom. When the MTI hits a level of 0.60 or lower, the market is looking for a bottom. The lower below those values they go, the stronger the rebound is going to be. All right? So when the market is bottom, the stocks will often carry sell recommendations. Aha! Someone asked me the question, would you buy a sell recommended stock? And the answer to that is no. This is the only time that I would ever buy a sell recommended stock. Does everybody understand that? Yeah, if you don't, tell me. That's important. You don't understand that. So when I'm looking at bottom fishing, I'm looking for stocks that have been beaten up. They've been beaten up enough that they've gotten sell recommendations. They have not been able to come off the bottom yet to move from a sell to a hold to a buy. So this is the only time, knowing when the market is at a bottom or looking for a bottom, this is the only time that I'm going to buy a sell recommended stock because it has been beaten up and the market's looking for a bottom. Do you understand now? All right, so the question is that for the last year or so, that every time those levels were hit, they went down, or they went up and then went back down a little bit. So let me tell you this. Again, historically, when I'm looking at from this perspective of bottom fishing, I have made more money more times than the aberrations that have happened in the current market condition, and there's a reason why. Because we got a hawkish Fed slowing down the economy. Prior to that, those bottom fishing opportunities were there. And if I put them all on a scale, out of 10 campaigns, I've made more money on those, on more of those campaigns than not. That's a great question. All right, and I got you covered. All right, effective bottom fishing requires precise timing. So when I look at this, I'm not going to even do a test on it. I can clearly see a market bottom here. When I look, when I look at the MTI, clearly below that level, I don't need an MTI, but the MTI less than 0.60, the buy to sell ratio less than 0.20. And what am I looking for? I'm looking for an explosive day. Well, after that bottom, did I get an explosive day? Woo-wee, sure did. And that's when you start to jump into those bottom fishing stocks, which most of those stocks are going to be sell recommendations.
Hey Glenn, are you looking for both those metrics or either one?
I'm looking for both of them. I'm looking for the both of them. But sometimes you'll have one more than the other. If I'm going to do it that way, I'm specifically looking at the buy to sell ratio. When I'm looking at the matrices of the MTI and buy to sell ratio, am I looking for both of them to be below those levels? The answer is yes, I am looking for both of those, but the buy to sell ratio, I'm looking to carry a little bit more weight. So, for the lack of time, we did a test for less than a year. For less than a year. From 325 to 9/11, 429% gain. That's the power of bottom fishing. Now, let me back that up a little bit. The majority of the gains in that bottom fishing campaign was done when? Guess. First 2 weeks, right off of the bottom. So when I'm bottom fishing, folks, it's not for you to just go and just hold forever. The first couple of weeks off of a bottom is where you're going to make the majority of the money. All right, last situation, protecting profits. Start protecting profits when the MTI goes above 1.5 to 1.7. That's a great situational investing tip. When you see the market start to look for a top, and then you find the primary wave turns down, get out of those trades. All right? Read the VectorVest views and watch the daily color guard report to gain invaluable insights on market direction from the experts. Hey, Ray, am I considered an expert? Okay, that's fine. All right. So we took you through 2 tests of back testing. The rest, you guys have a handle on, and now at least it's opened up the door for you to do some of your own testing. And guess what? You may be able to make it better. How about somebody send me an email with the non-leveraged contras to see how that works out instead of selling stocks short. All right, that's it. Be aware of the situation and make sure that you're taking advantage in the right way of the situation. Don't be flying by the seat of your pants. Keep in mind what's going on from a market timing perspective, your what to buy, do your own testing. And there you go. All right, we got a break. I got a break. Bye, gotta go. See ya. Love you, bye.
Thank you, Glenn. That was great. Well, we've just covered a lot of material. I just want to kind of reiterate some of this that Glenn was talking about. I know he kind of skipped through this slide pretty quickly to stay on time, but this is that bottom fishing campaign that we had, and you can see when the MTI and buy to sell ratio were extremely low, how quickly that ramped up. When that market exploded off the bottom, it ramped up, and when the MTI started getting high, you can see what happened to that portfolio. So you're not in this for a long period of time. Sometimes, 2 weeks, 3 weeks, 45 days usually, and we typically see this over and over again. For a lot of years, this is primarily what I did. Probably 10 years ago or so, all I did was a few times a year when we hit these extremely low points was go in and bottom fish, and I could make huge returns. I mean, it's incredible the power of bottom fishing. We have a lot of special presentations we've done over time. Usually when we gear up, towards hitting that absolute bottom, we start getting excited, and you'll hear us talk about it, usually special presentations. We'll keep you informed when that time comes, especially in the Jockey Club. But the amount of gains you can have quickly are pretty incredible. So we're going to take a quick break. We're going to come back, and we have a very special presentation on the psychology of swing trading from Dr. David Paul that's going to start at 5 o'clock. So stretch your legs. For those of you online, come back and join us. In following Dr. David Paul's presentation, we're going to unveil something new that's coming very quickly that nobody's seen before. So stay tuned for that. We'll see you back at 5. Hello everyone. I just want to spend a few minutes covering the special offers we have for everyone in attendance at the 2-day investment seminar. As you already know, we are offering a $100 savings certificate that can be applied to either one of the 4 courses on the offers page or one of the annual group coaching packages. The discount will then be applied on our end when one of our billing specialists processes your order. We are also giving the 2-day video recordings to anyone who either renews an annual subscription of any kind or upgrades their monthly subscription to an annual subscription, including the coaching packages. Those who renew a base subscription of end of day or intraday, real-time or group coaching package will receive those recordings for 1 year that will be put into your university in about a week or so from now. If you're renewing the same annual subscription that you are currently on, we will charge you for another year at the discounted rate and extend your subscription out another 12 months from what you currently have remaining. If you are upgrading to a new subscription, like a coaching package, we will prorate the subscription that you currently have and discount your new purchase by the amount of your existing prorate. In this case, your subscription would be good from 12 months from the time we enter your order. Our billing team will enter orders throughout the week, so please be patient while we are aiming to have these orders completed by this coming Thursday. If you are a legacy subscriber paying a lower rate than you see, you can fill out the order form and our billing specialist will make sure you are charged for what your current rate is when they process your orders. To see all the special offers and download the slides for the 2-day investment seminar, go to VectorVest.com/offers. At the top of this page, you will see an image of the discounted voucher good towards coaching groups and featured educational courses. And no, you do not have to print or do anything with this voucher. We will handle all the discounts on our end. Below that, you will see the button to access the group coaching packages. If you click the Learn More button, you will see the special pricing listed for each coaching package. Just an important side note, if you're currently a real-time subscriber, you will notice that the Successful Investor coaching package is the same exact price at real-time, which is $1,295. If you purchase the Successful Investor package, you will be able to apply the $100 voucher. This is a no-brainer option for those of you looking to renew or upgrade to real-time. When subscribing to a coaching group, you will also get access to any coaching groups below that level you subscribe to. For example, if you subscribe to the Swing Trader coaching group, you will also get access to the Retirement and Successful Investor coaching groups. If you scroll down this page, you will see a list of all the groups and the software that is accompanied by each group. If you go back to the main offers page, VectorVest.com/offers, you will see the VectorVest 7 base subscriptions next to the coaching group offers. If you are just wanting to renew your end of day or intraday subscriptions or move from a monthly to an annual subscription, you can use this link. Another special note, if you're a legacy subscriber paying less than what you see offered, you can still fill out these forms and we will honor your discounted rate when our billing specialists process your order. Remember that everyone who upgrades or renews to an annual subscription of any kind will get the recordings to the 2-day for 1 full year. If we scroll down this page a little further, you will see the special courses that we are offering at a discount today. If you purchase any of these courses, you will also be invited to the next set of live mastery sessions we will be holding. First, we have the Successful Investor. The live mastery sessions for this course will begin in just a couple of weeks. And this course will teach you how to buy and sell stocks to safely and consistently average 15% growth per year. Next, we have the Retirement Portfolio Transformation. The live mastery sessions will begin in mid-February. This is a 3-part management method to grow and protect your retirement portfolio. Then we have a brand new course, Uncovering Trends, Technical Analysis the Easy Way. This course was developed by Mr. Jerry D'Ambrosio, Mr. Stan Heller, and Dr. David Paul. This is a practical approach to trading the most popular and widely used technical indicators. This course will be activated in the university and modules will be released along with live mastery sessions at the end of February. And last but not least, we have the special offer for the options paycheck that will begin in the beginning of February. This course is designed to help generate 3% per month trading options. That's 36% per year. And if you go all the way to the bottom of this page, you will see the link to download all of the slides for all of the presentations. If you have any questions at all, feel free to chat them into us. Thanks a lot. Welcome back, everybody. How's your break? Good, great. Well, it's been a fantastic day, and in typical style, we always come back. We do a special presentation. We brought an amazing presenter all the way over from London, England, with us. You all know him. You all love him. Dr. David Paul is here to talk about swing trading psychology, and I say this with all honesty. Dr. David Paul is one of the best, if not the best, swing trader there is, and he's built a life, on swing trading, world renowned, and we're very fortunate to have him with us here today. So let's put our hands together. Let's welcome Dr. David Paul.
There's a television show in the UK at the moment. It's entitled, "This is Going to Hurt." And I'm afraid some of the stuff that I'm going to be talking about in the next few minutes will cause you a little bit of distress. But it is a bit of a reality check. I'll tell you a story. About 2 or 3 years ago, a lady came to me and she wanted mentoring in stock trading, and I introduced her to VectorVest. She's from Cape Town. I introduced her to VectorVest, and she is using VectorVest to trade in the UK and the American market over a few months. She's pretty much using Jim's ruler stocks, and she's doing well. She's doing really well indeed. She hasn't done much this year. She's been in cash this year, but she's really, really, really happy. And about 3 months ago, her brother-in-law contacted me. And he said that he just sold a very big business and that he'd been given the mandate by his family to manage their family wealth. What's called in Europe called a family office. Do you call them that here? And he'd been given $10 million to manage. So he wanted my advice. Now, those of you that come on my webcast on a Monday afternoon, and certainly all the UK people listening, will know that I keep telling them that we are risk managers. We're not fortune tellers. And I keep rattling on about risk and how to manage risk and how to manage the volatility of the positions. It's quite boring. This fella told me, he said, "David, you're like a Timex watch in a digital age." That's what he told me. A Timex watch in a digital age. It took him 3 months to blow the 10 million. 3 months on over-leveraged positions, on positions that were a mile too big for his account. And he really didn't do that much wrong, except that the market just rattled him out. Okay, it went into a range and it just went up and down, in and out, and he rattled them out. He's lost the whole bloody lot. Just remember one thing, folks, that if you don't take care of your money, it's going to find a new owner. As simple as that. So what I want to try and do, folks, is to go through some very basic thoughts on managing risk. I'm in a completely different position from many of you, because for the early part of my career, I had an interest in a stockbroking company, and I've watched literally thousands of people trade, and I've watched the mistakes that they've made. And I hope that I can put that across in the next few minutes. It's not difficult, but most people stuff it up completely. So let me make a start, and let me see if I can get this right. Again, Timex watch in a digital age. So that's Mike Tyson. All right. Everybody talks about having a trading plan, yeah? How many thousand times have you heard that? And then you get one smack in the mouth and you forget all about it. And this is one of my favorite quotes It comes from $1 Million Baby. Now there's a motivational character. Clint Eastwood, 92 years old the other day, doing his life's best work. Okay, that is a motivational character. And he got an Oscar for $1 Million Baby. Hilary Swank played the title role. Clint didn't like to see ladies in the gym. So as she was working the old punch bag, he gave her one of those famous Clint Eastwood stares. And he stared at her and he said, "Are you working the bag or is the bag working you?" I say that to myself every morning before I start to trade that S&P 500. And by the way, you've cost me about £5,000 today because I do it in long. All right? So, and I don't drink anymore, so you can't even buy me a drink. Okay? So, are you working the bag or is the bag working you? So that's what I do, folks. I talked about this morning. In fact, trade. That slide says the Dow. Mostly these days I trade the S&P 500. I put together a methodology that looks at an hourly chart and looks at a 5 or a 15-minute chart to try and work out high probability, asymmetrical risk to reward moves. I take swing trades in both UK and US stocks. Those are done, the swing trades are done in a thing we have in the UK called spread betting, which is largely a futures contract apart from the legalese. And spread betting in the UK, the profits are tax-free, which I think is useful. Every Monday afternoon, I keep a portfolio which is in the market from about 2 to 6 months, and I manage that in my Q&A webcasts on a Monday afternoon. At present, I'm 35% invested, 65% in cash. If the market follows through, then I'll be adding to some positions and putting on some new positions in the next few days. But at the moment, all the trades are in profit. And as I say, it hasn't made much, but I'll be adding to that. And I have a pension portfolio focused on yield as well, which I've been running for a very long time. I hope that I'll never need the money. It's for my 2 boys. And Jim Penna knows much more about that than I do, so I'll leave that to him. So I've watched literally thousands of traders stuff up, and largely that epitomizes a losing trader. They buy in for some reason. The market goes up a bit if they're lucky, and then all of a sudden it tanks on them. Now, the pro simply gets out and loses 1% of his equity. Big deal, moves to the next one. But the amateurs hang on. And then, where's our friend across here, Mark? They buy more, and they buy more, and they buy more, and then they look at their portfolio and they say, well, I can't sell it now. Now, there are 2 adverse consequences of that. First of all, you lose money. And secondly, every time you open your portfolio, there's this big red thing looking at you. And you know what it says directly to your subconscious? It says that I'm no bloody good at this. So it has a huge mental impact on you as well. Now, the winner buys for some reason. Let's hope that reason is good. You've had a lot of information today to try and improve your entry points. If it goes, do your best to hang in there. These trends go on much longer than I would anticipate. And the pro adds and adds and adds. And I agree that sometimes you can have one stock which represents a huge percentage of your portfolio because you've added and added to it, but it's a grand wee problem to have. Would you agree? Every now and then you have to do a bit of rebalancing. I hate doing that myself because I'm getting out of a winning position. I spoke to one young man at the back about a company we have in the UK called Games Workshop. You might want to keep your eye on it. It makes toy soldiers, and it's just done a licensing agreement with I think it's Amazon to sell out of a very parochial UK market into a worldwide market. It's going to go a long way. So adding to that position And in fact, Games Workshop will be one of the stocks that I will be adding to should the market, in fact, break through a level that I'm looking, the UK market break through a level that I'm looking at on Monday afternoon, Monday morning your time, Monday afternoon English time. So that's what losing traders, winning traders do now. The difference between investing and trading, and you can read this for yourself, folks. I believe that the biggest difference between investing and trading is how the risk is managed. Investors will manage risk by diversification across the market. They may manage risk via options, but largely traders manage risk with stop-loss orders in the market. There is a point in the market where I'm just simply going to run for cover. Now, I need 3 things to turn a buck, folks. The first thing is that I need a methodology. And I think if over the next day, and you've had quite a lot already, there's going to be lots of methodologies thrown at you and lots of different time frames. We need to manage our money really well. And we need to manage ourselves really well. The 3 M's. The first thing is method. So, where's Glenn? Glenn, sorry, I can't see you for the glare there, big fella. Could you put up the Apple chart for me?
Woohoo,
Apple. Apple, it's just...
What did y'all do? No, I probably need clay. I don't know what they did.
Okay, well, let's not worry, folks. Let's use our wonderful imagination. And just think, I think you all pretty much know where the Apple chart, it's broken a major level of support a few weeks ago now. Would you buy it or sell it? Who says buy? Oh, don't give us that. Leave that for Ron tomorrow. There's zero hedge here. Long or short? Short. Who says long? Any longs? Here we are. Well done. Nasty looking chart, folks. Has broken that support level. Anyway, most of the people say we're going to go short. That's great. Now, in my hand, I have the ultimate trend detection device. This is a £1 coin. On one side, we have a coat of arms, and on the other side, we have got Her Royal Highness, who's sadly not with us any longer. Clearly, Her Royal Highness will be the head. It means Apple's going to go up. And the coat of arms is the tail, and Apple's going to go down. And that's not much of a throw, but it's not. Never let the truth get in the way of a good story. Tails. Apple's going down. You were all right. Would you play that game? Well, believe it or not, if you're a trend follower, that's better than what you're doing at the moment. Because trend following has got a hit rate of about 40%. If you don't believe me, read a book called The Little Book of Trend Followers. It's all about billionaires who are trend followers, and they have a hit rate, an average of 38%. Now, I want you to think of a special game, folks. And we need to go back to the slides, Glenn, after we've that done. Sorry to be a pain. I want to think of a special game. I want to think, you've all said that you won't play with a coin, but let's assume that if you can successfully predict the outcome of heads or tails, and you're prepared to bet £1 or $1, I'll pay you $2. Would you play that game? You said that you won't play with a coin. So, would you play that game? Well done, guys. It's a great game to play, because in 10 throws of the coin, if you bet $1, when you're right, you're going to make 5 times 2, right? And when you're wrong, I'm going to take your £1, 5 times 1. So on average, you're going to make, if you bet $1 per chuck of the coin, you're going to make 50 cents every time you throw the thing in the air. If you can find somebody to fund that game, you have in fact designed a game with a positive expectancy. And that's the first qualification of your game. It's not a function of how many times you're right, but it's a function mostly of how much money you make when you're right divided by how much money you lose when you're wrong. This can be very easy to understand at a seminar, but when you're trading, unfortunately, most of us just want to be right. Mark Douglas, in his wonderful work in Trading on the Zone, says that the 4 big trading fears, 1 is being wrong, 2 is losing money, 3 is missing out, and 4 is leaving money on the table. And he says, chapter after chapter, that the fear of being wrong is in fact much, much stronger than the fear of losing money. So, hopefully, we've got a game with a positive expectancy. Now, I've gone through this in the slides. Now, some months ago, myself and another fella, we went in the city of London to listen to a sales seminar of a crowd of people flogging a Forex course at £5,000 for a weekend seminar. And they'd hired a whole cinema, a decked cinema, for all these prospects coming in. And they said in their own literature that they were right 90% of the time. And I've no reason to dispute that. And because they said they were right 90% of the time, and they'd proved that with lots and lots of stats, they were selling these £5,000 weekend seminars like hotcakes. But in their own literature, they said this. They said that when they were right, they made 10 points, and when they were wrong, they lost 90 points. They were right 90% of the time. But here's what happened. When you're right, you make 9 times 10, and when you're wrong, you lose 1 times 90. The expectancy of the system is 0. So what looked like the answer to the proverbial maiden's prayer was in fact a losing system, because when you had clammy hands all over the mouse, that system will lose a great deal of money. Now, if you ever researched the history of the so-called turtles, founded by a guy called Richard Dennis in Chicago in 1980, 1981. And he, in fact, hired 21 youngsters to become commodity traders. Has anybody heard the story? Not heard the story? Okay. And his partner was a guy called Eckhart, Charlie Eckhart. And Eckhart said to him, Dennis, you're special. You've got some special gift to actually make money in the markets. And Dennis said, no, I can train anybody to do this. So they put adverts in the financial press, and they got 21 youngsters that they trained. Those youngsters went on to make more money than any other group in history. They were pure trend followers. Their hit rate was 38 to 40%. Their risk to reward was 7 to 1. So 4 times 7 is 28, and 6 times 1 is 6. 28 minus 6 is what? They make $2.20 for every dollar risked. Asymmetrical risk to reward is the secret for you to get wealthy. And to do that, you'd have to develop the presence of letting winners run and adding to winners. Once you get the hang of it, it's really, really easy. The first few times you do it, it's going to scare the living daylights out of you. It takes a great deal of testicular fortitude to make it happen. A great deal. So, I hope I've got across the whole concept of trading expectancy. It's not what you think. So the next time, if you go to the internet tonight and you put in futures trading system, stock trading system, the first thing that you'll see is somebody advertising that our system is right 80% of the time, because that's what people want. They don't mention that at 80%, to get 80% hit rate, they've got to push their stops, so their stops is as wide as the back of a number 27 bus, which goes from Hammersmith to Camden Town, by the way. And, and they've got to bring their targets right down to next to nothing to be able to do that. Things are not what they seem, folks. Think about trading expectancy. It's really important on any time frame. I've talked about, so that's hit rate, the number of times you get it right, risk to reward, and of course commissions and spreads. But in the US here, the commissions and spreads have come down to next to nothing. So it's a great game to play. So if you can produce and find and research a system that's right 50% of the time, and you can make twice as much when you're right as you lose when you're wrong, you've got it made. All you've got to do is to play the game over and over and over again. It's as simple as that. You don't need any great intelligence to make it happen. In fact, I'm sure the thicker you are, the better. Okay? So that's Apple again, back in the day, as they say. That's a 2-to-1 risk to reward trade. It's just a simple breakout, stop loss at the last reasonable low, and let it run up. If you've got the ability to add to it on the way up, and in the swing trading stuff and whatever, we talk about that in a great deal of detail. I do my best to add to every position. As it's get my stop loss to entry, add a little bit, get the stop loss to where you added previously, add a little bit more, pull the stop up behind you. I want to be huge when I'm right and tiny when I'm wrong. Again, it takes a little bit of that testicular fortitude to make it happen. Okay? Scary. Now, the next little bit, and I go through this exercise. If I had hours, I would go through the exercise, but we toss the coin again. So use your wonderful imagination. We start off with 100 coins in your kitty. And you can bet 1 coin, you can bet 50 coins, you can bet the whole lot on any one trade. So on any trade, folks, you've got 2 choices. And I'm going to forget about options for a second. Is the darn thing going to go up? Is the darn thing going to go down? And then how much do you bet? Those 2 choices. And how much you bet is the most important thing that you can put your mind to. Because I did this game at length with a crowd of fund managers in the City of London, and they all went bankrupt in this game. Because unfortunately, the probability of a bad one is a half. Would you agree? What's the probability of 2 bad ones in a row? This is going to stretch them mathematically. 1 in 4, a half times a half.
25%.
So that is a mathematical certainty, folks, that on a 50% game, and if you're a trend follower, you're not going to get to a 50%. I think if you put together, as I mentioned this morning, the technicals and the fundamentals, that you can easily get to 60%. I'll show you that in a second. But if you're playing a 50% game, you get 2 bad ones in a row every 4 trades. If you were to bet half your kitty on any one trade, which many people do, you go bankrupt every 4. How's that? Now, that is a huge source. Now, it gets worse, believe it or not, because what's the probability of 3 bad ones in a row? It's a half times a half times a half. I told you this was going to hurt, didn't I? A half times a half times a half is 1 over 8. In a 50% game, you get 3 bad ones in a row every 8. Now, did your mothers ever tell you that bad things happen in 3s? Most mothers tell people that. And that's because a run of 3 bad ones in a row happens all the time in a random system, in life. And your mother only had the mental capacity to measure 8 observations, God bless her. If you were to bet a third of your loot on any one trade, you got bankrupt every 8. This young man was smiling when I started my talk. He's not smiling anymore. I'm afraid. Now, I've done this little matrix, and I'm challenged here now. On a 50 over 100 system, the probability of a bad one is a half. The probability of 2 bad ones in a row is 1 over 4, 1 over 8, 1 over 16, 1 over 32. If you can get to 66%, which I think if you're patient, if you're disciplined, and you put together the fundamentals and the technicals and market timing, as we've tried to instruct, then I think you can get to the 66% level. Now, that changes things dramatically because you're only going to have a bad one 1 in 3, 2 bad ones 1 in 9, and then after that, 3 bad ones 1 in 27. You only have to handle 3 bad trades in a row every 27. So if those numbers scare you, really all it does is add to the urgency, in my humble opinion, to put together the fundamental position and the technical position. I don't think any of us, myself included, will be able to function as a pure trend follower with a hit rate of less than 50%. The clusters are just too difficult. If there was one good one and one bad one, it would be a piece of cake. No bother. But they're not like that. And those of you that are over 30, and there's a few of us here, those of you that are over 30 will agree that there was years where everything went right, and there was years where nothing went right. And that's simply a cluster of bad luck. They happen over and over and over and over again. These clusters are real. And by the way, I have a system on roulette that actually makes really, really great money trading the clusters. I bet that if the black comes up on the roulette table, that it's going to come up again. Everybody looks at me as if I've got 2 heads. I keep betting and adding to winners so I can get a run. And if I have enough wit to leave, I take some money off the table. And Ray Clark has got the literature on the roulette course. He'll give it to you as you go out the door. Okay. Do we get $100 off that course, Ray? No. Okay. So, folks, when you get up to 80 over 100, and if you're a market maker, you can certainly get there easily. Now, just remember when Goldman Sachs said that they haven't had a losing trade in the last 9 months, they're not doing what we're doing. They've got a client, and they're buying it and selling it to you. Okay? So it's a completely different business, but market makers can easily get it right 80% of the time plus. Big, big wads of money, tiny, tiny, tiny margins. I once consulted with a trader at a French bank in Paris, and he had 5 losing trades in a row, and we went through his stuff, and it was about 3,000 trades he'd made, and he had 5 in a row. So the stats came out. He was going mad, absolutely mad, and when you've got a cluster of bad luck, your mind starts to tell you funny things. Has anybody had experienced that, where you've got half a dozen bad trades in a row and your mind is telling you all sorts of funny stuff? Do you know what he told me, Glenn? He said that the reason he had 5 losing trades in a row is that he'd made love to a young lady behind the bicycle shed when he was at school. That is not one word of a lie. That's what he told me. If the cap fits. I did ascertain that she was a willing participant in the event. Okay, so that's what he told me. Your mind does, these clusters really fry your mind. So as far as I'm concerned, folks, to make this emotionally satisfying, you need to get yourself to a point where you're right about 66% of the time. Then the clusters become manageable. At a 50% game, you have to be mentally resilient, really, really tough to handle these clusters. Okay, if there were no clusters, you wouldn't need any trading psychology. And let's face it, at the minute, there's more trading psychologists than there are traders. They're coming out of the ground. Okay, everybody's writing a book about it. There's a new book by a guy called Tendler. I can't make head nor tail of it. But Mark Douglas's books I have on my desk. I have a book by a lady who is the US poker champion, a lady called Annie Duke. And she's got a book called Thinking in Bets, which is absolutely outstanding. And I have a book on my desk by my best friend, who I coached to trade, a guy called Tom Hogarth, who's trading huge size these days. And he's got a book, the title of his book is that the best loser wins. Okay, wonder where he got that from. Many small and large traders go broke with a great system because of a run of bad luck, which is on a mathematical certainty, folks. So how much, the very first decision you've got to make here, and I'm talking about swing trading now, how much money's in your account? Does anybody know that? Anybody not do that, know that? Now, when I go to a bank to do this, and I sit a room full of youngsters, I say to them, how much money are you managing? You haven't got a clue. They haven't got a clue. They've got to go to their line manager. He hasn't got a clue either. And they've got to go to the floor manager before they work. They can tell how much money this youngster is actually managing. So your first decision is to sit down on your knees in front of your God and say to yourself, how much money am I going to commit of my overall funds into my swing trading account? Will you do that for me? Humor me. And then, folks, resolve to never to risk any more than 1 or maybe 2% in any one trade. And there's a book called Market Wizards. And in Market Wizards, one of the traders that's in the book is a guy called Ed Sokoita, who's got guru status in the trading community. And he says that anybody who risks any more than 2% in any one trade is a gunslinger. Just remember, we're not buying 2% of shares. 2% is the difference between the entry point and where you run for cover. Your stop loss. And there is a simple little formula that will work out the number of shares that you can buy. And Stan Heller has got a little spreadsheet that does that automatically. I'm a bit too thick for such a thing. if you don't know how much money's in your account, then you can't size the positions correctly. If you can't size the positions correctly, then you're gambling and not trading. So that's one decision that you need to make. You can't control market direction, but you can decide upon your risk. I can just see all the UK people, their eyes rolling listening to this, because they listen to this every Monday afternoon, all about risk. We are risk managers, not fortune tellers. And this will keep you alive in a normal risk, in a normal losing streak without too much drawdown. And ready to profit from the next winning streak that comes around. Just remember, if you've got a 50-50 system and you're right, you're wrong, you get a cluster of 5 losing trades. You can also have a cluster quite easily of 5 winning trades. And believe it or not, people go broke on the winning streaks more often than they go broke on the losing streaks. Because when you have 5 good ones in a row, you're tempted to think that you're God. You become invincible. Position sizes rise, and then all of a sudden you hit a losing streak again and your history. Okay? All the big losses of this world happened after a winning streak. Speak to Kathy Wood. Okay? God bless her. Many of you may have used the stochastic indicator. I did George Lane's course nearly 40 years ago, and he used to say the most important thing in trading is to have enough money to trade tomorrow. Whether that's his own or whether he stole it from somebody else, I really don't know. So, folks, I've gone through this calculation so many times. I put it into my essay that I do for VectorVest UK pretty much every other week. If you've got an account of $100,000, 1% when I was at school is $1,000. Am I correct? Okay. You should never lose any more than $1,000. You know where you're getting in, and you should know at the outset where you're going to run for cover. And could simply be the VectorVest stop loss. That'd be as good as any. Or if you're a little bit better as a chartist, you may have a level on the chart that you want to run for cover on. But when you put that trade on, you need to have a damn good idea of where you're getting in within a tick or two, and you need to have a better idea of where you're going to run for cover. If the share should fall from your entry point to the stop loss, you should have a small loss. I know maybe you've heard this 1,000 times before, but my research tells me, by looking at literally thousands of accounts, that nobody does this. They're sure the damn thing's going to go up, and if it's going to go up, well, let's have a big punt. Anybody ever done that? So I've gone through the calculation. The calculation is quite simple. The number of shares that you buy times the risk on one share must equal 1% of your account size. And N is the number of shares you're going to buy. If you do that simple sum, the number of N is times the risk per share, it must equal 1% of your account size. So therefore, the number of shares that you would buy would be 1% of your account size, which was $1,000, divided by the number of dollars in the stop, the distance between the entry point and the stop loss. Now, if you don't understand that, then just come up to me afterwards and I'll talk you through that with the greatest of pleasure. There's nothing much to it. You can put it into a little Excel spreadsheet, and I know that Stan Heller has got something to do that. So we've got 2 objectives, folks. The first objective is to survive the clusters arithmetically. In other words, you don't go broke in them. If you're risking 1% of your account in any one trade and you have 5 losers in a row, you're down 5%. not the end of the world. If you were to risk 5% in any one trade, which is commonplace, you'd now be down 25%. And you wouldn't be feeling so good. If you were to risk 10%, which many people do, you'd be down 50%. And you would find that your dinner is coming up the table at you like a frisbee. And let's face it, gentlemen, it's always good to keep the home front happy. Okay? So surviving the clusters arithmetically, and then the next thing is surviving the clusters emotionally. And that's all about executing with precision. And it takes resilience and grit. And once it's mastered, the money is yours. Now, I have a different idea on emotions. Many people say that you should trade without emotions. That's, as far as I'm concerned, completely, utterly impossible because we are emotional creatures. And there's a psychologist out there, a trading psychologist, that's qualified university-wise, and she says that if you remove the part of your brain that's responsible for emotions, you actually can't make a decision as to whether you want a cup of tea or a cup of coffee. So we just would not be able to function. I believe that your emotions need to be completely redirected. So you've got a trading system, and I suggest that you practice being incredibly emotional when you follow that plan. So if you follow your plan, feel really, really happy. Get really, really excited about following that plan. So as far as I'm concerned, emotions you cannot get rid of emotion. They should be redirected. And I speak about that. If you want to read the VectorVest UK essay that I do, I write about that pretty much every weekend, how to do that. Now, this may look rather tatty, and the reason I've left it looking quite tatty like this, that it was done by one of the biggest fund managers in the City of London who did this for me. And he listened to my talk, and based on many, many thousands of traders, I asked myself, what are the winning traders doing and what are the losing traders doing? Now, initially I said to myself, well, clearly the winning traders must be better analysts. And I found out very quickly that they weren't. And I found that the biggest difference between winners and losers is that they thought differently. Here's how a losing trader thinks. A losing trader, folks, when they have a winning position, invariably becomes optimistic. So a losing trader, so let me get this right. A winning trader, when they have a winning position, they become optimistic and they let the position run. A winning trader, when they have a losing trade, they become quickly pessimistic and they cull it. Now, the losing trader, unfortunately, is wired completely differently. A losing trader, when they have a losing position, they become optimistic. They become optimistic that it's going to turn. And when they have a winning position, they become pessimistic. They become pessimistic that the market is in fact going to take their loot. So here's my challenge to you. On the next trade that you put on, I want you to sit back and I want you to be the watcher of your own thoughts. It's what some of the spiritual people call cultivating the silent watcher. And I want you to examine your thoughts. Now, your thoughts have got a great deal of momentum. watch your thoughts and see how you're thinking. And only by watching your thoughts will you be able to change them. And you want to get to a point, and only of the thousands of traders that I've looked at, only about 10% exhibited a winning trader's thought process. A winning trader, when they have a winning position, they become very enthusiastic, they become very optimistic. When they have a losing trade, they become quickly very pessimistic. Unfortunately, the 90% of losers, when they have a winning position, they become pessimistic. They're scared that the market's going to steal back their money, so they snap it. They buy a share at $10 and they run for cover at $10.50. They buy a share at $10, it goes to $9.50, and they become suddenly optimistic that the damn thing is going to turn. And just let it ride down the page. So my challenge to you, one, decide this weekend how much money you're going to put into your swing trading account. Resolve never to risk any more than 1 or 2% of that in any one trade. Think about trading expectancy and realize that it's asymmetrical risk to reward ratio that's going to make you rich. And if you can add to winning positions and develop the presence to add to winning positions, you're going to find that money's going to run at you so fast you won't know what to do with it. Where you're making $7 or $8 for every dollar risked. It's not difficult, but it takes a great deal of presence to get there. The other book that I have on my trading desk is a book on presence. It's called, by a gentleman called Eckhart Tolle. It's called Practicing the Power of Now, so that you can, in fact, be in the moment. And if I were to speak to Glenn here, in our youth, we were both taught to sidestep fear by being totally in that moment, totally and utterly prepared in that moment. And to sidestep those fears of being wrong, missing out, leaving money on the table that Mark Douglas talks about. So books that I've got on my desk: Mark Douglas's Trading in the Zone, Thinking in Bets, The Best Loser Wins by Tom Hogarth, and Practicing the Power of Now. On the shelf, I've also got Reminiscences of a Stock Operator. I think it's time for a reread of that. Mark Douglas's book, I think, would take pride of place. It's actually done more for my development than anything else, and he's sadly not with us. So some decisions for you to make. I'm going to be hanging around now for this evening and for tomorrow. I'm talking about clusters and bad years. This hasn't been one of my best years health-wise, but I'll be hanging around, and anybody that wants to clarify anything, especially in that position sizing thing, then I'll be around to help. Thanks very much indeed, and Ray is coming up.
Wow, that was fantastic, huh? Dr. David Paul. You know, quick story, and we'll move this along quickly, but I remember as a young child driving from Detroit, Michigan, where I'm from, down to Florida with my parents going on vacation, and my dad had this one financial advisor. I can't quite remember his name, but he had him on loop. We'd listen to the tape over and over again, all the way down. And I remember it driving me bananas when I was a kid. But I remember his messages, and I can tell you this: my 7-year-old son knows Dr. David Paul well, and he will be sick of it, and someday he'll be standing on a stage saying, "My dad used to play this message of this guy over and over again. It used to drive me bananas." We'll remember his voice, remember his message, but might not remember his name, but Dr. David Paul. Such an incredible asset to all of us. So in typical VectorVest fashion, you know, in the evening session that we have, the special presentation, we always like to give you a glimpse into what we've been working on, you know, behind the scenes, what we've been doing. We are always listening to our subscribers, trying to understand exactly what we need to do better to innovate. We have Mr. Stan Heller as well. We're going to hear from him tomorrow. Just always innovating, understanding the system even better, picking up where Dr. D left off. He handed us a gift, making the system, the software, the experience better. And over the last 5 years, I've noticed a huge change amongst all of us. A lot of it's driven by our education team, by the culture of our company. And I believe we've all become a family. I think, I've heard many people talk about that. When we're talking about finances, when we're talking about the single thing that can cause so much stress on ourselves, on our families, it's the finances, and it's the can we retire? And we all band together. We all band together to understand. There's been a few individuals here that I've just talked to in the last 24 hours who have given us great ideas, great insight as to, hey, what about this? What if we did this? And, we take that seriously, and we're always innovating. We're going to get better, but we do it as a team. And, I think with the digital age, we can connect a lot better. And for me and, the entire team, Miss Linda Royer, our CEO, that's our entire objective, our goal. Yes, we run a business, and she runs it well. So did Dr. Toledo. But it's a family, and we're all going to get through these times that we're dealing with right now, and we're going to come out on the back end much stronger. One of the things that we've heard about over the years, just to kind of take us back a little bit in time, was how could I take one of you guys home with me? How can I have you trade for me or help me on a one-on-one basis? Well, obviously that's not possible. There's only one Jerry, there's only one David, there's only one Ron, there's only one Stan, one Glenn, one Steve Chappell, who unfortunately couldn't be here today, but a big round of applause for Steve. He put this whole thing together. He's been working on it for months. For Mr. Jim Penna, for all of our educators, Patrick, Mr. Todd Schaefer, Brian D'Amico, our entire team, marketing, the entire shebang, we're always working together to increase this experience. And we did it a few years ago with the group coachings. It's been very successful. You can sit there with our coaches week in, week out, understand what the market's been going through, especially since the pandemic. The markets change, and we have to change and adapt. We have to have these tools in our back pocket to react. Jim Penna does a great job with that, with the retirement portfolio. How can we offset any losses? How can we give ourselves the best advantage? But the coaching groups have allowed us to do that. And Jerry and I, have been listening to some of the feedback. And right now, the way it's set up is that you sign up for a group coaching package, and we invite you to a GoToWebinar session where you get access right there with the coaches. It's been brilliant. It was a great decision, and we've heard tremendous feedback from it. But Jerry started hearing probably a year ago almost today, right after the 2-day seminar we did in Cornelius, was, there's a little bit of a disconnect. How can we get a better connection? Can you guys hear me now? Okay, that's funny. Maybe Joey was messing with me a little bit, but I lost connection. So we started researching, we started brainstorming, we started saying, how can we make this experience better for everybody? And Brian D'Amico, who's not here with us today, but just an integral part of everything we do in this company, he started pointing us in a direction. And what if we changed the way we deliver the content? Well, not so much the way we deliver the content, but the experience for everybody. So we kind of put Jerry onto this project. He's been working now 11 and a half months on this project, and we've developed a new software that's going to be the delivery mechanism for a coaching group. It's actually going to be a coaching room. So when you subscribe to it and you go into the university, you'll come into a coaching room, and Jerry's going to come up here in a moment and talk about this, but think of it this way. It's going to be 24-hour community chat. Jerry will also talk about that. We'll do all of our presentations from here, so you don't have to call product support and say, hey, how do I get this link, or what is this link? It's just seamless, and you can come in, you guys can chat amongst each other. Obviously, we cannot be there 24/7. Could you imagine what our wives would do if we were sitting there 24/7? But we'll be there to monitor it, and it's just an easy way to reconnect. And I know there's a lot of individuals who don't want to use Facebook, and that's totally fine. But this is a totally standalone project that Jerry's been working on. So I wanted to share this with you. It's not ready yet, but it's going to be ready soon. We're shooting for the beginning of Q2. So please don't start calling product support. When is this going to be ready? It's something that we're still developing, but we're shooting for the beginning of Q2 of this year to start implementing this in all of our coaching groups. What that'll come with is a little bit of a change of a schedule. By having this room, we'll be able to go live whenever we see something happening. We can send alerts, stepping on your toes, sorry, Jerry. But we'll be able to do a lot of things, and we have this one community where we're right there. You can bring it up on your screen. You can be there watching, chatting with individuals, like-minded individuals on this standalone platform. So I think it's an incredible thing that Jerry's taken the lead on, done an amazing job. So Jerry, I'm going to have Jerry come up here and explain a little bit about the project he's been working on, where we're going with it. And then after that, a few of our coaches are going to come up and just give you a couple of minute glimpse into what they're doing in their coaching rooms and really what that means for all of you. So Jerry, nice work.
Joey, let me know when ready. What's up with these lights? Who doesn't like a blinding light right in your eyes, right?
You're the only one that can.
I know. Thank you, everybody. Yeah, really, really happy and excited. Happy because it gets us away from Facebook. So this is going to be a trading room that is open 24 hours a day. The idea behind that is because we have David Paul in the UK. We have Russell and Rob Markham in Australia. I don't know if you guys know that. We have managing directors all over the world. So this is going to be a trading room where anybody all over the world can go into and get information. I am happy, like I said, that we are going to get away from Facebook. I could probably stand up here for about 15 minutes and tell you all the reasons why I hate Facebook. Yes. But sorry, Melissa. But I'm really excited about this. Believe it or not, there's not many softwares out there that will accomplish what we wanted to accomplish. There's trading rooms. You Google trading room, you're going to get a bunch of companies that offer trading rooms. But this particular outfit actually offers a trading room software, trading room platform, standalone. They don't do anything with it. They offer the program, and we actually deliver the content within the trading room. So it's fantastic. Just a little bit of a tour of what we have here. You guys know in our swing trading coaching group, if you are a member, those of you at home are members, I'll send out trade alerts, email alerts on any trades that I make in the swing trading portfolio. That requires me to send an email to our marketing department. Hey Keith, do me a favor, send this email out. I just made a trade. Send it out to everybody in the swing trading coaching group. I then go to Facebook and post that trade in Facebook. That eliminates all this because this platform here, as you can see here, has a little alerts feature. This is not a download that is required. You don't have to download any software. It's a web page. It's completely web-based. There is also a mobile app, which is fantastic. You do have to, of course, download that, iPhone or Android. And any alerts that I place, so this is going to be used for all of our coaching groups. Successful Investor Coaching Group, which we're going to kind of introduce first, swing trading, retirement, URS. These will be different rooms. It's not one trading room for all groups. It'll be a trading room or a room for successful investor, a room for retirement, swing trading coaching, URS. So there'll be different rooms here. Anytime I or any of the coaches send out an alert, anytime we want to relay something to you, we will send it via the alerts feature. You don't have to have the program open. You do have to have, and I would suggest to keep it open because it is a download, it is web-based. You'll get push notifications on your cell phone on any alerts that we send out. The alert can be a trade that we place. The alert can be, hey, I'm going live in about 15 minutes. we want to let you know. I'm seeing this or that on the market. I want to let you guys know it could be early in the morning. I'll send out an alert, say, hey, I'm about to go live in a few minutes. Sign into the room, and you're right there. There is a chat feature here as well. So part of the benefits of Facebook is that it does create a community, right? I've had no issues, particularly with the swing trading coaching group, about any nefarious kind of comments or behavior there. So that's been fantastic. But here's a one-stop. I wouldn't call it shop because you're not buying anything here, but it's a one-stop kind of platform where everything VectorVest, everything coaching group will be located in this one trading room. You can keep in touch with everybody in the chat feature. Okay, so you can talk to each other. There's features here where you can talk directly to somebody. Okay, very similar to Facebook, but again, we're trying to keep it centralized in one platform instead of GoToMeeting is where we deliver the webinar, and then you want to talk to somebody, you go to Facebook. Everything is right here. What I love about this too, you notice there are some tabs up at the top. I'm not going to get too much into the features, but we as the coaches can create different tabs up at the top where when you open up the room, you see what we want you to see. So if we want you, when you open up the room, to watch the daily color guard report, we can post that here. We can deliver the daily color guard report here. Okay, we will eventually deliver maybe the jockey club here. It's all going to be in one centralized room, guys, so it's going to be fantastic. Let's see, what else? Documents, any supporting documents, slides, articles, videos can be posted in here. We can send out an alert, hey, we just posted, I found an article that I thought you guys would be interested in. I'll send you guys an alert, and you'll be able to kind of just log into the software and see it here. Okay, very happy and excited. Again, happy because we can move everything to one centralized location, and excited because I think it's going to bring a much better experience to all of our coaching groups as well. Okay, so that's coming again in a couple months, guys. Really excited about this. And what I'm going to do next, so we're going to start bringing up some guys and talk about the different coaching groups. Remember, this is going to be used to deliver initially all of our coaching groups. Eventually, as things kind of progress, I foresee any educational content that we deliver to be in this room, getting away from GoToMeeting, which is nice. Again, one centralized location and not having to bounce around. You don't need any links to view any of our educational content. All right, so really excited about this. I'm going to bring Glenn up first. He's going to talk a little bit about the Successful Investor Coaching Group. Okay?
Uh-huh.
I don't think you'll need that.
I only don't. All right. So I'm talking about this, with all the stuff that I do, I don't do any of this coaching. But I talked about this with Todd because it's Todd and Brian who do the Successful Investor. And the cool thing about this, I said, so Todd, what do I need to talk about? He said, it's a value add. See, anything you buy, you got to determine why you bought it. You got to have a reason why you bought it. So from the Successful Investor course or coaching group, the cool thing about it is the value add is you have people to ask questions about. And they do give a checklist in regards to successful investing, but you know what the out of the normal thing is? What happens when the market starts to act like this? It goes a little crazy. This is where having a coach to walk you through is the value add. That's the key point right here, and especially from Successful Investor. And for any person who's saying that they're not making money in the market, you need to take the Successful Investor course. The name says it all. You want to be a successful investor? Okay, then take the course. All right, take the, and the coaching is by far the best. And they will hold their sessions. They're slated out to like an hour. I've seen them do it 2.5 hours because they want to answer every single question. You want to be successful? Take this course. All right, that's all I got to say. Todd is awesome. We sit right next to each other. Brian is good as well. Talking about coaching, they will hold your hand. All right, that's it. Bye. Oh, who's the next person? All right, bye. Here's Jerry. Is it him up something? Oh, okay. Let's move over here.
Jim, hold on one sec. Here you go, Jim. We'll switch.
Keystone Cops.
That's all right. How's that? That better? All right. I forgot what I just said. I want to talk 90 seconds about the retirement coaching group. I was mentioning the second talk I did today, I talked about 4 topics. So it's hard for me to really relay exactly what we do in the coaching group, but we do work on building a growth portfolio. We have a dividend portfolio that we manage on a weekly basis. We are out there every week if the market is a bullish trade, but if we're in a bullish bias, we will go out and we will sell covered calls each week to generate income. And we're always looking at the times, the strategic times to be defensive in the market and in your portfolios. So what we do is take what I talked about today, and for about an hour and a half every Tuesday afternoon, we will go through portfolios and answer questions. As Glenn said, I stay as long as there's questions coming in. And we talk about the different scenarios. Do I want to buy puts? Do I want to buy put spreads? Is this the time to sell a covered call? Should I be buying protective puts at this point? Whatever it might be, we address that in a real-time fashion. And as I noted earlier, when we look at things like that March 29th confirmed up call, when we're live and when this comes in, boy, I can't wait till this comes in. By the way, Q2, don't call product support. This isn't coming out tomorrow. Okay, for those who might be calling product support, I was asked to remind the folks who might be listening at home, no need to call product support. We're looking at Q2, but when this comes out, it's going to be really great, because there are times where I'll wait till my Tuesday session to go through a trade or an idea or something that I'm looking at, just so I can illustrate it to the whole room. When this comes, we send you an alert, hop on with me in 10 minutes from now or whatever it might be, and we'll be able to do that. But the idea, as I said earlier, building and managing your retirement portfolios, put as much time and effort into it as we can to make sure that you're growing your portfolio, but more importantly, protecting it. So that's what we do in the retirement coaching group. Jerry's going to come up and talk about the swing trading group.
We good, Joey? Another reminder, folks at home, shooting for Q2. I know I'm happy that you guys are so excited. We got a bunch of phone calls and from product support. I want this now. It's not coming out now. We're shooting for Q2 for everybody at home. Really excited about it. I'm really happy that you guys are as well. So just a little bit of our swing trading coaching group. I have to tell you, the swing trading coaching group is probably one of the most enjoyable things that I've done with VectorVest. I love teaching our courses, but the swing trading coaching group has been fantastic. What we do, and the purpose of our swing trading coaching group, is we help you implement and manage your swing trading portfolio. We don't trade options. We don't worry about dividends. We layer in some fundamentals to make sure that we're trading high probability type stocks. And what we do is we take the techniques that we teach in Trade Like a Pro, Mastering Moving Averages, Precision Swing Trading, our upcoming course that we're going to talk about here in a little bit, Uncovering Trends. It's a technical analysis course. So those courses, for the most part, are theoretical. Right? We show you historical examples. Sure, we have our mastery sessions where we kind of get in there and look for some real-time setups. With the swing trading coaching group, the sole purpose is to help you manage and implement that portfolio. So it's not theoretical anymore. I'll take an RSI2 trade and I'll trade it. I'll take a 50-50 trade that we teach in Trade Like a Pro, or if I see a bull flag pattern breakout, we'll talk about it on Thursdays. The great thing about the new coaching room is that you're going to get a little bit more exposure to us, good or bad. You might be happy about that or not, but you're going to get a little bit more of us. So if I see something in the morning, I don't want to step on the Jockey Club's toes, but if I see something in the morning and say, look, I'm seeing this in the Derby, it's 8:30 or 8:15 in the morning, I'm up really early, I got 2 young boys, so I'm up at 5:30 in the morning, checking the futures, just taking a look at the market. I'll send an alert, hey, anybody awake? I'm going to be live in a few minutes, and we're going to start doing that a little bit more in the swing trading coaching group. But if you've taken a Trade Like a Pro course or a swing trading course, and you say, you know what, I've learned these techniques theoretically, I want to learn how to implement them in my own portfolio, I think the swing trading coaching group is the place for you guys to come to. We have different coaching groups. You're managing a retirement portfolio. Ron's going to talk about options. I said earlier how I think we all want to be well-rounded investors and learn how to manage different portfolios, and that's what our coaching groups are all about. All right, so I'm going to bring Ron up, and he's going to talk about the URS coaching group.
I just want to reiterate Q2. I figured I'd add that in there. All right, well, again, my name is Ron Wheeler. I run the URS portion of the coaching, and I am strictly an options trader. All I do, options trading, 100% of the way. Now, 95% of what I do are spread trades. Typically bull puts, bear calls, I do some iron condors, but I am primarily what I call an income option trader. That means I take all of the great analysis that you've seen from VectorVest, all the good timing, all the good fundamentals, and then I attach to it an options trade that gives me even more probability. Now, this year, well, I can't say this year, last year I did about a 40% return. If you took every single trade that I did in the coaching sessions. Now, I know that not everybody can take all the trades that we do, but one of the things that I enjoy about the URS coaching is I trade my money. If I show you a trade, I'm taking that trade. I let you know. For those of you that trade through a broker like Thinkorswim, you're going to learn not only how to place the options trade, you're going to learn how over the last 2.5 years, I have done so much studying and researching into placing stops on my option spreads. This morning, for example, I had some good and I had some bad. Obviously, the market rallied like 90 points today. I got stopped out of an S&P spread. But I also hit profits on another trade this morning. Now, I wasn't sitting there managing the trades. I happened to be using the mouse when, the presentation went on this morning. I got an email. Hey, I got stopped out of a trade. I got stopped out for a gain. So one of my main criteria, one of my main reasons for the URS is I spent a decade plus as a day trader. I love day trading, but as I got older, I just didn't want to do it anymore. It was a lot of work. So what I wanted to do is capture how much money I was making as a day trader, but I only wanted to work an hour or two a week. So what I've done with the URS and of course with the options paycheck is put all of that information into trading strategies where I can tell you, if you do it right, you're going to spend an hour a week trading. That's it. And through my 3 classes a week, I have Monday classes where I talk about the S&P. The S&P is one of my primary trade systems that I do. Now here's the good part. Well, I'm actually going to start thinking about doing this. I'm going to take Dr. David Paul's presentation on trading psychology. That's really important for people because you're going to have clusters where you have a bad run, but then you're going to have clusters where you have 6 or 7 winners in a row. That's the kind of trades that we do in the URS. I do those on S&P. I do those on stocks. I walk you through running the scans. I have custom scans that I have created based on some of those great fundamentals. I also, on Wednesday, one of the things I've added this year, or I should say last year, into the URS is last year was really the first year where I made a considerable amount of money just buying calls and puts. I would identify a trade based on swing trading philosophies. I'm actually going to talk about that tomorrow. using things like the NPI, using things like stochastic, using things like breaking support or breaking resistance, and just simply buying a call or buying a put. So I approach everything from an option standpoint. And I've been doing this now with VectorVest for 7 years. Over those 7 years, I've averaged about 3% per month in income. It's something that we've done very, very consistently. So I do these Mondays where I have 11 a.m. Eastern time for the S&P. At 2 p.m. I come back, we do stock credit spreads. On Wednesdays at 2 p.m. we do all the other different kinds of trades that we do. I might throw a calendar trade. And don't let these things scare you. Options are not scary. Options are simply a vessel for stock movement. You think a stock will go up? I'll show you how to put a low-risk options trade. And just to show you how low risk, I personally last year on $100,000 in capital, my biggest loss on one single trade was 1.4%. I personally don't risk a lot. My average loss is about 0.8%. So I will seek out, I will search for these trading opportunities with you, teaching you how to fish, and really making sure you understand it. Because options aren't scary. You just got to know what to look for. So I run the URS, and I would love, if you have any questions, let me know. I will kind of update you and tell you what we do a little bit more in detail. But I'd love to welcome you all in there. So that's the URS. Now, one more thing. We are done. We are finished for today, finally. So we will all be back tomorrow at 9 a.m. to start anew. We'll be down here about 8 o'clock if you have any order questions or if you have any questions about your account, we'll be out there sitting. But we will start our presentation sharp at 9 o'clock tomorrow. All right, have a good night, everybody. Glad to see everybody.